And you're watching All You Need to Know. Over the course of the next half an hour, we'll tell you everything that you need to know to start your day ahead of the curve. Let's start with the headlines. US markets fall for the fourth day as traders and investors give up on rate cuts, at least in the near term. Shift focus to earnings. Back home, Indian markets stumble for the third straight session, and Nifty now looks for support as it gets closer to the 22,000 mark, and trade is likely to be volatile today. Nestle adds sugar to Cerelac in India and other so-called developing countries. The revelation sparks a global controversy. Nestle India says it has cut added sugar over the past few years. More on that on the show. India overtakes China in population with 144 crore people compared to China's 142 crore. Elon Musk looks at investing $2 to $3 billion in India, according to Reuters. GQG among the marquee investors that bet on Vodafone Idea. It picks up stake and the FPO opens today for the public. The Adani Group increases stake in Ambuja Cements to 70.3% and infuses an additional 8,300 crore rupees. Now, let's get you a quick global check. The US stocks continued to slide overnight and have now registered their largest decline or longest decline since January. The tech-heavy Nasdaq dropped over 1%, and the move in recent days has been on account of a reset of expectations with respect to expected rate cuts by the Fed. With multiple rate cuts seemingly unlikely, bond yields have moved up across the board, and that has put pressure on risk assets. There's also been a rise in the value of the dollar, which incidentally, the dollar index is very close to the 106 mark, as you can see on the screen right now. The early rises in the Asia-Pacific region, I'm talking about equities here, they opened mixed, but then you've got largely weaker trade in the major markets, with the Nikkei 225 losing about 0.4%, and not too much happening in the onshore markets in China, at least at the start. We'll have to see how that pans out over the course of the day. Now, we have a major story that we're tracking, in fact, with regard to Nestle. And this is something that will likely have a bearing on the stock price as well. We're talking about the complementary food that is provided to children. And this is, in fact, Cerelac, which you probably are aware of. The fact is that there was a Swiss organization that did an expose of Nestle and found that it adds sugar to these products, particularly in the so-called developing markets, including in India. And it is quite a stark increase, it is a stark amount of sugar that is currently added in these products. In fact, we've got a reporter that has filed a story. It is on the website NDTVProfit.com, and we'll be talking about the implications of this through the day. But to put things very simply, we're talking about 3 grams of sugar that are currently added per serving in Cerelac. And if you're wondering what a serving means, it's 15 to 20 grams on an average and a maximum of 50 grams in a serving of Cerelac, and 3 grams. And this is something that has reduced over the last 5 years, according to a company spokesperson who spoke to my colleague Sesha Sen. And it was said that it was reduced by 30% over the course of the last 5 years, and they are reviewing or constantly review the process of reducing this further. But then it's in all probability going to raise eyebrows at the very least, and must be taken very, very seriously, particularly because the WHO as a policy has guidelines against the addition of sugar in such products. And just to point out, I was looking at the FAQs on the UK website of the Nestle company, and in fact they say very clearly that they have no added sugar in Cerelac. We'll talk about that in more detail over the course of the day. For now, let's turn to the F&O space and talk about the latest cues. Of course, you saw cuts on Wednesday and then a bit of a gap, and it's quite possible that traders took the holiday into account. But could there be a more volatility, considering that it is in fact the weekly expiry today? Let's turn to Agam to get those answers. Agam, we've seen 3 days of cuts for the benchmark. Where are we seeing support?
Well, we're seeing support around 22,000 now, Alex. A lot of things have changed over the course of the past 3 to 4 sessions. What we started seeing in terms of last Friday was all the longs being unwound, and eventually through the course of Monday and Tuesday, we started seeing fresh shorts building into the system. And of course, as far as Tuesday specifically is concerned, we started seeing a lot of your older longs also being unwound at the moment. The markets are looking at perhaps a little bit of a near-term decline trend coming through. For the Nifty, of course, has lost out on 22,200 as well. And the Bank Nifty also now closing below 47,500 because do remember at one point in time we were within a kissing distance of 49,000, and we have seen a retracement of sorts from there. In terms of today's day of trade, when it comes to the options market, where we did see we did see a lot of writing around the 22,000 mark, and that was 2,200, pardon me, and that was perhaps on expected lines. But in terms of their range that we can expect the Nifty to move within based on maximum OI, well, that's 22,000 on the higher end based on max OI and calls, and of course 22,000 puts. That's where you have substantial amount of accumulation in OI. But remember that we are likely to see 22,000 being tested in today's day of trade. So I reckon that volatility certainly will be a part of the game today. Now, in terms of stocks, keeping an eye on ICICI Lombard, come up with steady earnings, of course, post-market. We've already started seeing longs there, along with HDFC AMC, shorts for Gujarat Gas and Infosys. Let's talk about stocks which saw unwinding, short covering for Exide, Coromandel and ONGC, longs unwinding for Bharti Airtel and TCS. And once again, Alex, today focus remains on 3 big earnings from the Nifty 50.
All right. In fact, we will talk about those earnings in just a bit, but let's talk about the global scenario for just a little longer. We've got Anurag Singh, Managing Partner at Ansid Capital, joining in. Anurag, thanks so much for taking the time this morning. What can you tell us about what you're focused on? Because seemingly you've seen bond yields move up across the board. You've seen strength in the dollar and weakness in risk assets. That tells me that there's an expectation that we're not going to see rapid fire rate cuts and the market is adjusting. What do you see?
Correct. So, Alex, morning, first of all. Alex, look, I think the runaway rate cuts expectation was anyways misplaced, right? I don't know how it came about, but one set of market believed that we can have probably 6 rate cuts this year. That was, I think, overly bullish sentiment. But I think we should still be on course to get about 2 rate cuts this year. And I think that should be okay. And Federal Reserve projected about 3 rate cuts. If we end up getting 2, I think that's not a bad deal. I understand aside of this, I think the market was getting a bit tired because the Magnificent 7 trade, which is those predominantly, I think the about 23% gain in indices in 2023 was largely on the basis of those 7 magnificent stocks. I think that had got tired, with Apple, Tesla, and Google dropping out. It had become difficult to sustain the rally in the short term. So we should just see this as a little bit of a kind of a hold for the moment, a pause for the moment, or a small 5% correction. But fundamentally, I don't think there is anything wrong with the long-term bull market thesis for the US stocks, at least.
Okay, then the more important perspective from our side here in India, we're looking at equity markets that are the Nifty 50 is still continuing to trade above 22,000, but there's been a little pressure in the recent past. How do you see India in the context of the global scenario then, and what are the opportunities for a foreign investor?
Correct. So, Alex, and this is where there is a bit of a divergence here because, and you see, we spoke last time also. My view was, and I think a lot of investors, foreign investors, believe this, that Indian markets have a bright future, but they're overly priced right now, and probably the timing is not right to enter, at least at these prices. So, foreign investors like me would be waiting for corrections. At the same time, I think there are a couple of headwinds which are working against Indian markets currently. One is if the rates in US are not going to be dropping with as much speed, I think then that's always a negative for emerging markets. It's not about India, it's about all emerging markets because money will be parked in the dollar US 10-year yield. So that's one case. Second is this geopolitics. oil goes up and whenever there is a threat on oils and metals and everything, that also is kind of little negative for emerging markets. So I think these two things coupled with the fact that the markets are anyways, very well, very richly priced, I think makes a case that, the foreign investors would like to wait at least for a while, until this, we have a clear trajectory seen in US. So I think we should not compare the US markets. I don't see them as expensive markets, but Indian markets are very richly priced. Maybe rightly so, we can debate, but I think they are a little ahead currently. Alex.
Fair point. Thanks so much for joining us this morning, Anurag. Always a pleasure having you on the show. Let's talk about the Nifty earnings that we briefly mentioned a short while back. And in fact, let's start with a focus on HDFC Life. What are the expectations with regard to the fourth quarter performance? And Agam is back to tell you about some of that. Agam, what are the key numbers to focus on?
Right, Alex, on a year-on-year basis, it is likely to be a subdued quarter. In fact, we are expecting a decline of as much as 9% when it comes to the annual premium equivalent, expected to come in at somewhere around 4,700 crores. In terms of value of new business premium, that is expected to see a decline of a 14% year-on-year. And consequently, your VNB margins, or that value of new business margins with respect to your annual premium, that could come in at around 27.7% against 29.3%. So we will see a decline there as well. What are we watching out for? Well, 10% year-on-year growth, excluding the 1,000 crore upfront business, which the company saw in March 2023. And we're also keeping an eye on the volumes growth for the entire year. Also, expectations from what we can look forward to as we move into the new financial year. And of course, several other risk assessment practices that the company has undertaken, and what kind of tech initiatives can in fact perhaps be a catalyst to the business going forward. But all in all, at least as far as the fourth quarter is concerned, we're expecting a weak quarter.
Quarter from HDFC Life. Let's talk about Bajaj Auto next, in fact, and we've got Puneet joining in to tell you about the key levels, or not the key levels, but the key numbers to watch out for. What was so remind us first, Puneet, about the volume picture and how that leads to the expectations on revenue as well as margins.
Yeah, sure, Alex. So we're expecting a really good quarter from Bajaj Auto. Just on the sales, as you mentioned, we had a 25% growth in the domestic market in the month of March. And for the whole year, the domestic market has done really well. But the exports, which was a very strong point for Bajaj, was down 10% for the whole financial year of FY24. Now, for just coming on the Q4 numbers, the company is expecting to report a 29% growth in its earnings, coming in at roughly 11,684 on the revenue front, while EBITDA and PAT margins are likely to sustain and grow roughly 28 to 30% as per Bloomberg estimates. Now, the company has been really strong on its sales, as you mentioned, and it has recovered as well on the EV as well as on the other export as well as domestic market fronts. So the key points to watch out for will be the company's commentary on the domestic market. They had mentioned that they are launching a new CNG bike, which will be the world's first CNG run motorcycle in the month of June, priced at roughly 80,000 rupees only, which will be a key addition to its 100 to 110cc portfolio. Now, do note that the company currently has a market share of just 8% in this, with Hero having a lion's share. So this will be a key trigger and key thing to watch out for in the commentary as well. Secondly, the EV sales growth was really strong at roughly 270% compared to last year. So more commentary as well as a little bit of picture on the margin as well as new launches will be key here. And finally, the commentary on demand recovery in the international markets. Last year we had a 10% fall. We will see more commentary on how the markets have been recovering.
All right, thanks so much, Puneet, for getting us those details. Infy is the third one that we're talking about, and from the perspective of the IT pack, perhaps the most important. And we're talking about this in the context of what we know about TCS. Rucha is joining in to give you the key numbers to focus on here. Rucha, does it hold true the same aspects that we spoke about for TCS?
Yeah, so Infosys is set to report its result post-market today. Revenue is expected to have a negative growth, while EBIT and PAT are largely expected to remain flat. The guidance is expected at 3 to 5% for the revenue in constant currency terms, while EBIT margin guidance is expected at 20 to 22%. While EBIT will be impacted by 1 month of wage hike, there were no large deal wins announced by the company in the fourth quarter. There are 3 key things to watch. Number 1, the guidance for revenue as well as EBIT margin? Number 2, what is the deal wins pipeline, and as said for TCS, are they getting converted into revenue or not? Number 3, commentary on the demand environment, and are the clients incorporating more of discretionary spends, or are they still skeptical about the same?
Fantastic. All right. Thanks so much, Rucha, for getting us that update. We will, of course, touch base with all of these researchers over the course of the day when the numbers do come through. For now, we have to slip into a very quick break, and on the other side, we'll continue to talk about stocks that will be in the limelight today. So do stay tuned. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch.
Welcome back. On to stocks that will likely be in focus today, and let's start with Vodafone Idea, because the company has mopped up a significant amount of money from anchor investors ahead of the FPO, which opens to the public today. To talk about the key names that have invested at this stage, we've got Smriti joining in. Smriti, what can you tell us about the amount that was raised and the key names?
Good morning, Alex. So Vodafone Idea has mopped up about 5,400 crore from anchors itself. Now remember, this is the largest FPO. It's an 18,000 crore FPO, and the number of shares that the anchors have been allocated is 490 crores at a price of 11 rupees. Now to remind you, the current market price is 12.9 rupees, and the number of anchors who have invested into this is the number is 74. Now there are very key investors that have put in money. Names like GQG, Fidelity, all show up in these anchor books. Now GQG, through various schemes, has invested 1,348 crore. That's about 25% of the anchor book itself. There are other investors that include Fidelity, Red Wheel Funds. Fidelity Funds invested 74 crore, Red Wheel 281 crore. In fact, there are domestic mutual funds that also got an allocation of about 16.2% of the total shares at a price of 11 rupees. Domestic mutual funds include HDFC, Motilal, Quant, so marquee names here. So I think this is going to drive the investor confidence, and because this is through anchor, these people will have to follow a lock-in period of 3 months. So the FPO that opens today for the retail buyers seems to be this anchor book seems to be a positive driver for that.
Thanks so much for getting us those details. Let's turn to a few other stocks, and we've got Varsha with a list, the first list to talk about. Varsha, what are you picking up? Morning.
So starting with Biocon, company has signed an exclusive licensing and supply agreement with Biome SA. Now this agreement is for commercialization of a product which is used to improve, which is used in type 2 diabetes. Now Biocon will develop, manufacture and supply this drug product, and Biome will obtain regulatory approval and do commercialization in Brazil. The estimated sales for the same is almost $580 million. Next we have Jubilant Pharmova, wherein US FDA has inspected company's unit from January 25 to Feb 22 of its wholly owned subsidiary and determines voluntary action indicated for its solid dosage manufacturing facility at Rookery. Now the facility is considered to be acceptable state of compliance with regard to current good manufacturing practices. Then we have Shilpa Meditech Shilpa Medicare, wherein Telangana plant gets GMP certification from Austrian Agency for Health and Food Safety. Plant was inspected from Jan 22 to 26, and for this facility there was previous EU GMP inspection which was done in January 2020. And lastly, we have IIFL Finance, wherein board approves right issue of rupees 1,272 crore. Offer prices at 300 per share, which is at a discount of 29% to last closing price. Now, right issue will open on April 30 and will close on May 14th, and shareholder will get one right share for every 9 shares they hold.
Thanks so much for getting us those details, Varsha. Let's continue to look at stocks, and the next list is, Kanika is joining in with the next list. Kanika, what are you picking up?
Good morning. So the first stock on my list is Suntech Realty, whose pre-sales grew by 26% year-on-year and 49% quarter-on-quarter. Now its collections stood at rupees 296 crore, which was down 10% year-on-year, and the company has 7 large projects in the Mumbai metropolitan region with a GDV of around rupees 30,000 crore. Now the next stock on my radar is Brigade Enterprises, who recorded highest ever pre-sales of around rupees 6,000 crore year-on-year in FY24 and around rupees 2,200 crore in Q4. Now its collections were up 9% year-on-year, and in the hospitality vertical its ARR stood at rupees 6,480, which was up 8% in FY24. Now the next stock on my list is Angel One, whose revenue was up 64% year-on-year and its total client base was up 14% quarter-on-quarter at 2.2 crore, and it recorded highest ever clients added in a quarter at 29 lakhs, which was up 17% quarter-on-quarter. Now the next stock on my list is Tata Communications, whose revenue was up 1% but its net profit was up 613%. Now this was on the account of lower exceptional costs as compared to Q3 and lower tax expenses.
Right. All right. Thanks so much, Kanika, for getting us those details. And Ambuja Cements is the other stock that we're focusing in on. The latest update is that the promoter group, Adani Group, has increased its stake in the company to 70% or over 70%. Mika is joining in to give us the details of that. Mika, what can you tell us?
Yes, so the Adani Group has increased their stake to 70.3% from 63.2% previously, and this is the promoter stake. Now they've infused an additional of 8,339 crores into the company, bringing the total infusion of around 20,000 crores into the company, which is under the warrants program. So all the warrants have been exercised. Now investment will help reach the 140 million tons per annum capacity that Ambuja Cement aims to complete by 2028, and the fresh investment follows a 5,000 crore investment on October 18th of 2022 and a 6,661 crore investment on March 28, 2024. Now the total public shareholding now stands at 29.71%, and the value of this total float is around 45,500 crores.
Okay, got it. Thanks so much, Mika, for getting us those details. Now, there's clearly lots to talk about over the course of the day, and we're focusing in on 3 nifty earnings, and among them, Infosys. Remember, there's been a tad bit of weakness over the last 3 days, 3 trading sessions, I must point out, and it's been a bit of a weak handover for the US markets as well. Let's see how we start in trade today. Just a reminder, the few Asian markets that were open at the start today, there was a bit of a mixed start, but it's mostly a negative bias that is seen across the board. Currently, you have the onshore markets in China, which are not doing too much. The Nikkei has in fact turned positive over the course of the last half an hour, so that's something to bear in mind, and the Hang Seng is trading positive by about 0.6%. That brings us to the end of this particular edition of the All You Need to Know, but do stay tuned, lots more coming up over the course of the day. This is NDTV Profit. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome to India Market Open. I guess as global concerns ebb just a little bit, we're getting into the thick of the earnings season. So lots of local action that we'll be tracking this morning, crude as well as the stocks. A little bit of a positive Q.
Yeah, good to have you back.
Yes. And I'm all in green, so hopefully there is a recovery after 3 days.
Just before we get to all of the global cues, guys, the biggest story this weekend that really caught my eye is the floods in Dubai. And Oman. And Oman, but Dubai insane because they caused it for themselves, right? It was a cloud seeding experiment.
Actually, it wasn't a cloud seeding experiment that went wrong because they've seen the storms that happened because of cloud seeding. And trust me, I witnessed this mid-air. The turbulence on that flight, not good.
So it wasn't cloud seeding?
It wasn't cloud seeding because apparently people claim that they've seen what cloud seeding storms look like, and this was anything but that.
Well, the jury's out on that, but it tells you about climate change and a whole host of other issues.
Yeah. But so clearly sorry, I mean, just in case you want to finish that point, but I thought the last 2 days, because we were on a holiday, I thought Tuesday evening everybody would be on tenterhooks that in such a volatile world, do you really want to carry home positions or do anything at all? And we had a great market breadth and everybody's waiting for, would there be some retaliatory action, etc. Thankfully,
yes,
nothing's happened in the last 48 hours. Maybe that's why crude is down, etc. But we had Jerome Powell come in and kind of spoil the party.
As always.
Yeah, well, we'll have details of Jerome Powell. Just to update, about an hour ago, there has been a Hezbollah attack on Israel, forces 14 people have died.
Yeah.
Israel will retaliate. We don't know when and how, to what extent. But the thing is that even though world politics and war is on, crude supplies are on as well. And that's why, as Neeraj said, crude is down. Just an overview of what's been happening globally, and a bit of a mixed egg there, because you've had US markets down, at least the S&P and the Nasdaq down 4 sessions in a row, Dow down 7 sessions in a row, and that continued in Wednesday's close as well. Dow futures slightly ticking up in the green as we speak, and it's the tech stocks that were leading that kind of a fall, at least overnight. NVIDIA at the top of that list, down about 4%, and leading those losses. Powell's speak has definitely been one factor that will weigh, and I want to pull out the specific quote from Powell that's important, because that's effectively resulted in what we're seeing as the chatter in the markets right now. That rate cut projection has been moved forward. End of this year, maybe even in calendar year 25. And that's because he says recent data is clearly not given us a great confidence, and instead indicates that it's likely to take longer than expected to achieve that confidence. So that's a very clear statement from Jerome Powell coming there. Not too much of an impact on the 10-year though, I must say. Of course, ticking higher, 4.58% on the 10-year, but not great panic. Crude, likewise, again, not great panic. In fact, Brent cooled off about 3% and is at $87. The idea or the sense is, like we were saying, that Israel will retaliate, but perhaps not to that extent. And I'm just going back to what Vandana Hari told us, that in a way this has led to the end of that retaliation, because Iran hit back, nothing much happened, nothing at all happened to Israel, right? No fatalities, etc. So is that enough for both sides to tell their people that we've done what we need to? We'll wait and see. Just quickly pull up Asia and see what's happening there. Mixed kind of an open on Asia, and mildly positive. So maybe some of those fears are receding. Just pull up fund flows, since we had a day off in the middle, and how those fund flows looked on Tuesday before I hand it over to Neeraj for the setup for the day. And FIs are continuing to sell, and that's consistently been the case. Another 4,000 crores odd in the last trading session. But all in all, I think that global cues overhang seems to have lifted a bit.
Most certainly. I mean, yields cooling off, crude cooling off, dollar index retreating, all of these three things, if you don't construe this as a positive, I don't know what you could per se. So that is the one thing to keep in mind. Now for our markets as well, in some sense, viewers, if you look at what we did on Tuesday, ahead of a holiday, like we were saying, people ideally would have been on tenterhooks, but PCR slipped to 0.76. Now, there is some sign that there is an indication that maybe things could turn around a bit, positive market breadth as well. So both of these factors, okay, we don't have the PCR at 0.76 and the positive breadth, both hint at maybe bottoming out possibilities. Now, do we see that today, or do we see that tomorrow, or the near term? Who knows? But certainly a small positive. In fact, the weekly options data seems to suggest that the bottom or the support is at 22,000, 21,950 or thereabouts. The highest put concentration is at that level. Remember, day before yesterday, it was 22,200. We came off from there 50 points lower. Some of those positions might still be existing, but if we retreat lower, then 22,000 is the key. But I suspect that in and around these numbers as well, if we indeed show some bottoming out, that could be a positive. And while telecom has done well, selectively some of the defense names came to the fore. The weakness in IT just seems to suggest that the sector remains vulnerable to bad news as well as earnings expectations. I see no other reason for Infi to have come off the way it did, except for the fact that there would be expectations that Infi would probably not come out trumps really and do well, because Infi was the top loser in Tuesday's session on the index and in the IT space, and that tells you a story or two about how the market is approaching some of the numbers where the expectations might be weak. But clearly that's one big overhang. Thankfully, IT is no longer 17-18% of the weightage, and therefore doesn't have as magnified an impact on the index as it usually used to do, but clearly a sector that is down and not quite recovering in the very near term for sure.
Neeraj, Niraj, perspective, because I've been away as well for the last few days. We've had 3 weekdays. We've had a flat sort of indication in the GIFT Nifty this morning. A good reason that you will see a positive start. Does it seem more technically like a dead cat bounce, which means that if you're a trader, you may not want to actually open any fresh long positions until the 22,500 mark is taken out? And the wicks as well, I think that's the other sort of lead indicator of what the trend for the next few days at least will be, right?
Yeah, and in some sense, exactly what people are saying, that don't buy the bounce, but buy when the trend starts forming.
Which is not happening just yet.
Which is not happening just as yet. Do we see that trend forming at some point of time with all that's happening around the world? Difficult to call it really.
Right?
And which is why I think smart money is saying we are going bottom up. I mean, and we'll buy stuff. I mean, for example, a lot of calls on Vodafone, right? We'll talk about it in detail, of course. But a lot of calls on bottom-up stock picking. But on the market trend,
nothing's changing. And the currency as well has been so volatile. We've seen weakness. Of course, the good news is that the fall of the rupee comes in at a time when India is sitting on record levels of foreign exchange. Remember, there was intervention as well by the regulator where he came in and supported the currency. That invisible hand happened on Tuesday. But lots of moving parts. Tough to call whether it's risk on and risk off trade, because you've got risk assets doing okay. You've got risk off assets like gold as well that are holding themselves together. So lots of moving parts. Today you will see a recovery in terms of trade. Implied Nifty is indicating to a very flat start, but Asian markets aren't doing too badly, and the fact remains, after 3 days of weakness, a little bit of a dead cat bounce at least is what we are expecting in early hours of trade. Now, whether this gets sold into or bought into is anybody's guess, but most analysts believe 22,500. You want to watch out for that level. If that gets taken on, maybe we are seeing a positive trend on the index at least.
Perhaps for today, and for the next few days, as Neeraj is saying, you might see range bound trade. But my sense is that this is, a lot of the market is going to see this as a great opportunity to come in. The geopolitical risks and factors, when it gives you a couple of those downtrend days, is an opportunity in a market like ours, where you get those chances rarely. So we'll see which way it plays out. I'm feeling a bit positive about what you're going to see.
Somebody is.
What you're going to see in the next few days. But
and talking about globe, I think one interesting headline that caught my attention, talking about Iran and Israel, and they said minimum impact, maximum spectacle is what Israel was going after. So it was a lot of money down the drain, I'd imagine, but for whatever it's worth, America's got Iran's back this time, which is a little bit of a change on the geopolitical setup, and hence the retaliation from Israel may be a little more measured. It's not often that you see the US saying that they were actually warned that Iran would be attacking Israel over a 48-hour period. So no surprises, the geopolitical circus in some ways continues. Crude, like Tamanna said, has eased off, largely on back of an increase in inventories. But coming back to global action, 3 Nifty 50 companies report earnings. So you've got Infosys, HDFC Life, and Bajaj Auto. Great set of numbers are expected from Bajaj Auto. We'll delve into that a little bit more and talk about Infi as well. We talked about Infi was the top loser on Tuesday ahead of earnings. So you want to watch out for these 3 companies as they report today. But in terms of other stocks, we've got a whole bunch of stocks, earnings and not so earnings related, that will be in focus this morning. Topping my list is Vodafone Idea. We'll analyze this in a lot more detail, whether that's an FPO you want to subscribe to. A lot of brokerages, in fact, FL Securities has also upgraded the account on back of these fundraising plans. Actually believe that this FPO may be something you want to consider. Others believe, of course, the fundraising will not change the fundamentals of the company. But let's take you through what happened. The FPO managed to, which opens, of course, to public investors today, raised 5,400 crores through anchor investors. Now, what is interesting is that the number of investors that came in was 74, but it is GQ investors that's picked up a pretty large chunk in Vodafone Idea to the tune of about 1,348 crores. They've allocated nearly 25% of the total anchor raise to GQG partners. So that clearly giving a vote of confidence. Remember, this was lapped up when the anchor investor book opened up. You had Fidelity, Red Wheel, and domestic mutual funds that actually aggressively picked up Vodafone Idea. The FPO, like I said, opens today to the retail participation. The tune of this is about 18,000 odd crores, out of which 45,000 crores out of the 45,000 crores fundraising plan. Remember, it comes in at a little bit of a discount. The stock closed at 12.95 on Tuesday. The FPO is priced at 11 rupees. In the grey market, this comes in at a premium of 1.5 rupees, so pretty much at market close from Tuesday. So it's at a discount, but the grey market premium pretty much indicating that the FPO should be lapped up at about 11 odd rupees. We will analyze this in a little more detail, take you through whether or not this is an opportunity that you should be considering.
Can I just make one very small point, everything else notwithstanding. You got very smart investors putting in money not in a QIB, which is susceptible to selling at whatever point of time, but the anchor book and locking themselves in.
You're seeing the GQG name and,
No, Fidelity.
Thinking, and
Fidelity is as conservative as they come.
A lot of domestic mutual funds have also come in and bought. So
yes. So, I mean, there's smart money coming in and locking it and believing the story.
Which is what's interesting. On the very first day, you were fully subscribed. You had your HDFCs, you had your Motilal, you had Red Wheel as well. While they might not be very talked about very often, they are also pretty solid fund house to come in.
Look at it this way. Fundamentally, it's a business that the government is not going to allow to fail.
They own 32% in Vodafone Idea.
Exactly. So then you have the biggest sort of promoter with its, which has its back. And if they wanted to let it just go down the drain, they would have long back. So perhaps that's what the bet is on.
Well, like I said, you've got a few funds as well that say, or rather brokerages as well, that seem pretty, certain that this is a fundraise plan that will work out. Remember, Vodafone Idea's dues to the government is about 29,000 crores in the second half of FY26 and 43,000 crores FY27 onwards after the ongoing moratorium on government debt repayments ends. So it's a difficult one, but you have all the big brokerages coming out and sharing their perspective on what this fundraise will mean. Well, a quick one in terms of earnings. Now talking about the other telecom company, Tata Communication, the reported numbers. Numbers on the face of it don't look great. I'll quickly break them down for you. Revenue is up marginally or rather flat. Margins are down. Profitability is up substantially, but that's because of non-core business. So that's what you want to keep in mind. They've also done a dividend, which is rare for Tata Communication. Of course, it's 16.5 odd rupees, not very significant given the price of the counter, but nevertheless, in terms of communicating this conversation, they have given out the dividend of 16.5 rupees. We will talk to the management on the show in the next after market opens to get some understanding of what lies ahead for Tatacom. Apart from that, a quick mention on Brigade. These guys seem to be making record after record, history after history. Once again, their pre-sales have come in at record numbers for the quarter at 6,013 crores. More than likely the stock will see a gap up along with Suntec Realty this morning, guys.
Yeah, the South-based real estate players are really, now redefining sort of the move, Prestige and Brigade. All right, quickly through the list of stocks that are on my radar. ICICI Lombard for one. Good set of numbers. Their Q4 FY24 consolidated numbers year on year show a gross direct premium income up 22%. That's strong. Profit after tax up 19%, tad lower than expectations, but not too bad. Combined ratios at 102% have dipped as expected, positive for the stock. Jefferies and HSBC both have notes out this morning. Both are positive. Jefferies has given a buy rating of with a target price of 1950. That's about 18-20% premium from the current market price. HSBC has a target price of 1990. So you're likely to see some up moves on an ICICI Lombard today. Ambuja Cements is the other one that I thought was interesting. The Adani Group has increased its stake to 70% from 63%. Of course, standard disclosures there that the channel you're watching is owned by the Adani Media Group. The infusion of additional 8,000 crores into the company, 8,339 crores to be specific, and about 20,000 crores under warrants. So fair bit of fresh investments could boost that stock a bit anyway. And Ambuja and the entire cement pack is going to be in focus, ahead of the elections as it becomes clearer what the new government, the likely new government, as per poll reports so far, wants to do. And if you have a policy continuity, there's going to be a huge amount of infra spend. So anyway, cement is a space to watch. Patanjali Foods I'm going to talk about because I found the story astonishing, to be honest. So on the close on Tuesday, and I just want to pull up what happened to Patanjali Foods, that 5% uptake you're seeing is because of an exchange filing where the company said that GQG's investment in it had been pushed up to 9%. And that's why you saw that big spike in that intraday chart. Now, after markets closed at around 4 o'clock, there was another filing saying that that was a typo. And this investment had not increased. The stake is actually just at 1%. So you might see a pullback there. But it's an expensive, you will see a pullback there, but that's an expensive typo. It's an expensive typo, and I think some answers will be expected by investors. I mean, that's quite a slip. Those are few. And of course, a lot more, but Neeraj should start.
No, just so very quickly, Adani Enterprises also could be in focus aside of Ambuja, because aside of the fact that the family is putting money in Ambuja, Adani Enterprises is going to invest about $5 billion in the next 5 years in the data center business. So again, standard disclaimer, of course, the Adani Group owns NDTV, watching NDTV Profit, but watch out for Adani Ent in the session today. That's a big play in the data center side and commitment coming in through Adani Enterprises. Remember, that's the incubator arm of sorts of all businesses that the group takes. Watch out for Ent today. Watch out for TARC, which is the split from Anantraj. So they call it the Anantraj company, TARC. But look at the numbers. We're talking about Brigade having a 50% uptick YOY in pre-sales. Look at TARC. Highest ever FY24 pre-sales, which is up 200% for them. But Q4 was, well, a reckoner of sorts, 600% uptick. Of course, the base matters. But still, for that market cap, to have this kind of a quarter four is exceptional. I mean, their annual collection was 415 crores. Won't be surprised if this stock has a bit of an uptick in addition to Brigade Enterprises in the session today. But if you will hear Brigade on NDTV Profit at 9:45, so I want to stay tuned for that as well. And from amongst multiple brokerage notes, there is Goldman, which has come out on Power Utilities. There is CLSA on HDFC Bank, etc. I thought the one that stood out for me was HDFC Life. Citi, note on HDFC Life. Ahead of numbers, they've upgraded the stock to a buy with a target price of 720. They say it's underperformed ICICI Prudential, Max Life, SBI Life, Nifty by so much over 3 months, 6 months, 1 year, and now things might get resurrected. My point is just ahead of the numbers for the brokerage house to upgrade HDFC Life is an interesting timing. Could be interesting to see what HDFC Life does in this session ahead of numbers.
And we're going to be hearing from them ahead in the day. So that should be great as well. Just a couple of more very quickly. Biocon, I found this interesting. They've signed a pact for generic Ozempic commercialization in Brazil. That's a race which every pharma company around the world wants to be in. Paytm got its NPCI nod to migrate users to new bank. Could be sentimentally positive, though we knew it was coming. Power Grid has approved raising up to 12,000 crore rupees via bonds. But let's get to the big global picture. And we have today with us a very special guest, Dr. Edward Yardeni, President at Yardeni Research, joins us on the show. Very good morning to you from where we're sitting, Dr. Yardeni, and great to have you on NDTV Profit. Let's begin with your take of what's happening right now. So quite a few things have happened, and I think one sort of talking point or tent pole we can start with is the IMF now turning slightly positive on the global economic growth. They've upgraded that figure by just 0.1%, but they're saying that the global economy looks like it's set for a soft landing. Do you think there's a perceptible change in outlook on how things are going in that direction?
I think where one can be particularly optimistic is on the U.S. economy. That's where we've had the upside surprises. That's where we've seen a tremendous amount of resilience of the economy in the face of very tight monetary policy. The European Central Bank has also tightened monetary policy, but Europe has been really more in a, I don't know if it's a soft landing. It's almost a growth recession. It just hasn't been growing. China, I think, has got problems. I don't believe the data that's come out on China. They said that their growth rate was 5.3% in the first quarter. It just doesn't add up to me. And even some of their other data on industrial production and retail sales looks like weaker growth. I think China's suffering from the bursting of a major speculative bubble. So when you add up Europe, China, and the U.S., and let's throw in India, of course, because India is doing very well. I think the IMF is right. I think we're looking at soft landing for the global economy. It's looking a little bit better, partly because the ECB is likely to lower interest rates, which will help to revive some growth in Europe. And the big problem is the Chinese are stimulating their economy in the old-fashioned way by stimulating manufacturing and exports, and that's creating deflationary pressures in the world. But that's down the road a problem. For now, it could be another reason why the global economy might be doing a little bit better.
Just let's talk about China specifically for a second, Dr. Yardeni. How concerned are you with what's happening in China and the cues coming out of there? When you say that they're trying to fix things the old-fashioned way also takes some time. And as of now, if you look at all the high-frequency indicators, your consumption indicators, China is looking worrying, isn't it?
I think China is in a recession. I think they have a depression in their property sector. The property sector, when it was booming, accounted for 20 to 25% of their economic growth, and that sector has a speculative bubble that's burst, and it's a very, very significant negative wealth effect on consumer spending. I mean, think about it, that a lot of Chinese individuals, households, put their savings into apartments that have been empty, but they felt that these prices were going to go up. Well, they're actually going down. And on top of that, the stock market's been awful for the past couple of years. So there's a huge negative wealth effect on consumers. And that's why I think that the Chinese government is resorting to stimulating exports by stimulating more manufacturing, especially in things like electric vehicles and batteries and higher technologies. And that's just going to mean that they're going to be doing a lot of dumping in the global economy, creating deflationary pressures and hurting the manufacturing sectors of lots of other countries. So, we've seen the Secretary of the Treasury, U.S. Treasury, Janet Yellen, go over there and basically make the case for being more responsible global citizens and not subsidizing a tremendous amount of capacity in manufacturing.
Right. Dr. Yardeni, hi. It's also Samina joining in. I want to talk to you about what's happening in the US. So while I know we talk about, or rather we've moved from an immediate rate cut to a delayed rate cut, UBS indicates that they actually think a rate hike from the US could be a real risk. Do you feel like, forget a pause and forget a rate cut, we could be staring at a rate hike over the next couple of months? Because for whatever it's worth, Americans do have a lot more money today, and US growth looks strong, inflation still sticky.
Look, it's possible. I won't say that it's impossible. I think if you ask most people that question earlier this year, they said that's not a serious scenario. And instead, they were all focusing on rates being cut by 25 basis points 6 to 7 times. I wasn't in that camp. I felt that the economy was resilient. I didn't expect a recession over the past 2 years. I thought the economy would remain resilient this year. And I just didn't see any point in the Fed lowering interest rates when the economy is doing well and inflation was moderating. Well, inflation, the inflation numbers for the first 3 months on a CPI basis did heat up, and that's what suddenly changed everybody's mind. Now the market is still looking for 1 or 2 rate cuts, and a few outliers are looking for possible rate increases. I'm not in the rate increase camp. I think the Fed just simply going to pause here at this level of interest rates, probably through the end of the year, and feeling that interest rates are restrictive enough to help bring it down without causing a recession. And I agree with that assessment. I think that inflation is moderating and will continue to moderate without the Fed having to raise interest rates. And look, they don't want to raise interest rates. They really want to lower interest rates because otherwise they're going to have some serious problems in the commercial real estate market, for example.
Great point. Good evening, Dr. Yardeni. Just a thought on how much of a pressure does this current geopolitical spectacle have? Because it's not just one, not two, but three conflicts that we are staring at. It's having its impact on commodities as well. Is that a overhang on risk assets, or do you think risk assets are now learned to live with this?
Well, look, geopolitical crises, unless they turn into World War III, geopolitical crises over the past several years have turned out to be buying opportunities in the stock market because they've been settled relatively quickly, especially in the Middle East. In this situation, I think we've got a very serious problem with a war not just between Israel and Hamas, but let's face it, it's the war between Israel and Iran. That became clear on Saturday when Iran launched the attack on Israel. But Israel is at war with the proxies of Iran, and now it's basically directly at war with Iran. And that has the potential for certainly disrupting oil supplies. It hasn't really happened so far, but there has been a geopolitical risk premium in the Middle East because of the Middle East situation. And that's not all, unfortunately. We also have this horrible war between Ukraine and Russia. And the Ukrainians right now seem to be sort of on the back foot. And what they're doing is they're scrambling to produce more drones to do more damage to the Russian oil industry. So I'm watching the price of oil very closely as an indicator of how these geopolitical problems might feed into higher inflation globally, forcing central bankers around the world once again to raise rates in order to produce a recession to bring inflation down. The third one I think you mentioned, I think you were implying, is basically Taiwan. I think China's weak economy has one positive for us anyways, and that is it probably reduces the likelihood of any imminent, immediate attack by China on Taiwan. I think China's economy couldn't really would do terribly if they started that war and they were hit with sanctions.
Ardini, in that case, what are you telling your clients? What are you telling, or what's the advice you have for a global investor? Is it risk on or risk off trade? Are you buying equity, commodities, or are you buying gold and the dollar? Where does the bias sit at this stage?
Well, all of the above, and let me be more
There's only
specific.
that much money, Dr. Yardini.
Well, actually, there's a lot of money. I mean, there's $6 trillion just sitting in money market funds earning 4%. So there's a tremendous amount of liquidity in the systems. But to your point, there is obviously some limit to how much money can be put into the markets. I've been recommending really since November of 2022 that investors become fully invested. I thought early on that the bear market was over in the U.S. and around the world. I perceived that the Fed was done raising interest rates, and I perceived that inflation was coming down. So I did recommend overweighting technology, industrials, financials, and those have worked out very well, almost too well, because I think now we're going to see some profit taking in those areas. Meanwhile, I've been recommending overweighting energy as a shock absorber against geopolitical risk, and I would still overweight energy, and I would do some precious metals as well. So my core position is based on the idea that the global economy is going to continue to grow, that the U.S. economy will continue to outperform, and I do want to be in some of these cyclical areas of the marketplace, but I also want to have some exposure to energy and precious metals as a shock absorber against geopolitical risks.
Dr. Yardini, we've spoken about all the major economies. Let's just have your take on India specifically. Relatively looking good. IMF is also upped growth projections. What are the big headwinds, if any, that you see as far as India is concerned? What's the downside risk? Because the upside risk has been spoken about endlessly. What should we be concerned about?
Yeah, you're absolutely right. I mean, India's enjoyed a great boom here in the stock market, while China has gone the other way. I think that clearly demonstrates that global equity investors have been getting out of China and going into India, and I think that makes a lot of sense. India is a great democracy, but like all democracies, it's not a perfect democracy. There's elements of corruption and elements of too much regulation. And I'm not pointing my finger at India exclusively. I mean, the U.S. has certainly got plenty of those issues as well. I think where India really needs to move forward is on infrastructure. I mean, let's face it, whatever you think of China, they have been very successful in building some amazing infrastructure, highways, trains, and things move quite smoothly there. And I think that's something that India has to focus on, is getting from point A to point B in a reasonable period of time. So I think that would be my main focus. But again, the U.S. has similar problems because we're spending a lot of money on repairing on our infrastructure and trying to make it better. So infrastructure is very important.
Infrastructure. Thank you, Dr. Yardeni, for chatting with us this morning, and it's good to get some perspective by everything, like Dr. Yardeni said, optimistic and constructive on energy at these prices, also pretty constructive on equities at this stage. Well, remember, when it comes to India, we have our own challenges: income disparity, focus on rural consumption slowing down, and the fact that growth has been coming in from government capex. But that is the naysayers. Apart from all that, of course, IMF constructive on the India story. That's the implied Nifty indicating to a flat start. So it could be a morning where you may see some buying coming in the early hours of trade after 3 days of consolidation. We'll take a break. We'll come back, and as always, Agam joins us on the other side with the FNO update.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a
Welcome back. This is India Market Open. We are taking stock of the futures and options space and how things have panned out over the course of the last 3 trading days, in fact. Now, well, Tuesday was a little bit of a day when we saw weakness coming in, where in fact the indices came off by about 0.5%. And that was also with a little bit of unwinding as far as the Nifty futures go. In fact, decline of around 5% in open interest as far as the Nifty futures are concerned, and a continuation of the decline that we've seen since Friday last. Well, as far as the Bank Nifty goes, the picture wasn't very different. Another 0.6% decline in the underlying, and open interest also coming off by just around 1%. So unwinding seen there as well. Moving on. Well, today we are looking at the weekly options expiry for the Nifty 50. Last Tuesday, what we did see was a substantial amount of writing around the 22,000 calls as well as puts. A lot of those straddles written there. And as we move into trade today, let's take a look at how your overall open interest distribution has been placed in. So at the moment, on the higher end, we continue to see maximum open interest around the 22,500 call. And we do have a substantial amount of calls being written around 22,300 and 22,400 strikes as well. On the lower end, we continue to keep an eye on 22,000. As the 22,000 puts are the ones with the max OI, and of course once again 21,900 puts also come into focus. Today we are likely to see a flattish open, well, marginally in the red perhaps, but it's a wait and watch as to how things can in fact pan out. But given the fact that we have seen declines in the past 3 days, you couldn't rule out a little bit of covering through the course of perhaps the latter half of the session, but that's a wait and watch. Let's talk about stocks then. And well, in terms of stocks, we do have ICICI Lombard along with HDFC AMC, which has in fact seen longs coming through, along with Xeris Life, and Gujarat Gas and Infosys looking at shorts building in. And among stocks which are seeing unwinding, we saw short covering for Exide, Coromandel along with ONGC, and long unwinding for Bharti Airtel and TCS. Now that's as far as around markets are concerned, how things have stacked up. But let's get in an expert opinion as to how they would deal with these markets. Well, we have Rahul Ghosh of H.in who's joining us at the moment. Rahul, good morning. Thanks so much for joining in. Let's start off with your view on the benchmarks, the key indices, the Nifty. What's the way forward here? How are you reading into this?
Good morning to you and all the viewers out there. So first, as you were showing in the graph a little earlier, you would have noticed that the highest amount of put writing is at 22,000. This put writing is both for the April series as well as for the May series. So 22,000 is a strong level of support. The only point here is that normally people misconstrue the tallest bars becoming the absolute areas of support and resistance. We must understand that the premium needs to be attached to it. So I would suggest that look out for 21,800 being the line in the sand. If 21,800 gets taken out on the way down, then you would see the put writers running for cover and you would see another 200-300 points on the downside. To go long, you could see a dead cat bounce, which would be a technical adjustment to all the shorting that has happened. People may be looking to book profits. But to go long specifically, you should look for a bullish closing only above 22,500. Before that, I wouldn't suggest venturing out and going long with respect to the Nifty. With respect to the Bank Nifty, we expect a little more sideways movement because of short straddles being created around 47,500 and the 48,000 level. So no runaway rally expected there. No big downside also expected there, looking at the open interest positions that are currently being built.
Okay, so Rahul, how are you deploying options, at least as far as the Nifty is concerned? How are you playing this?
So the bias has, there's a tinge of downward bias in what is happening currently. But yes, there is a chance of a bounce and a sideways movement as well. Both of these have to be kept into account while planning an option strategies at this case, or at this stage rather. What we're suggesting is you can get into the 22,000 put option of May expiry. There are hardly about 5 trading sessions to 6 trading sessions left in April. So it doesn't make sense to get into the April series. So we suggest buying the 22,000 May end expiry, that is the 22,000 put of May end expiry, and simultaneously shorting the 21,800 9th May expiry option. I repeat, 22,000 put option of May end expiry and shorting of the 21,800 9th May expiry. The premiums would be around 230 to 108 respectively. Even if you see a small bounce, it should be around 220 to 100 rupees. The advantage of using two expiries over here is as follows. The 9th May expiry will expire much faster and will erode much faster than the end May expiry. This will give us some room if the markets turn sideways because it's a debit strategy. And also, if market continues to move down, nonetheless, the strategy would make money. The unique point about such a strategy is that if markets do not go in your direction, we could simply keep rolling the put options of 9th May weekly or 9th May to the end of May to make sure we cover up the debit in premium. So it's a very safe strategy to employ and perfect for this kind of scenario where we can expect some downside movement, but sideways shouldn't eat away our premium.
All right. Okay, that's a really, really good way to play the current circumstances as far as the Nifty is concerned, where Rahul is in fact looking at two different expiries and not just one as far as the Nifty goes. But Rahul, you also have Tata Motors in focus. How are you deploying option structures here?
So while planning a stock-specific structure over here, we looked at Tata Motors because it had momentum on its side, and we needed some room for the strategy to also play out. Currently, Tata Motors, if you look at the chart, it's consolidating. It's had a stellar rally, but after the consolidation, it can be ready for its next move towards the upside. However, looking at the current texture of the market, if our view does not pan out, it's very important that our losses are kept minimal. So we've planned a butterfly strategy. It's called a call butterfly in Tata Motors. What we've done is whenever Tata Motors crosses the 1,000 level, we can go ahead and buy the 1,040 call, sell the 1,060 as well as the 1,080 call. When you buy the 1,060 call, the premium would be around 24, 25 rupees. And by selling two call options, the credit you will get would be around 32, 33 rupees. And last, to hedge the second naked sell leg, we would go ahead and buy the 1,100 call. So I repeat, 1040, 1060, 1080, and 1,100. 4 strikes involved. Capital would be less because the trade is completely hedged. Whether Tata Motors remains sideways or Tata Motors moves towards the upside, the trade makes money. The biggest advantage in planning a strategy this way, if your view does not play out, if Tata Motors does not move to the upside in the month of May, the loss is restricted to only about 3,400 rupees. And what's even better is that you can simply do a roll down of the 1060 strike or the 1080 strike and make that loss about 2,700 rupees against a return of about 20,000 from a risk reward perspective plays out very well.
Sure. Well, so there you have it. That's a very comprehensively explained butterfly on Tata Motors. And of course, the big advantage here is that limited downside if the view does not play in your favor. On that note, Rahul, taking a moment to thank you for joining us and giving us a very comprehensive outlook on what we can expect from the markets, also giving us another stock idea on how we can deploy options there. And with that, it's back to you, Tamanna.
Thank you for that. And, another, I wouldn't say just a story that will impact the stock, though it will, but it's also a very, very important story. And I'm shifting focus to what's happening with Nestle and Cerelac. Nestle, of course, might see an impact today in trade. Now, recent revelations regarding the sugar content of Cerelac and Nestle have been completely shocking. Effectively, these products meant for infants and babies in some markets, including in India and other South Asian markets, have had more sugar in them that is permissible. Sesha has more details on the story. Now, Sesha, what did this initial Swiss report reveal, and what is Nestle India saying?
Right. So a report by the Swiss investigative organization Public Eye shows that the Nestle uses excess sugar in baby food products like Cerelac, particularly in developing countries, which includes India. Now, it has examined 150 products sold in Asia, Africa, and Latin America. To find that, almost all Cerelac infant cereals targeted at babies from 6 months of age contain added sugar of nearly 4 grams per serving on an average, which is equal to roughly a sugar cube. In some countries like Philippines, Cerelac contains as high as 7.3 grams of sugar per serving. In Nigeria, for example, one product tested had up to 6.8 grams of sugar. Now, coming back to our focus in the Indian markets, Cerelac sold in India on average contains more than 3 grams of added sugar per serving. Now, per serving is per 25 grams. However, a Nestle India spokesperson told NDTV Profit that it has reduced the total amount of added sugar in its infant cereals portfolio by 30% over the last 5 years, and it continues to reformulate products to reduce them further. However, this particular issue raises serious questions on regulations. Why Nestle is using such
no, and the fact that we didn't know what were our regulators doing, it's a big story that we'll be tracking on the channel all through the day. Sesha, thank you for that. We're hoping to hear from FSI, we're hoping to hear from the Health Ministry as well. But meanwhile, Nestle has anyway been having a pretty tough time, as has the entire FMCG pack. You might see some impact there as well. Just a story that I found very shocking.
It's shocking to say the least that some of the global countries or developed countries, quote unquote, whatever the Western, whatever you put it, right? There's whatever, not this level of sugar content, but for the others.
Can I just say it very crudely? Basically, you can feed Indian babies anything and get away with it. If that is the idea, well, then that needs to change.
It certainly needs to change, and in some fashion, maybe the market's verdict today could also be a sign of that. I don't know what will happen, but I would suspect that this should lead to some repercussions to the stock price today.
Yeah. Right. Avinash Gorakshakar with us. He's Director Research at Profit Mart Securities. Very good morning, Avinash, and great to have you on. Let's first get your take on how you're looking at an Infosys. I'm going bang into that because, you know, I think of all the factors, corporate results will be more of the here and now as far as Indian markets are concerned. And we've had the big one in terms of TCS out of the way, a clutch of other numbers are out as well. But do you think you'd have your eye on Infosys today, and how would you play that?
I think, Tamanna, first of all, good morning. Infosys, my sense is that, there could be some good margin improvement in the fourth quarter. But I think the key driver would be the dollar guidance and the kind of order book inflow, which the management expects in the coming quarters. The headwinds, from the US market still continue to be quite challenging. And I think most importantly, the markets would be looking at the kind of commentary the management would be playing out, for the first 6 months. My sense is that any recovery, any meaningful recovery would be coming post-September. The first 2 quarters are going to be quite challenging. We don't yet see any great visibility on the growth numbers and typically in terms of the order book, because clearly as larger orders flow in, that would give more confidence to the markets. So I would prefer to wait for the market, for the results to come out and hear out the management commentary, post the conference call, commentary. And I think after that, there could be some meaningful upside. I don't think numbers are going to be anywhere blockbuster numbers, meaningful numbers, which would be steady numbers. But I think the clear number to watch would be the EBITDA margin, and most importantly, the overall dollar guidance, for the coming 12 months. So I think these would be crucial data points I would be watching. But yes, I think clearly it seems that things seem to have bottomed out. The worst seems to be over. But I think for a near-term kind of picture, we would like to actually hear out the management commentary on the order book as well as the kind of demand picture, from the US market.
Right. We also have with us Shrikant Chauhan, Executive VP and Head Equity, joining in. Shrikant, good morning. We were discussing Infosys with Avinash. Do you have a strategy on Infi this morning? Tuesday, of course, seemed like it was rough, and today there is the earnings anticipation that will be on the counter. How does one trade Infosys?
Yeah. Good morning, everyone. I think, Nifty is very clearly into corrective mode. It is correcting to the rally that we saw from the levels of 21,700 to 22,750, 700. So from there, all the way it is correcting back. On the back of several news flow which are there in the market. Yes, we may see the levels of maybe 22,000 on the downside in the worst case scenario. That's the overall view based on charts. So between 22,000 to 21,900, I think it should stabilize and rebound. If we see any higher opening, because today some Asian markets are showing some gains, So then close to 22,000, 250, 300, we are expecting resistance in the market in terms of 20 days simple moving average as well as option statistics. So in the near term, we are seeing the market to remain in a range of 22,300 on the higher side and 22,000 on the downside. If we see the market is dropping to those levels, we should look for adding long positions or to buy some select stocks with a medium term view, because we are expecting market to rebound sharply after hitting the levels of 21,900 to 22,000 levels. For the Bank Nifty, there also the view is similar, but 47,000 is going to act as major support for the market. And for Infosys, I think it is falling from the highs. It is discounting to almost all the news flow. But at the same time, while looking at the chart, I'm not seeing any rebound in the near term. But yes, if we see the stock is dropping to 1350 or 1360, then there certainly we should look for taking some contra bets of going long in the market on Infosys. So between 1350, 1360 levels, there is a buying zone for Infosys. But at these levels, it is better to stay away.
Okay. And Shrikant, with that view in mind, well, let's first get your stock ideas out of the way. What are the stocks that you're recommending for the session today? Good morning.
Good morning, Neeraj. I think bank stocks, specifically stocks like Federal Bank, which is very close to its breakout level. It's showing some strength. It is around 153, 155 levels. 160 is the level above which we can expect technical breakout in the stock. And the stock can go to the levels of maybe 175. It has spent a lot of time between 160 and 140 levels. Today, if we see the stock is somewhere close to these levels, then there is an opportunity to buy with a stop loss at 150 or 149. We can expect 160 and then later on 175. But on the shorting side, I think we should go for shorting stock like some mid-cap IT companies. In that specifically, Infosys BFL looks weak. It is around 2300, 2310 levels, but the pattern is indicating us that it is on the verge of breaking its swing low. And below that, the stock can fall to the levels of 2150. So it's a sale at current levels with a stop loss close to 2365.
Okay, well, so that's view from Shrikant on some specific stocks. Now, focus on telecom in more ways than one. Let's start off with Vodafone Idea. It's mopped up close to 5,400 crores from anchor investors and some very marquee names out there. What could this mean for you who is contemplating whether or not to invest in the FPO? I mean, multiple things out there. Smriti, who's been tracking this, joins in with the updates around the FPO. And Smriti, I don't know if you have some idea from either dealing rooms or bankers about whether a retail investor should go out and buy into the Vodafone IPO or no.
Yes, good morning. You rightly mentioned in this 18,000 crore IPO, anchors have already mopped up about 5,400 crores, and we're seeing marquee names like Fidelity, GQG, all putting money into it, including domestic investors like HDFC, Quant, Motilal Oswal. But let me break down some numbers for you. So GQG is investing 1,348 crore, which makes up for 25% of the total anchor raise. Then there are other investors like Fidelity that is investing 774 crore rupees, Red Wheel investing 281 crore, and domestic mutual funds have got an allocation of about 16% of the total anchor raise as well. Now the FPO will open for the public today. The price range is 10 to 11 rupees and it will close on April 22. Now obviously, because there are anchor names like GQG and Fidelity who have put in the money, there's Morgan Stanley, Goldman Sachs have also taken a little bit of stake there. So that makes that kind of gives the positive light to the FPO for the public. Now, just to give you an idea, IFL Securities also come out with a note on this. Now, they have upgraded to add and recommended a subscribe to the FPO with a target price of 14. And in a blue sky scenario, The target price is set at 19 rupees. Now, there are three rationales that they're giving for this target price. Fundraising, ARPU increase, and favorable outcome of AGR dues. Now, they say, according to RHP, the funds that they raised from IPO, about 12,750 crore, will be used towards 5G and 4G services. They'll use about 2,175 crores towards the payment of spectrum dues. Now, IFL also sees 2 tariff hikes in the next 3 years, one post-elections and one in FY27. The ARPU, they're expecting the ARPU to rise from 145 in the third quarter, 145 rupees to 241. That is an upside of about 66% in the next 2 years. Now, they're also seeing a decent chance and favorable outcome for the curative petition that is lying in the Supreme Court on AGR dues. They expect 50% of liability relief in this, which is about 70,000 crore rupees. They're also expecting a conversion of 35,000 crore rupees into equity. So about 1 lakh crore rupees itself, either it will be, that's IFL's rationale, that either it will be, that liability will not remain with the telcos, and 35,000 crore will be converted into equity.
Okay, thanks a lot for that, Smriti. And that's an important one. Remember, you'll hear from the Vodafone management. It is about 3-4 minutes from now. Just before we hit that break, though, Avinash Gorakshekar, quick view here before we thank you. Vodafone, would you subscribe? Or would you subscribe to the FPO?
I think, Neeraj, I would prefer to wait, because clearly this is a very capex intensive business. And, this money is going largely for the 5G network rollout. The debt continues to be pretty high. And I think the biggest negative Vodafone has is basically they have been losing a lot of customers. So, the logic of increasing ARPUs has actually not played out unless they retain their customers and increase their customer, base. I think that is going to be the key to the growth. Of course, the IPO will be well subscribed, with such marquee names coming in. But I think in terms of the listing gains or in terms of the near-term upside for the stock, that seems limited. We'll have to see the numbers, how they pan out going forward in the next, say, couple of quarters. But I think the market is extremely competitive, and I think players like Jio and Bharti are increasingly, eating into Vodafone's market share. So I think I'll prefer to give it a pass. I'll wait for the listing, and probably, at some point of time, once there is some more clarity, one could definitely chip in, because most of the negatives are in the price, but growth, quotient is yet lacking.
Yeah. That's the view coming from Avinash on Vodafone Idea FPO. We'll slip into a break. We'll come back. We'll continue tracking and gearing you up for trade this morning. It's going to be a flat start on the index, but lots of stock-specific trade that's going to keep us busy. So we'll take a break and we'll come right back.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies.
All right, just a minute odd left for pre-open rates to hit, and in just a bit you're going to hear from the Vodafone management on what they plan to do with their FPO proceeds and how they plan to really revive that company. Shrikant Chauhan is with us. Shrikant, I don't know if you have a quick take on Vodafone before we get into that interview.
Yeah, sure. I think, see, like the stock is very close to its important support levels. In fact, some few days back when there was sell-off in the stock, it was very close to its 200-day simple moving average, which was around 12 rupees. And if the stock is large and having huge market, I'm going to say the market share, or it is like the part of A group or NSE 100 shares, then most of the time we see that buying emerges at important averages. So after hitting these levels around 12, we saw a recovery in the stock, and it is somewhere close to 13 levels. Now what is important is that around 14 levels, the stock is having multiple resistance in terms of short-term averages. So yes, I think 14 and 12 is the range.
Okay, Shrikant, thanks so much for that, but we'll have to keep it with Vodafone Idea and go across to my colleague Sajid Mangat, who spoke to the CEO, Akshaya Mundra, about the company's revenue expansion plans and more.
Our revenues have been improving, 4G subscribers have been improving. The investment should make that improvement more meaningful rather than the gradual trajectory which we have seen without investments. In terms of where the investment will help us significantly is to help us arrest the loss of subscribers because of lack of 4G coverage. And of course also to roll out 5G, which is important. I will not be able to give you a timeline, but I would say that investing in 4G coverage is our topmost priority, and we expect that once that investment is completed in an expeditious manner, that would be the biggest factor which will enable us, or which should enable us to arrest the loss of subscribers.
Because, do you think that you have bottomed out as far as the loss of subscriber is concerned on a gross level? Because 4G you've been increasing, but on a gross level you've been losing subscribers. So have you bottomed out as far as that is concerned? From now on, you're going to see a gross subscriber addition going forward?
So I would say that we have to make the investments first and improve the coverage and experience. But we are very hopeful that once that investment is made, we should be able to arrest the loss of subscribers. I mean, I would say that if today we get a higher customer acquisition compared to our market share, why would we not be able to retain subscribers once we are able to provide a better coverage? And that would be our focus here.
I've been talking to many of the analysts, many of the investors that you've been talking to as well, and who've invested to you in your FPO. Now they see that if Vodafone is able to execute the plan that it has envisaged, moving to 4G, from 4G to 5G migration, and your subscriber additions that you're looking at on an every annual basis. They're looking at, they're hoping that the revenues would be from 40,000 crores now to 75,000 odd crores by FY26. Is that an achievable target for you?
Sanjeev, I cannot comment on specific targets. You know that very well. And I think in the interest of time, we'll have to bring this to a conclusion now. Because
that was my last question. I wanted to check with you whether that's an aggressive target the street has put in for you.
We'll look at that.
Well, interesting. But Vodafone Idea clearly right up there. It's interesting, guys. I mean, just think that just the updates that have come in and then the kind of subscription that the FPO has gotten, it remains a stock that we should monitor. I mean, still early days, but the pre-open rate still suggests continued momentum.
Yeah, absolutely. Vodafone Idea. But, I get the point that our analyst said just before this. Look at the kind of competition with a Jio, with a Bharti. So all of that's going to be interesting.
How many of you guys are on Vodafone Idea?
I am.
Actually, so am I. Are you, Neeraj?
No. Original number. And
so
I
they
haven't
still have
changed
some
that.
market share.
But,
I was about to say that maybe not.
But that is a Bombay thing. People who've had that number for the longest time.
They're loyalist, huh?
Yeah, oh, we're too lazy to change. Maybe you don't want to change, you don't want to teleport, etc. But okay, let's get Rahul Arora in. He's CEO Nirmal Bang. Rahul, I don't know if you have a Vodafone take this morning, but so much to talk about. Vodafone, ICICI Lombard, Nestle, a lot to unpack in. But let's begin. Let's begin since we've just come out of that interview. Would you look at a Vodafone positively right now, since there are marquee investors who seem interested in that FPO?
Morning, Tamanna. Thank you for having me on the show. So there's no official rating that we have on Vodafone, and we don't really track the stock. So unfortunately, no comment. Sorry about that.
All right, fair enough. What about Nestle? Now, we did a story this morning, and of course, it's been there in the public domain. And obviously, it's appalling on all senses that there is more sugar in baby food products that Nestle sells in developed markets like India. Overall, the consumption play hasn't been really sparkling. What would be your take on a Nestle and on this specific story?
So, see, I've been a perma bull on this name for as long as I can remember. I think it's a fantastic story. You'd remember when the Maggi crisis happened, the way Nestle was able to go back to the drawing board and not only reinvent itself, but come back with greater market shares, and the kind of numbers it has delivered since then, it had not delivered pre the Maggi crisis. In the West, if you look at Coca-Cola, for example, they actually have adverts on their television telling people not to consume Coca-Cola, for example, because of the amount of sugar that they have, but they leave it in the hands of the consumer. But should Nestle be required to take corrective actions? And by no means am I justifying, the findings of this report. Of course, coupled with the fact that royalty increases were also announced recently. But I think if any remedial actions are to be taken, I think Nestle is more than capable of taking it. I think it's a household name. And I think any dips into this stock should be bought into. I mean, it's 100% plus return on equity, capital employed, return on invested capital business. It's growing its earnings by 15%. Any such opportunities, I think, while unfortunate, could potentially present themselves as buying opportunities. So I have two case studies in recent memory, which I've just hinted to. So I don't see any reason why Nestle can't course correct, find its way into the regulatory scheme of things, and continue with life as normal. So I'd be a buyer into any dips in Nestle.
Rahul, just a follow-up to Tamanna's question, and I know you track consumption quite closely. You talked about Nestle. What about Patanjali? The back and forth on Patanjali, the Supreme Court, knocking Ramdev, and of course now this morning going back on their word that GQG has actually not increased their stake in Patanjali. Intraday stock movement will be negative, but will that be an opportunity for a consumption investor to pick this up?
No, Samina, this is not a name we've liked from day one, and it's not a stock that we would recommend anyone holding. In fact, I would buy all their competitors but them. I think their competitors have a much stronger track record in the public markets in terms of disclosure, corporate governance, product acceptance. So, we've looked at this company closely from time to time. But each time we've decided to give it a pass. I'm not saying it's a sell because if you're holding it, because we don't track it. But what I can say is that I'd buy any competitor of this stock rather than buy this stock.
What would you buy in this space then at these prices? Apart from Nestle,
I think,
of course.
Samina, I think, consumer staples, Samina, in many ways, like traditional IT services companies have become very saturated businesses in India, right? So if you look at the mature IT companies, which are pretty much the large cap, or the mature consumer companies, which includes the levers, etc. I think most of these are about 5% at average growth companies. In a good year, you'd probably get 7, 8, 9%. In a bad year, it could be 0 to 3%. So I don't know how much you're going to get in terms of top line, but I think wherever you can look at margin expansion as a theme in consumer, and that's pretty much been the story in FMCG in India. I mean, Hindustan Lever was locked in a 10-year range from, I think, 250 rupees to 300 rupees for the longest time. But then from the journey from 300 to 3,000 was because the margins went from 14, 15% to about 24, 25%, and the earnings compounded at about 17, 18%. I think that story might continue in the foreseeable future for consumer. And I think in that backdrop, some of the stocks that we really like would be United Breweries. I think that presents a very significant opportunity in terms of margin expansion, and the fact that we're in peak summer season, you have an IPL going on, which will lead into a T20 World Cup. I think it's going to be a very good year for United Breweries. Gillette is another very interesting stock, traditionally viewed as a men's shaving product, but I think what they're doing with men's grooming and women's shaving is remarkable. And I think even a P&G Health and Hygiene, I think, the way Whisper's gone about its business and the way VIX is also doing, the fact that pulp prices have collapsed, which will aid margins in a very substantive way. So I think there are these three pockets on the consumer side where I think there is scope for margin expansion and some volume growth. And, going back to the question that Tamanna asked earlier, I mean, if you get any of the packaged food companies at a correction, whether it's a Nestle or a Tata Consumer or a Britannia, any of these I would look at on correction. So not much beyond these 5-6 names. I think the others would pretty much be, like I said, very steady state 5% kind of growth companies.
Okay. Well, the pre-open rates have settled, and just mark what's happening to some of those as things settle down. We should pull up Infosys just to see what the top loser of last Tuesday is doing currently. So that's one stock on the radar. And of course, a clutch of other names which were newsmakers, particularly from the real estate space: Brigade Enterprises, TARC, maybe even a Suntech. Some exceptional data out there. Look at that, 5% up for TARC, 4% up for Brigade, 4% up for Suntech Real Estate. So clearly, those stocks are doing exceptionally well in the session today. Just before getting the brokerage view, Rahul, one quick word on some of the real estate names. Do you guys have coverage? Good morning, of course. And are you guys buyers into any of the realty names currently?
Morning, Neeraj. It's been a space we've liked for a while. I think ever since RERA, you've seen unorganized move to organized. And I think regardless of the developer, you're seeing remarkable kind of pre-sales that are happening. I mean, you saw what happened 2-3 months back with DLF, launching up $1 billion of sales in 3 days. In fact, recently, even a small company like Arihant, which launched a project in the Noida region, got lapped up very easily. The Bombay market is doing extremely well. When we talk to real estate consultants like Knight Frank, JLL, Colliers, etc., they're telling us that the retail and the commercial market is holding up pretty well. So I think it's a good place to be. As a lateral, Neeraj, you could even look at buying through REITs, something like an Embassy REITs, which has a very strong product portfolio in South Bombay and most of Bangalore as well. But I think the entire introduction of RERA and the discipline that's come into execution and thereby a focus on cash flows. Though here also, Neeraj, I'd like to stick with industry leaders, say something like a Lodha or a Godrej, or an Oberoi or a Sobha or a Brigade. I think these are probably 5 names in which I would want to play. And if you want to play it through commercials, I think we've always liked Nesco as a story. Obviously, there was a blip during the lockdown and even post it because they had to give their facilities to patients. But I think the way the leasing is happening post that, Nesco could look like a very interesting play on commercial as well. So fairly positive. And, as Keki Mistry used to say when he was at HDFC, if the Prime Minister's numbers are correct, that 65% of India's population is under 35, then most of India still hasn't bought their first home. So, you can imagine the kind of demand that lies ahead of us in the next 15, 20 years. And if you stick with quality, I think you'll make money.
Right. If you stick with quality, you'll make money, and that's an age-old adage for now. But it's 9:11. We're gearing up for market opening. But as always, a slew of reports on insurance companies. This morning, Mika's got a list of that. Mika, what are brokerages saying about insurance companies? And of course, you've got HDFC Life reporting as well today.
Yes, so I'll start off with HDFC Life. Now, Citi has upgraded its rating on HDFC Life to a buy at a target price of 720 rupees, which implies a 19% upside. Now, the upgrade on the stock is due to the underperformance of the stock when compared to ICICI Prudential Life, Max, and SBI Life. Now, they expect the company's effort to strengthen its agency base in FY24, and any likely revival in growth of HDFC Bank and key management commentary from HDFC Bank will help the company further. Then we have HSBC, which has maintained a buy on ICICI Lombard at a 1,990 target price, which offers a 20.7% upside to the previous close. Now, operating performance of the company continues to improve. The firm has gained significant market share gains in their focus segments, as well as lowered the loss ratio of the company. So, what HSBC believes that if the company does meet its FY25 operating ratio guidance of 101.5%, this would lead to a higher EPS growth. And they also say that the firm is well placed to deliver faster premium growth when it compared to the industry because of its brand diverse product mix as well as its distribution network. And lastly, faster than expected improvement in the combined ratio of the company is a key re-rating catalyst for the company.
All right, just a minute to go. Quick take from Shrikant on what would be your top pick. Some interesting movers in the pre-open session, Shrikant, but anything that is catching your eye? We're seeing an Angel One doing pretty well, Vodafone showing the initial spike.
Yeah, I think metal stocks are also doing well, and in that specifically, Nalco looks good, which is currently trading around some close to 180 to 183. While looking at the commodity aluminium, I think there we are seeing a very strong rebound sort of pattern, and it is going to cross its previous high. That is the overall view based on its overall formation. So I am of the view that Nalco and Hindalco should do well in the near term and in the medium term. So at current level, it's a buy somewhere close to 183 with a target of close to 200. We can keep stop loss somewhere around 175. So Nalco, Hindalco both looks good.
Okay, top ideas, Nalco, Hindalco. Shrikant, 30 seconds. A view on the insurance companies that Mihika was talking about, Lombard and HDFC Life. Any thoughts? Quick 30 seconds.
I think HDFC Life is still struggling a lot. It is finding a lot of selling pressure somewhere close to 200 days simple moving average, which is around 670, 75. So till the stock is not crossing 680 comfortably, I think it is better to stay away. Yes, there is a risk reward ratio, but I think relative outperformance is there in ICICI Prudential. So that looks really good. I think if there is any specific performance, then ICICI Pru should outperform, and the stock can easily reach to the levels of 700 or 740. So ICICI Pru looks good.
Okay, gentlemen, stay on. We'll just take in the market open. 9 seconds left, and it promises to be a start which is not bad. Let's see if the broader markets continue to outperform the way they did day before yesterday. But here are the first rates. About 1/3% for the Nifty, not bad really, just about in line with what was anticipated by the GIFT Nifty. Nifty Bank about 0.5%. IT might be sulking, but mid caps and small caps, 0.67% for the mid cap index, small cap index 0.84%. Clearly we have solid market breadth. IT2 not too bad, interestingly. Bring up the heat map and let's see what's moving and what's not. A lot of green, very little red. Nestle sees pressure, 1.62% lower. There is weakness in HCL Tech and Tech Mahindra, but Infosys is off the losers list, which is great for Infi because it was down in the dumps the other day. Power Grid reacts to the news point around the distribution for 2 states, 3% higher for that one. BPCL up, HDFC Life on that city upgrade, I reckon, up 2% ahead of the numbers, and metals are doing well. Hindalco, Tata Steel, both of them up in the green. There is strength in Adani Ports. No war in Israel is great news. It's a small fraction of their earnings, but still, stock sentimentally gets impacted. Hero and Eicher and M&M. So autos clearly in the fast lane, and Reliance Industries on this whole talk of maybe a Geo Platforms IPO at some point of time. At least the IFL Securities note seems to suggest that that stock is doing okay. Net, it is Power Grid, BPCL taking the cake on the gainers list, but essentially a lot of gainers, very few losers. Nestle seeing the bitter end of the stick, but just about 1.25% for now. Tamanna.
In fact, I would say a better opening than was expected widely, considering what the last couple of days has been like. Should we just quickly pull up what's happening on the broader end of the markets as well before we go to the specific stocks? And even better on the mid cap, I would reckon about 1% up. Small cap also doing pretty decently this morning. A lot of the news flow and reactions you're seeing in the first few minutes of trade have to do with numbers. So I'm going to pull up Angel One and Just Dial, both with quarterly numbers which were good. In fact, all of that is seeing earning impact, and Angel One, Tata Comms, Just Dial, all of them up in the green. But Just Dial there has paced ahead even of Angel One on the back of their numbers. A few other stocks that have been on our radar, and let me just pull up ICICI Lombard as well, because if earnings is going to be the big trigger, then you're seeing that with ICICI Lombard up about 2.5%. Patanjali Foods is something that we've been tracking, and their clarification is bound to see a downside, but not that sharply, if I'm being honest, just about 1.5%, considering you had a 5% jump up on the claim that GQG had upped its stake, and then they of course clarified that it was a typo. Biocon is something I'm going to pull up. They are signed a pact for Ozempic, that's semaglutide commercialization. It is in Brazil, but remember, this is the fastest growing drug that the world is looking at right now. It's a weight loss / diabetes drug, 3% up on the Biocon stock today. Just Z and Paytm on my list, and both with positive news. Z is interesting. They've withdrawn their charge against Sony in the NCLT. Why are they doing that? Are they renegotiating? That's the buzz on the street, but mildly positive. Paytm, expected move, nod from NPCI to port out their users to other banks, and that stock about 2% up. All in all, I would say not a bad morning at all things considered, Samina.
Good morning, and I think it's stock-specific trade that is driving today's action. The breadth of the markets also very clearly biased on the upside. Remember, there are three nifty companies that report earnings today. You've got Bajaj Auto, Infosys, and HDFC Life. HDFC Life and Bajaj Auto both are trading with a positive bias. Infosys looking a little bit on the edge ahead of its earnings. Across the broader markets, it is all about earnings reaction. So Just Dial and Angel One that Tamanna highlighted for you are turning out to be your top gainers in trade on back of numbers that were largely in line with expectations, but the markets are being pretty generous, at least with Angel One. The stock is up 5% as we see it, despite the fact that margins have been shrinking. But I guess the strategy of Angel One remains to acquire market share before they focus on profitability so as much. Well, Just Dial also looking good. Battery operator Amara Raja, in fact, this was one of your top gainers in trade on Tuesday, continues to have a very solid morning, up about 4% again. Aegis Logistics is up 25% in the last 5 days. The stock, which was your biggest gainer in trade on Tuesday, or the third biggest gainer in trade on Tuesday, is up another 4% this morning. So the buying continues for some of these names across the broader markets. Well, apart from that, Brigade and Suntec Realty, both of them reported record pre-sale numbers. Brigade is up 4%. We will be talking to the management very shortly on the show. Suntec Realty as well on back of those record pre-sale numbers is up 2% in trade. OMCs aren't doing too badly, so BPCL, HPCL and IOC are having an okay-ish morning on back of crude easing off a little bit on higher US crude inventories. BPCL is up 4%, actually it's not a small gain. IOC is up 3%, HPCL also may not be lagging too far behind, 5% on HPCL. So I think if I've got to pick a sector for the morning, it might be OMCs. Crude rolling back just a little bit is looking or leading to a strong trade for some of these OMCs that have been reeling under pressure. 4% on BPCL, 5% on HPCL, and IOC up 2.5-3%. GAIL is also up 3% but battery manufacturers are looking good. You've got Exide as well, that's up 4% after a 14% up move that we saw in trade on Tuesday. So all in all, it's a solid morning with lots and lots of gainers. Sterling and Wilson, which I don't know why, but is up about 2% as well. On the sell side, Alembic, Sun Pharma, so pharmaceutical seems to be a little bit of a soft spot. You've got Ashok Leyland, Vijay Diagnostics that are seeing some cuts, but again, Sterlite Tech also down 6%. So that's the trend we are picking up on. Shrikant, I'm going to come to you first with OMCs. Very quickly, markets have just opened up. If somebody's got to initiate an intraday trade in the OMC pack, IOC is sort of the third biggest gainer in that pack. Would you buy any of these three names for the day?
I think IOC is very close to its important resistance level, and yes, while looking at the overall pattern of crude prices, yes, there is a possibility that we may see further more gains for IOC. It is around 174, above 175. We are expecting stock to move towards 183. And in fact, if we go through with the overall particular PSU space, refining space, then in that IOC is doing relatively better. I think it's a buy at current levels with a stop loss close to 172. I think it is eventually heading for the levels of, again, its previous high of 195.
Okay, Shrikant, we'll leave it at that. Thanks so much for taking the time out and being with us and giving us your thoughts. Really appreciate your time. Rahul, from amongst all the sectors that you guys would be watching out for from an earnings perspective, which is that space, bottom up or as a theme, which you're watching out for the most this earnings season?
Okay, this is an interesting one, Neeraj. I think, so apart from the 2 or 3 consumer names that I gave earlier, which I think will have a good quarter in terms of UB, Gillette and P&G, I think it will be very stock specific. I think we'd probably watch out for TechM. That would be one name because my IT analyst Girish's call is that the 6-7% margins that TechM currently operates at could potentially head to 15% by FY26. So we'd want to see in that journey what gets delivered, particularly in this quarter. I think we'd be watching the chemical sector very closely, Neeraj, because some of the price points have started to look very attractive. I mean, at our broking firm, we are recommending names like Galaxy Surfactants and Sumitomo Chemicals right now. So just with what's happening in China, what is the demand supply situation, what the companies have to say about destocking and incremental demand in a lot of those geographies, that could be one thing that we would want to see. And I think, interestingly, Neeraj, with this entire talk that started about a month and a half back of cement prices being cut, it'll be interesting to see how, what has happened in terms of volume growth for cement companies in that backdrop. I understand we're, starting an election tomorrow, and the run up in terms of spending has not been that much, and that's very typical. But I think that will also be an interesting thing to watch out for. So I think there are a few of these that we'd be sort of keeping an eye on. But apart from that, I think it's pretty much going to be par for the course. I don't think there'll be exceptional surprises either way as we look at things right now.
Rahul, what is driving the exuberance amongst defense stocks? The defense indexes are 14%, while the index itself is up 2%. HAL, BDL, BEL, I mean, you pick any name from the defense pack and the gains are anywhere upward of 15-20%. What is leading to these gains, and is there an opportunity post these gains today?
Well, interestingly, Samina, we've just put out a very comprehensive report on the defense sector just about a week and a half back. It was actually co-authored by the ex-CMD of BEML, Mr. Deepak Hooda. It's amazing when you look at the defense stocks, because it reminds me of what happened to the chemical sector at the start of the lockdown. There was not too much to report by way of numbers, but I think everyone thought of this China plus one factor as being a very material factor, and chemical stocks went up 3, 4, 5x, and then for a period of 3 years just consolidated. A very similar thing has happened in defense over the last year or so. I think because the Prime Minister has spoken about indigenization, increased spend on defense, and the need to ramp up production and reduce import dependence and become an export hub, I think you've seen a multiple re-rating. But I think when you actually look at the defense opportunities, I mean, compared to, and I'm not even looking at the United States or China right now, but even some of the major European countries, I think we have a long, long way to go. So can these companies, if all goes right, compound their top line by 25-30% over the next decade? Very easily. Now, the only question is what multiples you want to ascribe, because working capital can be an issue in some of these companies. Because sometimes what can happen is your product can be ready and it can be sitting in your warehouse or in your wherever you dock these, but the delivery of it may not be taken by the government of India till they actually feel the time is right. So you could have a mismatch in terms of revenue, RFPs, the actual order booking, the actual execution, and the booking of that revenue. But I think structurally, these are fantastic companies. We like pretty much most of the companies in this sector. I think on the public sector side, we love Bharat Dynamics, we like BEML, HAL, and even Mazagon. I think of these, if I look at the next year or two, I think MDL will probably have the best earnings and revenue trajectory. So I think of the four. And on the private side, we've looked at names like Astra, Data Patterns, amongst others. But I think they're also the two names that I've taken, I think will probably be better from a revenue perspective. I think both for Astra and Data, we're looking at about a 20-25% growth in revenue, EBITDA, and PAT for the next couple of years. So in terms of opportunity, I don't even think India has scratched the surface. I think there is a good 25-30% compounding available. But this needs to be, if you're buying these stocks, you need to have that kind of horizon that you're going to sit and hold these stocks for 5-10 years. So I still think there is a case for these stocks to be multi-baggers even from here. The numbers haven't even started to come in yet.
Rahul, you mentioned briefly about, the big sort of a trigger tomorrow. I don't know if it's a big trigger for the markets, but first day of polls and elections, and the run-up to the elections has so far been fairly subdued. Do you think there's a play here?
You're talking about the overall aggregate market, Tamanna?
Yes.
Okay, so the way I look at it, and I hope I don't take up too much of your time, but I'll try and keep this brief. Look, we have a mutual fund industry today that's almost 60 lakh crores, right? Almost 30 lakh crores of that is equity. If you analyze the fact sheets of most mutual funds, on average, they're holding about 3% cash. So you're talking about 90,000 crores, give or take, of cash just by mutual fund industries. You add life insurance, LIC, AIF, and PMS. That number goes to somewhere around 1.25 to 1.5 lakh crores. That's the kind of cash that the system has, which is why India over the last 5 years has not even needed foreign money, because if you get it, it's an added bonus. And if I take you back to pre-demon, the size of the mutual fund industry was 5 lakh crores. So I don't think any industry in the world has grown the way the Indian mutual fund industry has grown, nearly about 11, 12x. So the point I'm trying to make is that any correction that you're getting today, and there was a time that, all of us have been in the markets long enough to remember that good quality stocks used to fall 30, 40, 50% in corrections. The point today is that the cash levels are so high, and as a fund manager, you have to deploy that cash, that when a stock is actually falling 10, 15%, for fear of missing out, you're actually going in and buying it. So you're not allowing a full-fledged correction to actually take place. And that's the problem. So I don't think the market is going to correct in terms of price in a very material way. I mean, today on current evidence, you've had 2.5 wars that have happened. You've had whatever with crude, you've had US interest rates at 5.25, Indian interest rates. If in all that backdrop, the market didn't fall, why would it potentially fall 20% from here? So you may go in for a bit of a time-wise correction. I think it could be range-bound for the next couple of months till you have the election results. But I think every dip over a longer period of time should be bought into.
So it is opportunity for a long play, and I take that point. That's an interesting one, that the strength of the domestic mutual fund industry has sort of changed the game, and the dependence on whether foreign funds will come in. Thank you, Rahul. Always great to speak with you. We'll take a very short break right now on India Market Open. And even as we keep tracking the markets, we're back with the management of Tata Communications. Their numbers are out. We'll ask them more after this break.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website NDTV.
If you would have heard Kabir Shakir 2-3 weeks ago, you got a sense about what they're trying to do at Tatacom. There will be near-term stress on margins as they integrate some of the acquisitions, in particularly Kalera, which is a CPaaS player which they've bought recently. I mean, recently in the scheme of things of the acquisitions that they've done. But the questions to him at the start of FY25 would be, how does he view what would happen over the course of the next 1 or 2 years, considering that in some sense, the last 2 or 3 years on the revenue front have been years of consolidation as voice revenue comes off, but data revenue goes up, and at a point of time when the return ratios have really zoomed. He's CFO at Tata Communications, joins us right now on the show. Kabir, great having you. Thanks for taking the time out. Put this quarter into perspective, Kabir. Would you say that relative to what was anticipated, it was a bit soft, or was this in line with expectations? I was reading a couple of notes which were saying that their expectations were slightly higher than what you've delivered.
Actually, we're quite happy, I would say, Neeraj. Yes, there are a bit of a macro headwinds on the top line, growth, and maybe, we would have been happier with a little bit more. But I would like to underpin and underline the fact that our participation levels have gone up, when it comes to bids and, and customer conversations. And I've kept on harping this, that our customer relevancy is increasing, quarter on quarter, from any data point that we want to look at. So from that perspective, I think that's encouraging. Yeah, could the orders have, closed, and revenue delivered? Yes, that could have been, a little bit more than what we would have liked and what market expected. But I'm, overall, quite happy. Let's put this in context. We have, for the year, delivered a 22%, data growth. For the quarter, it's a 27% data growth. So I think that's indeed a good data growth. Yes, on the back of acquisition. Even if I strip out acquisition, we are talking about an 8.8%, data growth for the full year. So I would say, quite pleased with where we are.
So Kabir, we were not able to talk some numbers and timelines last time we spoke because you would have been a silent period. I think the street may be interested in knowing this. When does this, how do I say, you juxtapose both the things that voice naturally will go down as you develop the business, data will go up. When does this change in a way that in absolute revenue terms, we see very, very visible growth? Because your return ratios tell a completely different story from the consolidation picture that the top line is showing, right? So is there a timeline in mind about when does the growth in data revenue outstrip the loss of growth in voice, and it starts showing in the reported numbers for Tata Communications?
It is already showing, Neeraj. If you actually look at it, our voice business is becoming smaller and smaller. So today we are talking about less than 15% of the voice business, being smaller. We manage that business with very different metrics. I mean, it is not, gross revenue that we manage this business. We manage this business on gross margin. I mean, as our net revenue, as we call it internally. So we will manage the business for net revenue, for cash. And so the metrics are quite different for that business. The business globally is declining while we are maintaining share, or I would say improving share from what we are doing. Data revenue, you will see both as a result of, organic and inorganic activity will continue to keep going up. And within data revenue, as I had spoken earlier as well, our near-term ambition is to bring a balance of 50-50 between core connectivity and the digital portfolio. We are already at 59-41, as we close the year. So we've moved from, 68-32 that we were there last year as a ratio between these two businesses to 59-41, and that was also because of the three acquisitions, all of which we did was in the digital, space. Therefore, I would say you will already seeing, all these growth numbers in our results.
Good morning, Kabir. This is Tamanna here, and great to speak with you as well on NDTV Profit. Just a follow-up there on EBITDA margins, and you talked about the acquisitions, the 2-3 acquisitions. They have diluted your, understandably, your EBITDA margins to some extent, and you're seeing that in the quarterly and yearly numbers. When do you think you come back to the 23 to 25% range that you have guided in Q3? Do you have sort of a timeline for that?
Yeah. Good to see you and talk to you, Tamanna. We have stated that that's our ambition range that we would like to operate in 23 to 25. I would like to again remind, even though we stated that as the ambition, we operated north of 25 while we were in the COVID period when costs had not were not being incurred, whether it was travel or marketing or all of those spends. As we come out of COVID and all of these costs come in, there were a couple of things that we have done together. Inorganic activity is definitely one of them, and that is mathematics. Everybody can do the weighted average math and what impact it had on our margins. But we also are investing in future capabilities within the organization to be relevant to our customers, to do all those things that we want to do from a top line perspective. So our three guidance, or rather guided KPIs that we've given to the market is our leverage levels, our return on capital employed, and EBITDA. And why I keep reiterating that it has to be seen in holistic perspective of all of these three together. Our net debt to EBITDA stated ambition is that we will be under 2x. We operated well under 2x for a majority of the last 3-4 year period. We kind of hit a great point of 1.3x before the acquisitions. We went up to 2.2. I mean, we are marginally down this quarter to 2.16. And we will get back in the under 2x range, and that will happen already in FY25. ROCE will follow and maybe happen year after. And EBITDA will be the last one to come back into the 23 to 25 range. So maybe 2 years is what I would be looking at EBITDA to come back into the 23 to 25 range. Having said that, what we will do between now and 2 years, is the world is not static, the market is not static, the competition is not static, the consumers' demands are not static. So this for me is dynamic, that we will continue and have that virtuous circle of growth. And when I spoke to Neeraj last time, I talked about what's our finance strategy. Our finance strategy is to drive competitive, sustainable, profitable growth. And when we do that and we get the benefit of that, we will reinvest back into the business to drive further growth. And therefore, that's where we are headed. I'm pleased to see that that's what is playing out already today.
Okay, that's great. So 2 years out for a 23 to 25% EBITDA margin as things stand today. Now, one big factor perhaps is the amount you need to invest on network expansion, network expenses, etc. Can you give us a sense of what direction that's going and how that will increase?
I would talk overall capital expenditure, Tamanna, not just network alone.
Okay.
Because we're going to invest quite a bit in these new technologies. You've already seen our announcement of the partnership with NVIDIA on what we intend to do on AI cloud, and that's just a start. The board has, in principle, given us the go ahead to go and invest, something to start with. But we will, and as we see use cases coming in, as we see that relevance hitting with our enterprise customers, that's one area which we will, increase. So when we guided the market earlier saying we would be in the 250 to 300 million range for capital, hopefully in FY25, I would be north of the 300 million. And that's the kind of line of visibility that I already have of the projects that we're doing. And that's the reason why the ROCE target becomes extremely important, that while we increase our capital outlay in the business, we don't take the eye off the ball in terms of returns. And so therefore, these things therefore work hand in hand, if I may.
Okay. That, Kabir, just coming on the NVIDIA deal, and that's really exciting. That sounds really exciting. Can you give us more clarity on what exactly are you going to be doing with NVIDIA? And is this going to service the larger Tata group? Can you give us a bit more color there?
We are actually, today crossing all the T's and dotting all the I's in terms of first getting the infra up, right? And even just getting the infra up, the kind of power consumption that these data centers need is of a very different order of magnitude that none of us in the industry have ever, done before. So that's the infra play that is happening. In parallel, we are in discussion with multiple, organizations, with the government, with enterprise customers, and I will also say within the, Tata Group as well, as to what are the potential use cases where, this can be used. Initially, to start with, I would say, Tamanna, a lot of effort, lot of the GPU usage will go on training the models. And then fine-tuning the models and then inferencing. So those are the three components of it. I think the training the models is where a humongous amount of computing power, networking power is all going to be used. And we're quite excited as to what that will unfold, and we will be positively surprised about the multiple use cases that we will do. So quite excited about it, and that's definitely the place where we would like to keep our investment antenna and prioritization up, as we get into the future.
Kabir, just one final question before we let you go. A lot of times companies move up a certain curve and then see a bit of a J-curve effect coming in on various aspects. You've seen that happening in your case on the quality of growth, the return ratios, etc. Do you reckon that as you do all these exciting things that you're doing over the course of the next 3 years, maybe you take your margins higher as well, but can the quality of your growth, which is the return ratios, move up even higher as the pace of revenue growth and margins also move up from where it is right now?
Neeraj, that's why I have given the guidance in a range, 23 to 25 EBITDA, greater than 25 for ROCE. And this is not cast in stone, as you rightly say. As the environment moves up, as the context move up, we will kind of re-establish all of these benchmarks, and we question that. And the last thing that I want in an organization like Tata Communications is complacency to set in. I am not going to sit back on my past laurels. We are going to keep challenging ourselves, keep challenging the status quo. And therefore, if we need to reset, of course we will reset. Because let's take the example of AI Cloud. If it demands a certain investment, for a certain period, and the returns will actually flow in later on, we're not going to be shy of making that investment. Equally, in mature businesses where I would need a return under a year, I know we're going to put the pressure to deliver that. So horses for courses here. It's not a democratic thing that everybody is going to get in one same way. Mature businesses are going to be treated differently. New sunrise businesses are going to be treated differently. Equally, certain assets where we had invested in the past and we are not delivering returns, they're going to be treated very, very differently.
Okay. Fair call, in line with what you had spoken to us earlier as well. But Kabir, all the best for the quarters ahead and for the year ahead. Thank you so much for speaking to us today on your quarterly and the annual numbers.
Thank you, Neeraj. Thank you, Tamanna.
That's Tata Communications. The stock is doing okay. We slip into a break and try and talk to another management where the stock is doing really well because they came out with a very strong pre-sales number of Q4. Brigade Enterprises management joining us on the other side. Stay tuned.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multi-modal.
right, you're watching India Market Open, and another sector and company that we're focusing on this morning is real estate and the Brigade Group. So they reported a 46% annual rise in their sales bookings to a record 6,013 crores. The pre-sales, in fact, for FY24 were about 2,243 crores, the highest ever for a quarter. So it's been a good quarter for Brigade. It's been a good year, actually, for Brigade as well, and the stock up 4% this morning as well. Nirupa Shankar, Joint MD of the Brigade Group, is joining us to just break down what's worked this quarter and how sustainable these kind of numbers are. Nirupa, great to have you on NDTV Profit and speak with you. Give us a sense of these numbers. When you're talking about these pre-sales bookings, what are they, where are they coming from?
Hi, good morning, Tamanna. Nice to be on NDTV Profit. Thanks for having me. Yes, it's been a very good year for the residential market as a whole, and Brigade as well has been able to cash in on the great market situation. The pre-sales numbers are primarily coming from our Bangalore launches. Bangalore currently contributes to a large percentage of our overall sales. So primarily it's coming from an end-user driven market like Bangalore.
Your realizations have also gone up, and you know, Bangalore, of course, is your biggest market. Your realizations have gone up. Can you give us an idea of whether this is largely end users coming in on the premium segment, and that's where the appetite is growing?
Yes, I think the market as a whole has been very good in terms of the consumer buoyancy and the consumer appetite for completed assets and new launches. So we've been able to increase our prices by almost 20% in the last year or so, just because the appetite is there and the demand is there. It is primarily end user driven. And there is demand for all sorts of real estate asset classes, whether it's plotted, whether it's mid-income, whether it's high-end apartments. I feel that any launch by a reputed developer with a good location, a good plan is able to sell well, and we've been able to make good of that market situation as well. Even high-end villas that I would say prior to COVID were pretty hard to sell. There were a very small percentage of people that would actually buy these high-end villas. But right now, even the high-end segment is doing extremely well. The average ticket size in Bangalore, I would say prior to COVID, used to be around 60 to 80 lakhs, maybe pushing up to even 1 CR. But I think now we're seeing the sweet spot for the Bangalore real estate market actually going much higher to at least 1.5 to 1.7 crores an apartment.
Yeah, okay. Nirupa, good morning, Neeraj here. So just wondering, is this sharp uptick also a result of the base that you would have been at in Q4, or do you reckon that this quantum might actually last? I mean, seasonal variances notwithstanding, for the better part of FY25 as well.
See, right now, all the economic factors point towards a positive year ahead. There's, of course, there are certain, if the underlying economic factors for India are very good, but, we can never say how the market will turn with all the macroeconomic conditions, right? Because various wars happening, there could be instability in other markets. We don't know how it will affect India. But from an India standpoint, all the economic principles seem to be going in our favor. And we expect that this buoyancy will continue in the next 1 year.
Point well taken. Well, in some sense, the quarterly update from Brigade on 50% growth YOY is not something that, it's easy to let go. And I think the markets are rewarding that. Nirupa, just a sense of what's happening non-residential as well, because residential, yes, you're doing well. I've seen some of these exchange updates that have come in from Brigade talking about some fairly interesting developments or acquisitions for future developments, which are not necessarily only residential. So talk to us about the non-residential side as well. What will happen in FY25? I think we've just...
Yeah.
Okay, no, we have her. Okay, Nirupa, can you hear me?
Okay, I'm not... I can hear you well, thank you.
Yeah.
Non-residential market is also doing extremely well. For instance, you've seen hospitality, retail, we're seeing decadal highs for these industries. The office absorption has also been good, contrary to what we see across the globe in the US or Europe, where there's a bit of gloom and doom when it comes to office. India has been quite resilient when it comes to the office market. In fact, Bangalore did almost 15 million square feet of office absorption last year. Chennai reached a decadal high of 10 million square feet last year. Hyderabad also reached 10 million square feet of office absorption last year. So we're seeing very healthy absorption even in the office space. And these three markets of Chennai, Hyderabad, and Bangalore account for at least 50% of overall India absorption. So office is doing very well. Hospitality, as you know, has been doing extremely well. We've seen the markets do extremely well. All portfolios are reaching good occupancies and good ARRs. Retail as well, the consumer story is good in terms of sales volume. We're seeing very high footfalls back into retail, and all segments seem to be doing well, whether it's family entertainment, department stores, athleisure, F&B, everything seems to be doing well.
Nirupa, just a sense of what the pipeline is looking like for FY25 in terms of projects. And a lot of your counterparts in the region are now spreading out and looking at a national footprint, going into new markets. Was wondering if that's something Brigade is looking at as well?
So yes, I think a lot of people have been expanding their footprint. I think we have always maintained that, we believe real estate is a very regional play. We'd like to focus on three major markets for us, which is Bangalore, Hyderabad, and Chennai. And that is our main focus as of now. We have a healthy pipeline of launches in at least these markets. And, we hope to capitalize on these three markets and enhance our market share in these three before we look to expand anywhere else.
Okay. And a sense of what that pipeline is looking like? What's on the anvil? Any details that you can share with us?
So, for launches, I can't give too many forward-looking statements because we're in our silent period.
Sure.
But I think, we're looking to launch at least 10 to 12 million square feet in the coming year.
Okay, 10 to 12 million square feet in the coming year. And, I think it's interesting. Thank you so much, Nirupa, for speaking with us. Nirupa Shankar, their joint MD of the Brigade Group.
Stellar performance, Tamanna.
Stellar performance. I also think it's interesting that, when everyone wants to be everywhere, this is a company that's saying this is our strong point. This is the market we know. And it's a fact. Real estate is a regional play. People go to developers they're comfortable with and names that they know. So interesting. Brigade doing well this morning. So it's the markets overall. Not a bad morning at all, I would say. Look at Vodafone and Indus Tower. That's what's catching my eye. FPO buzz has definitely moved Vodafone up about 3%, 3.5% expected after those marquee investors' names came in. But Indus Tower seems to have even a better morning with a 5.5% jump. HPCL, phenomenal this morning. Was up 5%, has come off to some extent from there. So HPCL doing one. Well, I'm wondering what an Angel One and Just Dial are doing, because they were completely sizzling on opening trade because of their numbers. Angel One's come off those highs. Still up about 2.5%, but yes, definitely not 8-9% like it was up top. Look at Just Dial on the other hand though. Just Dial up 13%, I think near the day's high if I'm not mistaken, up about over 1,000 rupees on the stock. So good morning overall.
Yeah, just a couple of things. ABB is down, and the Nomura downgrade on the valuations, bringing that stock a little bit lower. So after a while, we're seeing that big boy being down in trade. And Sun Pharma Advanced Research, I need to point that out yet again, a 5% lower circuit. This is probably the 8th or the 9th straight day that Spark is on a lower circuit. Just look at the chart for the last 10 days and you will see a slide, vertical slide downwards. It's been not a happy hunting ground for anybody who's been in Spark for the last 10 days at the very least. But with that, it's a wrap on this leg of India Market Open from Tamanna, me and the team that put this show together. Thanks so much for watching. But up next, you can't afford to miss this, a very special conversation with three eminent experts, Nilesh Shah of Kotak Mahindra AMC, Hiren Ved of Alchemy, and Mark Matthews of Julius Baer on election markets and what this mandate could mean for risk assets.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to...
Thanks so much for tuning into this very special conversation of Markets Mandate. Over the course of the next few weeks, we are going to be dissecting what could the possible ramifications of the election verdict be on markets, economy, and more. On this leg, we're going to talk about the equity markets and risk assets and what could there be in store over the course of the next, let's say, 5 weeks and the next 5 years as the new government gets sworn in. And to talk about this, we have with us three very esteemed gentlemen. They look at equity markets through various cycles and various elections, both globally and locally. Mr. Nilesh Shah, Mr. Hiren Ved, and Mr. Mark Matthews. Gentlemen, all of you, thank you so much for taking the time out and being with us. Nilesh bhai, can I start off with you? It's a big verdict of sorts, even though some people will argue that the verdict came in as early as December, and this is merely a formality of who gets elected. I would love to think about how are you thinking about the election from one, what could happen in the near term, yes, and two, what would be a 5-year, 10-year ramification of the new government coming in?
So today India is one of the most expensive or highly valued market in the peer group. And that confidence to pay higher valuation comes from the fact that everyone believes India will be the fastest growing major economy. And more importantly, economic growth will also convert into profitability growth for corporate India, unlike in many other parts of the world where economic growth didn't translate into corporate profit growth. So the base fundamental for the market in terms of expectation from the government is to continue faster growth, continue higher corporate profitability growth, and continue best governance.
Got it. Okay. And in that, I mean, the conversations can vary from what could happen to the policies that have been continuing with an assumption that the current dispensation comes back to power, and what could be the newer things that could come into place as well, innovative things that could come into play as well. Are there hopes that you're penciling in on either of the two ends, Nilesh bhai?
Undoubtedly, keep on doing the good work like fiscal prudence, like out-of-box thinking, which we saw during COVID time, and also keep on improving on things which have not been attempted so far. For example, farm law reforms, for example, rationalization of subsidies, for example, focus on manufacturing growth. Essentially, if we have to summarize India's challenges in one line, about 10 to 15 crore people are working in agriculture. If they're removed from agriculture, I doubt there will be any material impact on output. But if they are employed in services or manufacturing, our growth orbit can change. Now, this can't be achieved overnight, but is there a roadmap to achieve this? Faster growth, better governance, and higher corporate profitability. These are the trico on which markets will be evaluating government's next steps.
Okay, now I have a question. Mark Matthews may not exactly understand up ki bar, 400 par, but Mark, what I'm trying to ask Hiren Ved and then to you is that will the extent of the victory make a difference? Up ki bar, 400 par, Mark Matthews means can the BJP or the NDA go over 400 seats this time? So Hiren, can I come to you? Will up ki bar, 400 par matter, or will the markets be happy with the majority government coming into play, enacting the policies the way markets would want them to?
It's quite interesting. I think this government coming with a comfortable majority should do it. But maybe in the short run, because to use our stock market or corporate language, there is a forward guidance which was given by the Prime Minister of 360 for the BJP and 400 for the NDA. Certainly, these are the two numbers that everybody will look out for. Again, predicting elections and seats is a science in itself. I don't think I'm qualified to do that. Only thing that I would say is that if somebody of the stature of the Prime Minister has mentioned these numbers at the floor of the House, I'm sure that there is a lot of confidence and backing in their calculations for him to kind of give a number like that. But is it going to be like earth-shattering if they get 380 or, it could well be 420? I really don't think so. I think as long as they get a comfortable majority, I think the willingness to do what they want to do is there, and there should be a fair continuation of policy.
Okay. And Hiren, would the fair continuation of policy be good enough for our markets to sustain the valuations? And then I'm going to go to the relative valuation question with Mark. But to you, in absolute terms, we are not cheap, yes. But is that good enough to validate the valuations? Because then the markets will believe that there is policy continuity, hopefully no disruption to the earning growth trajectory that India has had. Will that be good enough?
So, all things being equal, I think when you do good work, right, there is some immediate impact, but there is also a far-reaching cumulative impact that kicks in, right? So I think, for example, what we are seeing in GST revenues today is a result of formalization of the economy and better compliance that has not achieved one shot, but it has happened over a period of time. So my sense is that the continuity itself should create a certain momentum, right? So for example, a lot of private sector capex programs and projects, I think will continue to unfold. Question is, what else can this new government do, which is an unfinished agenda? That can only add plus to the growth. Having said that, the thing about earnings is that sometimes it's nothing to do with the policy, right? Because let's take the example of fiscal 22-23. So for example, when the Russia-Ukraine war broke out, commodity prices rallied, and companies which use commodities saw a hit on their EBITDA margins, right? And obviously earnings for the broader market got impacted for a while.
And all of that reversed in 23-24 as commodity prices normalized and logistics costs normalized. So sometimes in the short run, you can't correlate what happens to earnings in a particular year to just what the government policy or reforms is, right? Because sometimes some reforms take a lot of time, and how they get realized into corporate profitability is a completely different mathematics altogether.
Yeah, point well taken. Point well taken. Okay, Mark, coming on this, I mean, there is this belief that there is policy continuity, government continuity, so on and so forth. How are you, sitting from where you are perched, look at what the global view would be on the election season in India and the outcome thereof?
Well, the first thing I'd say is I don't think it's particularly important, because unlike, say, 20 years ago, foreigners don't move the market anymore. That's patently obvious in the way the market has performed in the last couple of years, despite foreign net selling. Now, to answer your question, I don't think foreigners do look at Indian politics very closely, because they're complicated and it's hard to understand them. What they know is that this is a pro-business government that has enacted some really deep structural reforms, which are unusual to do in a democracy, because they cause short-term pain, and that's the way you usually get voted out of office. So I would say they recognize the good work that's been done. I don't think many of them know about the potential for further reform. They're just happy with what's been done, and I think they feel that the momentum from the reform that's already been enacted and the plans, with the railroads and electrification and internet and all those other things, there's still so much room to do good work in those areas. And so, long-winded answer, I don't think foreigners are spending that much time looking at Indian politics, but I also don't think that foreigners are the movers of this market anymore anyway.
Yeah, no, that's a fair point. And just before we take that break though, Mark, the consistent opinion that we've gotten from everybody that FIIs are probably waiting for the election outcome to happen before they commit more money. You are saying that is not the case, to your mind?
Yes, I don't think they are paying much attention to it. Indians are always so preoccupied with the budget, for example. I can tell you no foreigner cares about it. Sorry.
Yeah, the budget, I completely agree, but I thought the election was a different kettle of fish altogether, Mark. You completely decrying that. Interesting thoughts. Okay, so we will come back, but while we are trying to talk about the markets mandate and what policy could mean like, we need to slip into a quick break, Mark, come back and try and talk about policy and what it could do as well, because I'm sure that is something that some of the foreigners might be looking at, and earnings growth, of course, where India is kind of scored. Stay on, all of you. We'll be back in just a very short break from now and continue this conversation on markets mandate.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly.
Back with this very special show, Markets Mandate. We are trying to piece together what it would mean for the markets once the election verdict is known. Mark Matthews, our global guest, is saying that, hey, foreigners are not quite particularly perturbed by what could happen. So he's kind of killed the show already, but we'll still try and do the next segment to try and just understand what should people still be focusing on per se. Now, Nilesh bhai, come to you. For the retail investor, as you and Hiren were saying before the show as well, has probably laid out the ground any which ways that we are disciplined, we are staying put, and therefore, if we've stayed invested in Indian markets, the election verdict hasn't mattered. The skeptic would argue it's not mattered because there has been policy continuing in 2019, and maybe there will be policy continuing in 2024. What, to your mind, would be the most important things that you would want to be seen from the new government if you are indeed investing for the next 5 years? As you keep on saying, that if people are investing in mutual funds as well, don't invest for 1 year or 2 years or 3 years, invest for at the very least 5 years.
So one, do everything possible to sustain growth. We are now growing between mid-single digit to high single digit. Can we aim to take it to double digit? How do you create accelerated growth? One, you have to invest. Please encourage private entrepreneurs to invest just like government is investing. Second, can we improve the productivity of investment? Today, Gokhale Bridge in Andheri. It's just an example of how unproductive we are. We have to remove unproductivity and become more productive. Third, this investment needs to be funded. While there is enough global capital available, can we allocate our domestic resources properly? Between FY21 to FY23, Indian savers put 4 lakh crore in mutual fund approximately. But they have put 9 lakh crore in currency notes. Currency notes does not give any return. Why are people investing in currency notes when equity markets would have given 100% plus return? So we have to also improve allocation of our savings. Finally, there is ease of doing business, ease of doing investment. Today, from top-down basis, India is doing wonderful work in getting, let's say, someone like Elon Musk and Tesla. Fair enough. We also have to ensure that our local Elon Musk and Tesla is also encouraged. So how do we sustain this high growth? We are the fastest growing major economy, but let's not be happy with that. Let's target double-digit growth.
Okay, well, cross fingers for that. Mark, would it take double-digit growth for further interest to come in from the global diaspora? Because the headlines are very strong, right, in India. Apple being one of the largest production hubs now, starting to emerge as one of the largest production hubs, 1 out of every 7 phones made in India. Elon Musk and Tesla coming to India. A bunch of others have already come in. The global gatherings, when they happen, everybody talks about setting up the next plant in India. What is it that you would want to see?
Well, just answer the first part of the question first. I think that the issue with India is the asset class it is located within. Emerging markets has been a pariah essentially for 15 years. And that could change, but I think there's no sign of it changing yet. And there are 2 forces that have caused this. The first is the digitalization of the world economy, sort of starting with the introduction of the iPhone, was massively proportionately beneficial to the US stock market. And the second thing is that China has dragged down the emerging market asset class, and a lot of people who look at these things from afar aren't really able to make distinctions between even something like India and China. They just group them all as one big emerging market asset class. So even if India, starts to do things that are even better and different from what it's done before, unless you're an emerging market specialist fund manager, and there are a few of those, but not many anymore, you probably won't even notice it. So sorry to sort of put a downer on it, but I'm just trying to give you the perspective that I think exists in general among, for lack of a better word, global investors. And right now it's still very biased toward big cap technology in the United States.
Well, that's a point well taken. I mean, Mark, we love the downers because it's good to get a reality check all the time, and therefore it really appreciate this frankness. But he didn't come in. I mean, because there is this whole conversation, right, that Indian money managers are now. Could they be started to be seen as ex-China EM fund managers as well if they are globally managing such stuff? And when people like you going to global funds to get in money into India, is there a wider acceptance than what it was? Mark is right. There still needs a long way to go. But can what's happening in the policy continuity and the earnings growth in India lead to that change sooner rather than later? What's your sense there?
So I think, one has always grappled with, first of all, there is no one homogeneous foreign investor, right? There are ETFs, then there are India dedicated managers, there are global managers who allocate to India, so on and so forth. And each has a certain objective in place. I think beyond the point, as long as India continues to perform, it will be very difficult for anybody to ignore us, right? It's like any company or a stock or a sector, for example. If it continues to perform and if you don't have exposure, you're forced to look at it. I mean, to say that, okay, we will change weights in the index and, the foreigners need to look at India with this perspective, I think all of that is fine. I mean, that will, the structure of global capital cannot be changed overnight. I think we have to do what is required, and I think if we continue to perform, global capital will come in. I think one of the other things is that just ease of doing business and continuity in tax policy is very important to attract foreign capital. I think if we continue to work on that, and a lot of work has been done, but I think if we continue our work on just reducing the compliance cost versus not at the cost of quality compliance, but just reducing the compliance cost and changes that we keep doing, I think that itself can bring in a lot of capital, if you ask me.
Got it. The manifesto, Hiren, as it came out, spoke about a few promises, some which were present continuous and some which are futuristic in nature as well. Did you find something which was wherein you would want to see some more moves done and which could actually be really attractive? Because there are a lot of pockets where India still has some room to go before it catches up with the globe. I mean, particularly AI, which is, well, maybe some time away, but even others.
So I think, I have no doubt that in areas of AI and stuff like that, I think, Indian services companies are very smart. They will catch up. Again, 2-3 areas, and since you mentioned AI and since we've been talking about renewables and EV, I think one thing which has struck us again and again is that rather than relying on duties and quantitative or otherwise restrictions on trade, we need to have huge investments in R&D. And just like we had the PLI scheme by the government, I think there should be some sort of a incentive for Indian companies to spend on R&D across the board, whether it is our educational institutions, our research institutions, or private, right? Because if you truly want to be competitive, then you have to spend on R&D. So I think, yes, manufacturing without R&D is just a cost arbitrage play or a supply chain arbitrage play. If we really aim to grow at a sustainable pace and become leaders in certain areas, I think we need to do a lot more on R&D. Obviously, physical infrastructure, I think they've said it very clearly, they will keep on doubling down. But some of the softer aspects, right? So reforms in the judiciary, for example, it shouldn't take 5 years for a commercial case to get solved. I mean, that itself can be a big enabler for private and foreign investments to come in, right? So I think we should now aim, while we continue to do the hard work that we have done in terms of building physical infrastructure and more of the infrastructure and make in India, but I think it's now time to look at some of the more aspirational aspects which are more foundational, like R&D spending on healthcare, judicial reforms. I mean, stuff like that will really go a long way.
Okay. Well, last two questions. I'll end with Nilesh Bhai, but before that, Mark, to you, the final question to you really, and which is, what would you have see the policymakers do? I mean, for the longest time it was that should there be steadiness in taxation, and could there be policy continuity there? Then there was this ease of doing business, which has been long argued. We've traveled some distance, still some more to go, I'm sure. What is it that you would or your clients would have India do in order to keep it or make it more attractive than what it is currently?
Well, I'll tell you something very boring because you've heard it a million times, but judicial reform, which was just mentioned, because that would certainly make the ease of doing business better. Agricultural Act, bring those back, that would make huge strides in reducing inefficiencies in the food sector. And then land reform, so that land which is not being used efficiently can be used efficiently. There's so much land in India that's in that situation, and the labor reform, and it sounds horrible, but make it easier to let people go for companies that employ more than 300 people. And so I'm just telling you what you already know, but those are, to me, the four big things.
Okay, Mark, and just to follow up there, I'm just repeating this for sake of a better argument or for sake of an argument. I heard you say that elections will not make as much of a difference to flows per se. So you are saying that even if the mandate is as the market believes, and that's one hump out of the way, that is not the necessary and the sufficient condition to bring in foreign flows. Other things have to work out, including the EM characterization or rates, for that to happen.
Yes, I mean, I'm not saying that's the correct, I'm not saying that's right, but I'm just saying that's reality. That really, to get India back on radar screens in a big way, you'd have to have a major trend change in the performance of emerging markets versus developed markets. And it could happen. It used to happen approximately once every decade. You'd have emerging outperform developed, and then developed would outperform emerging, and et cetera, back and forth. That was happening basically from the 80s up until, I would say, 2007, 2008. Since then, there's just been one massive streak of underperformance of emerging versus developed. So if we can get that to change, for sure, people will want to allocate back into emerging, and I think India would be right at the top of their list. But so far, you have not seen that trend change.
It was interesting. I was looking, Nilesh, at this note from CLSA, which was talking about how while Korea takes the cake for the best EPS growth for the next 2 years, for the consistency, somehow India probably gets rewarded the most, and that's why the multiples are so high. Final question to you, Nilesh Bhai. We've discussed some things that should be wanted, etc., and stuff like that. Assuming that the government does what it has done in the last 5 years, let's say you give the first 5 years for just formation, but the last 5 years there have been policy moves, etc. Assuming it's more of the same, because it is a difficult thing to get things going as well per se in India, do you think that's conducive enough for flows and earnings growth to keep market multiples where they are, or would you hope for something more?
So we get market multiples which are better than others, not only because we are doing well, but because others are also scoring self goals. For example, you talked about Korea. Now there is a 60% inheritance tax in Korea. There's no incentive for Korean entrepreneurs to ensure higher market cap. There's very, very relaxed related party transactions in Korea. There's virtually no difference between a listed company and unlisted company of the entrepreneur. As long as they score self-goal on corporate governance and we do well on corporate governance, we'll get this valuation. The work done by the government is good enough to sustain this valuation in that paradigm. But if others starts correcting their self-goals and they start copying us, then we need to raise the tempo and we should be looking at going double-digit growth. And that's not necessarily just for investors, but it is just to continue this journey in our Amrit Kal to become Viksit Bharat. If we grow at mid-single digit, high single digit, we will become Viksit Bharat surely, but much later than expected. If we raise the tempo to double digit, then we'll reach Viksit Bharat much earlier.
Well, if somebody's got the ear of the people who matter, the man who just gave the answer does. But gentlemen, all of you, thank you so much for taking the time out and being with us on this show and giving us your thoughts. Mark, all the way from Singapore, thank you so much for joining in. And Hiren and Nilesh Bhai, in our studios, special having you. Thank you so much for being here today.
Thank you.
And viewers, thanks for tuning in to this broadcast.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use
Markets lose early gains to trade flat. The Sensex trades below 73,000, while the Nifty falls below 22,200. Barring healthcare and FMCG, all sectors trade in the green. And Vodafone continues its upward journey as India's biggest FPO opens today for the public. Global controversy sparks as Nestle adds sugar to baby cereals sold in India but not in Europe and UK. Company says it has cut added sugar over the past few years. And more earnings on our radar today. IT major Infosys, Bajaj Auto and HDFC Life will report earnings through the day. And stage is all set for India's biggest event, 2024 Lok Sabha elections. Polling starts tomorrow. Hello and welcome. This is Samina Nalwala and Agam joining you today on the F&O show. While the markets opened in positive territory, we're off the day's high point and now trading marginally lower on the index, with the Nifty trading below 22,200. Agam, it's been 3 days of losses, and today was expected to be a little bit of a dead cat bounce, if nothing. But even that little bit of a pullback has got sold into again. So clearly there is some pressure despite positive global cues.
You're right, Samina, and that's exactly how things are panning out right now when it comes to the equity markets. And of course, along with that, we have a lot of pressure as far as derivatives are concerned too. And while we have seen that weakness over the course of the last 3 to 4 sessions, today, as one might suggest, that there's been a little bit of consolidation, but with a negative bias at the moment. Of course, even though the Nifty is currently marginally in the green, your futures are in the red right now. And when you consider something like the Bank Nifty, again, flat. And I reckon that the markets are perhaps taking a little bit of a breather, and underneath there could potentially be some chop and churn, some rotation going on, which is why we are looking at at least the major benchmarks taking just a little bit of a break at the moment, considering its direction. Not to forget that we'll start looking at an increasing number of larger companies coming out with their earnings over the course of the next few days, and that will certainly determine the direction which the Nifty wants to or intends to take from here on. But for now, of course, we're holding on to 22,200. Of course, we're tad below that mark today, but yeah, that's the mark that we're keeping an eye on. And a lot of analysts have also suggested that while 22,000 is the psychological level to keep an eye on, eventually in the long run it is going to be 21,800, which is going to be a very, very important level, important zone, and beyond which we could expect the Nifty to further weaken. But for now, we're holding on to 22,000, in fact still very close to 22,200, and that perhaps at least some bulls will find some solace in. That said, it comes to the Bank Nifty, again flat, but holding on to 47,500, and that again is the big positive here. Let's talk about futures. Let's see how things are panning out there. Remember, Tuesday we did see unwinding in the respective futures. Today we're not seeing any traction at all, and perhaps on expected lines because of the uncertainty with respect to where we could see the Nifty direction coming through. As far as the Bank Nifty is concerned, I reckon the picture was a bit different. In fact, we are looking at an increase in open interest towards 4%, and even as the underlying remains flat at the moment. But of course, as I mentioned, that the spot is currently above the mark of 47,500. So you never know how things could pan out here. But let's move on and talk about the other factors and options market specifically at the moment. So we did see a lot of accumulation around 22,200 last Tuesday. And I reckon that a lot of traders took that as an opportunity to perhaps go and sell those straddles going in. And perhaps that is what's playing out today as well. But of course, today is also the Nifty weekly options expiry. And you never know, you may have sharp movements which could in fact force traders to take out either those calls or put side. But the question is that will that big spike come in today's day of trade? And of course, in the relatively longer period, we are of course keeping an eye on 22,700 and thereabouts on the higher end, and as I mentioned earlier, we are keeping an eye on 21,800 on the lower end of the spectrum. And with the Bank Nifty as well, the picture isn't very different, but I reckon that 48,000 once again would be a crucial mark to keep an eye on as we move into the next week's expiry. And of course, we on the lower end, we'll continue to keep an eye on that. The other round figure, that would be 47,000. But all in all, it does look like it's a day of a breather for the Nifty, and it's a wait and watch, Samina, whether or not we do see volatility towards the end of this weekly options expiry for the Nifty.
It is going to be volatile, and we've got 3 Nifty companies as well that report earnings today. Across the broader markets, so there is action and very interesting pockets, right? So you've got OMCs that are doing relatively better than the street on back of lower crude prices, trading activities, what we're seeing on back of earnings. Stocks like Just Dial Tata Communication are reacting to their numbers. I'll add Angel One to that list as well. All those counters in focus this morning. Vodafone FPO is the big story, and that is seeing a 3% up move in today's trade. So lots of stock-specific trade. Stocks like Brigade and Suntech are doing well on better than expected or record pre-sale numbers for the quarter. So there is action. Defense names like HAL continue to move upward as well. But Ajit and Amar both join in with their calls on the market. Ajit, I'll start with you. On the index, we did expect it to be a slightly longer dead cat bounce, but from the look of it, any gain on the street is getting sold into. If you had to trade the Nifty, firstly, would you trade the Nifty? And if yes, what would the strategy be?
Yeah, good morning, Samina. So, Samina, as you rightly mentioned that after this 3 days of successive decline, we were hoping that there could be a bit of a beater. And initially, we saw that the market opened on a positive note, but now again, a selling pressure at the higher levels is capping the upside. But the good part is, Samina, if we see that in the last 4 months, we are seeing a similar kind of a trend. So we have seen Nifty inching towards 22,200 earlier and again retracing to 21,200 zone. Similarly, that last in the month of March, we made a high around 22,500 and then we retraced to 21,800. This is a similar kind of move that we are seeing. The pace of rise and decline, it's almost similar, but the good part is that we are still maintaining the uptrend. Another important aspect that though we have breached the short-term moving average 20 EMA on the daily chart, 50 EMA is something that we are still holding to. And last time in the month of March, we have tested that zone in the entire last 5-6 months. And we've respected that level and rebounded and made a new record high. So I feel that this zone, 22,000, 22,100 is a zone where market may respect and will see a recovery towards 22,352, 500 zone in the coming days. So for the intraday, I would recommend, because we are seeing a substantial tussle around 22,200 mark. So wait if you get any opportunity towards, let's say, 22,100 zone to go long in. We'll stop at 22,000 and then positionally you can hold it for 22,350. Banking also trading on a similar line, but it's comparatively better because we have not seen any, major slide to the 20 EMA. We are currently hovering around the same. So 47,500 is likely to hold, but since we are seeing volatile swings within the banking majors also, I feel Nifty looks comparatively better if somebody is planning any trade on the index front.
Okay. Let's get in Amar into the conversation as well. Good morning to you. What's your stance on the key benchmarks at the moment, Amar?
Yeah, I would say that if you look at the key benchmarks, they have been clearly in a selling mode over the last few trading sessions. And also, if we look at the derivatives data for today, we see that there is some sort of bearishness both in terms of the OI and also in terms of the, I would say, the put call ratio. However, for the current expiry, that is today, we are seeing at 0.7. So that shows that there could be a bounce back because technically Nifty is at very strong support levels. So 21,150, 21,100, those are very crucial support zones. Or on the upside towards 22,250, 22,300, that's the zone of resistance. So it's more of a range play in Nifty. If you look at the major constituents of Nifty, what we are seeing is that there is a long build-up happening in some of the stocks. Like for example, but that's very marginal in terms of SBI, in terms of TCS, in terms of I would say HDFC from a 15 minutes perspective. So some of the stocks or heavyweights in the Nifty index, they point that there could be some pullback in Nifty, but it's going to be more of a tussle between the bulls and the bears. Short-term trend remains bearish, but we could witness some pullback because Nifty is at very crucial support zone. So any correction can be a buying opportunity, but you need to remember that it's more of a trading range, 21,100, 22,100 and 22,300. That's the range where short-term immediate range for Nifty.
Right. That's the call coming in on the index. Ajit, two indexes, Bank Nifty, and I want to also get your view on the IT index because that was reeling under tremendous selling pressure on Tuesday, and this morning too there's not much of relief coming there. So IT and Bank Nifty, what are the trades there?
So Bank Nifty, Samina, as we discussed earlier, that it's comparatively better because we are still trying to hold 20 EMA on the daily chart after this retracement from 49,000 mark. But since the trend is mixed within the private banking majors, it's difficult to take any decisive call that are we going to test 48,000 mark first, or we might retest 47,000 zone in the coming session. So for a time being now, I feel that one should wait and let this index stabilize above, let's say, 47,700 for any decisive sign of recovery towards 48,000, 48,400 levels. IT, as you've rightly mentioned, yes, it's struggling. In fact, post TCS numbers, after the initial uptick, we were seeing all the IT majors and select mid-cap names also reeling under pressure. The IT index has already slipped below the long-term averages. That is the 200 days of exponential moving average on the daily chart. It's not a good sign. But the good part is that if you see it on a longer time frame, then it shows that closer to around 33,000, 33,200 zone, we have multiple supports. Plus, if you look at the IT majors like TCS, Infosys, they are closer to their weekly and monthly support areas. So there could be a bit of a further correction. Especially we have Infosys results scheduled today. 1350 to 1300 is the zone basically, which is what we are eyeing in Infosys in today's session. It's already down by around 5% in this week so far. So I feel that it's going to be likely to be a sideways to negative tone, at least in the near future, is what charts are indicating.
Right. And of course, along with Infosys, as Ajit already mentioned, which is going to announce its earnings later on after market hours today, tomorrow we're going to have earnings from Wipro. These are two of the relatively larger companies in IT, and TCS, of course, is behind us at the moment. But, considering Infosys and TCS, well, that should perhaps set the tone for the kind of trends that we can in fact expect from the Nifty IT as we move into the next few days. And maybe Monday, of course, we will have an absolute clear picture as to where the Nifty IT wants to go. That said, very quickly, I want to address one of the stocks which continues to make a new life high from the futures and options space, and that's Hindustan Aeronautics. Let's pull that up. I'm going to very quickly take Amar's view on this one. Now, this one is continuing to move upwards around 3,700 rupees per share, 3,750 nearly, as far as its underlying is concerned. Amar, there's no stopping this one, and I reckon, investors and traders, for that matter, who are already into this particular stock, what would your recommendation be? And two, would you recommend a fresh entry at this level?
Yeah, I would say that this HCL is definitely having a dream rally, and the way the stock has rallied significantly after consolidating around the 3,000, 3,100 levels. So the stock is up by almost 20% from those levels, and there is still no signs of stopping the strong momentum, because on the daily charts, on the long-term charts, even on the intermediate term trend, the stock did correct, but that was more of a buying opportunity. So one needs to remember that this is one stock where the long-term structure is very strong, and there's no signs of, some of the indicators do point towards overheating in the particular stock, but the trend, there's no trend change. So any pullback is a buying opportunity. At the current levels, the basic question is that the risk-reward ratio, how favorable that would be. So that's one major question which could put off investors entering at the current levels. But this is one stock one should definitely keep on one's radar. And any pullback is a buying opportunity. The levels, very strong levels for support, come around 3,200, 3,300 levels. On the upside, the way the stock is on an up move and seeing the other sort of data in terms of delivery quantity and volumes, the stock could head higher towards the 4,000 mark.
In fact, it's been a one-way journey for HAL. It's gone all the way from 3,100 to close to 3,800 over the last couple of weeks, 6 weeks to be precise. So looking really, really solid for the stock. Along with that, it's also BDL, Masgao Dogs, BEL that have all been seeing some upward, very, very sharp upward moves. The defense index is up 14% versus the Nifty, which is up only 2%. So that's the kind of euphoria that we are seeing, or exuberance that is obvious in some of these defense names. Ajit, you want to tell us what your top trades are, or your top stock picks are this morning?
Yes, Amina. So, despite the negativity that we are seeing in the index, certain pockets are holding very strong. And one such name that we have from the NBFC basket is AB Capitals. So, of late, the stock has reclaimed its 52-week high. In fact, we have a fresh breakout from a consolidation range. Despite the all volatility, we are seeing that stock is holding around the same zone and inching higher, in fact. So, 214 is what we are eyeing in the near future. So, we'll stop at 202. One can go long in AB Capital. Another name that we like from the auto space is M&M. So the auto pack, in fact, has done exceptionally well alongside with the other names like Maruti, Tata Motors, TVS. But M&M, the good part is that we are not seeing any participation during the corrective phase. So this further adds to the confirmation that in case if there'll be any recovery or rebound in the market, it might outperform the pairs. So 2120 is what we are eyeing in M&M at current levels, with stop at 2225.
Right. That's the call coming in on Ajit's picks. And of course, we've also got Amar's stock recommendations. We'll take a break on that note. But just before that, actually, Amar, you want to come in? You talked to us about what you think about HAL. But in terms of stock-specific trades that you're recommending this morning?
Yeah, I would say Indus Towers is one stock one can definitely keep a watch on, because the stock continues to remain very strong on the long-term, intermediate-term trend, short-term trend as well. And if we go back in time, we see that the stock has taken out a crucial resistance, which was earlier around the 340 levels or so. So that has been taken out. So 330, 340 zone, that was a major zone of resistance that's been taken out. So this is one stock one can definitely look at. The upside target from a short-term perspective would be around 365, 370 levels, whereas the stop loss needs to be below 331. And the second stock to look at is GAIL. This is again one stock which is extremely strong on the charts. If you look at from a monthly perspective, the stock has generated significant returns in this month itself. Almost, I would say, it's been significant in terms of returns. So that's around 15%. So this is one stock one can look at. Any pullback is a buying opportunity with a target of 218 on the upside and a stop loss of 205.
Okay, well, on that note, it's time to conclude this segment. Taking a moment to thank both our experts, Ajit and Amar, for joining us and taking us through their views on, well, the key indices and, of course, giving us a handful of trading ideas as well. We slip into a short break, and on the other side, we get you all the updates from the commodity space. Stay tuned in.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting.
Welcome back. You're watching the FNO show. There are lots of stock-specific ideas that are driving today's trade, but the broader markets and the benchmark seeming to be indicating to a negative trading bias. So not really much of a dead cat bounce. After 3 days of weakness in the trade, the Nifty continues to reel under 22,200. Interesting trade across commodities as well. So with the rising geopolitical tension, you'd have imagined that crude prices have moved higher, but on back of a rise in US crude inventories, crude prices are actually trading lower. Gold continues to be in a shining spot on back of rising risk aversion. But we've got to the Chintan Mehta, CEO of Aban's Holding, joining in to talk to us about his top trades across the commodity universe. Chintan, I'm going to start with crude. There is a little bit of weakness that we're seeing on crude prices on back of a rise in US inventories. Do you think this makes it a good time or a good opportunity to buy crude at current prices from a short-term perspective, maybe a couple of weeks to a couple of months?
No, I don't think so that it's good to buy crude at the current level. If you see around that, because of all geopolitical tension and Middle East tension, it has risen in Indian terms to 7,100 level, and from it has retraced to 6,900 odd level. And and everything is priced in this price, So when US is giving the maximum amount of output in the history for the crude, so inventory will get piled up, as we can see. So I guess there can be a lot of profit booking comes, and around 6,500 to 6,600 on MCX level, it can be a good buy. Even if you see on the spread side, next month is running at the discount of the current month. We at A-Banks analyze the FNO and the trend data, and as per that, we see that 6,500, 6,600 is the level to buy, and we can refrain from adding here. In fact, one can short sell with the short-term view.
So that's as far as crude's concerned. Chintan, coming on gold as well. What's your assessment here?
See, if you see gold, it has touched briefly 2,400 on a spot side in international market, and Indian side it has touched more than 74,000. In India on MCX it is already a discount, but we see a good physical demand at A-bands. So what we may try to say is that people have started accepting the rate of more than 70,000 in India and China. China is running at somewhere around premium of $40 from very long time. So we see that people have started accepting the price of gold at the current level, and with the prediction of major American banks toward $3,000, it seems that it can go up from here. But I guess momentum wise it has rallied a much, around 18 to 20% of straight move. It can hold here or it can take little bit of correction from here. Everything is priced in here, whatever is happening in Israel and Gaza and everything. So unless and until something new reason which comes in, gold I think will pause. As Mr. Powell also suggested, they are okay to hold the rate for a really long time and will wait for the better CPI and the inflation data before they start reducing the rate. So as per my suggestion, one should not add gold here. If somebody has bought at the lower level, should book profit and wait for the little lower level. International market somewhere around 2180 to 2200, and 2300 itself is a very good support, but one should not add here.
Very quickly, you've talked to us about gold. What about silver? Is there a trade there?
No, silver, see, if you see in Indian market on MCX, it is running a discount of somewhere around 5,000 rupees from the international import price, So it has touched the high of 93,000, 94,000 already in Indian terms. It has not come on MCX because it was at 7,000 rupees discount from international market. What it suggests is that Indian consumer is not okay purchasing at the current level of silver. India is the largest consumer of silver, So even though it's an industrial metal, it requires that the solar and the solar panels as well as the space science. But I think rally is overdone and it might take pause. It will follow gold and it will outperform gold. But I think one should be restrained from adding at the current level. One should wait for the level of somewhere around 78 to 80,000 on the MCX, and then one can look upon for the fresh rally.
And then a final question, among commodities, which of these stand out for you in terms of, a good trade to take at this point in time?
As per my understanding, base metals were, highly discounted about the US recession. So if there is a soft landing, which people are pricing in, that is why we can see a rally. And out of base metal, I see aluminium outperform the other metals because it is short. It is a very short of stocks. If you see the LME, it is already contango is gone. And we at A-Bench, we see a lot of physical demand even at the level of 220 to 225. So I see with the minor correction, it can still go up very much. So my bet, if someone wants to trade commodity, so like a dollar short basically, so I think aluminium is the perfect bet to play.
Right. Well, thanks for that, Chintan. That's the verdict coming in on the commodity universe, whether there's a trade or not. Chintan, I don't know whether we have time, but okay, I guess we're out of time. But we next time, of course, talk to you about, actually, very quick 20-second answer. Dollar-rupee pair, is that a trade?
Dollar rupee, I think currently at the lowest level, and I see RBI is holding at this level, so I don't see any trade here. 83 would be a good support, and 83.50 to 83.60 would be a good level where RBI will look into sell, as they are comfortable in their investment holding of dollars here.
Okay, all right, Chintan, we'll leave it at that. Thank you so much for joining us and taking us through your views on the several commodities as well as the USD INR pair. Of course, there's lots more lined up. So with that, it's a wrap on this show of futures and options. But stay tuned in and we'll be back in just a bit.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean baby.
Welcome, you're watching the Small and Mid Cap Show. I'm Mahima Vajrajani. Well, we're going to speak to two very interesting managements today, Just Dial and the other one is Steel Strips. Now, before we move on to that, let's take a quick check on how the markets are panning out to be. In terms of the benchmark indices, if we can put up the Nifty 50 chart, The Nifty has been trading pretty flat today. At present also it's up around 0.2%. In terms of top gainers on the Nifty, we have Power Grid, BPCL, Adani Ports, HDFC Life Insurance. But if we can pull up the Nifty contributors, let's check what is pulling up the Nifty and what is pulling down the Nifty. There you go. Nestle, after the news of having sugar in the infant food that they put in, Nestle is pulling down Nifty by around 10 odd points. Then we have Axis Bank, ITC, HCL Tech. Something that's pulling the Nifty up include L&T, Power Grid, Bharti Airtel. In terms of Sensex, well, Sensex also did open on a flattish note, currently trading in a range of around 400 odd points, around 260 points away now from its day's highs, up around 0.1%. In terms of the broader markets, mid cap 100, if we see, it's around 0.7% higher, and the stocks that are pulling the Nifty mid cap up include something like an Indus Tower, Timken, HPCL and Linde. Now there you go, Indus Towers, it's up around 5.3%, Timken up around 6.13%, HPCL if you can see 4.67%, and Linde if you can see 3.8%. Now in terms of small cap 250, small cap 250 is outperforming all the indices as the trend has been so far since so many days. It's up around 0.9%, about to touch the 1% mark. In terms of stocks that are pulling the small cap 250 today include Just Dial. Now Just Dial did come out with its Q4 results where the net profits have grown by 26%. There you go, it's up around 8%, 9%, and it did touch an intraday high of almost 10%. There is something like Brigade, which is also up and above in trade today. If you can pull up the Brigade chart, there you go, 5% up in trade. Amara Raja has been extending its gains from Tuesday. It's up around 5.56%. We also have something like a CAMS today, which is up in trade. It's also trading high. There you go, 5%. Now, in terms of the sectors, if we can pull up the sector charts, the sectors today, the top gainers include Nifty Media and Nifty Metal. There you go, almost all sectors in green except for Nifty FMCG. Nestle is something that is pulling down the FMCG today. Nifty Media is around 1.82% up. If you can pull up what is contributing to Nifty Media today, there is something like Hathway Cable, Network 18. There you go, Saregama, only Z, which is, it's flat, it's not even red, we can't call it red as well. But Network 18, Saregama, PVR Inox. Then we have Nifty Metals, which is also up and above in trade today, if you can pull up Nifty Metals. Now, this is because of the Vedanta news that has come out. Vedanta's Anil Agrawal is hopeful that FY25 will be a transforming year for Vedanta. So Vedanta tops the chart for Nifty Metal today, 2.6%, followed by Hindalco, which is up around 2%, Jindal Steel, which is up around 2% again, and Hindustan Copper and Tata Steel, both up around 1.8 and 1.6%. Then, if we can see all the OMCs, the OMC stocks are in focus today. If we can check HPCL, well, it did touch an intraday high of almost 5.2%. Currently, it's trading around 3% higher. BPCL is did touch an intraday high of 4.3%. And then there is HPCL, which is up around 4.5%. Now this is because the gross refining margins are at $4.5 per barrel versus 3.6 that is a week ago, and higher GRMs are representing higher profits per barrel. So all these OMCs are buzzing in trade because of this particular reason. If we can pull up something like a Just Dial, Just Dial is in focus today because their Q4 results came out, as I mentioned earlier in this show, and the net profits have grown by 26%. We spoke to the management of Just Dial as the company recorded a healthy quarter. Take a listen in. Welcome back. You're watching the Small and Mid Cap Show. I am Mahima Vajrajani. Well, one stock that is in focus for small and mid cap today is Just Dial. They came out with their Q4 results where their EBITDA improved by 17%, revenue grew nearly by 2%, and their net profits improved by 26%. To discuss more about this and to know how the future outlook of the company looks like, we have with us Mr. Abhishek Bansal, CEO of Just Dial, who joins us now. Welcome to the show, sir.
Thank you so much.
Right. So my first question to you, Mr. Bansal, would be that, how has the Q4 panned out for you guys? How does it look? Did it beat your expectations? Did it meet your expectations? How has the Q4 gone by in the entire FY24, in fact?
See, Q4 and entire fiscal 24 was a very healthy quarter and year for us. I would define FY24 as a year of efficiency, wherein business delivered on most of the parameters. Specifically for Q4, we had about 16.2% growth in our top line. And very importantly, EBITDA at about 71 crores, more than doubled on a year-on-year basis. We delivered about 26.1% EBITDA margin. Broadly, the theme for last full year was that whatever growth that we see, be it in traffic or top line, was delivered with a great amount of cost efficiencies.
Understood. So now I just want you to break down some things for me. For example, I want to understand what is the mix for you when it comes to your segments like JD Mobile, JD Mart, JD Experts, JD Omni, and JD Homes.
So if we were to segregate our top line growth, by and large, about 73-74% of our revenue comes from B2C segment categories, and 26-27% comes from B2B oriented categories, which used to be less than 20% about 3 years ago. So broadly, almost entire revenue is subscription revenue that comes from SMEs, and that is how it is.
Understood. So if your 26 to 27% revenue comes from B2B, and that is one segment that I believe you're trying to scale up, what are the plans with respect to scaling up your B2B business? One thing in terms of monetization, and secondly, what will the mix be like in FY25 by the end of FY25?
Okay, so in terms of monetization, the way we look at the business is that the first goal is that overall revenues should grow. And we are targeting that for next full fiscal year, we should target to grow our top line by, say, 15% or more. Within that, yes, we do expect B2B to have a higher growth. And say in another 2 to 3 years time frame, this could form about, say, 1/3 of our overall revenues.
Okay, 1/3 of your total revenues will come from B2B. Understood. And so I also want to understand that, your unique visitors have come to around 17.1 crore for Q4 FY24. Now, in terms of totality, what is the aim, the number that you're aiming at by the end of FY25 when it comes to unique visitors?
As far as traffic goes, again, the target is that traffic should by and large grow in line with the monetizations, or rather we should call it the other way around. If my traffic grows at say 15-20%, eventually it will result in 15-20% higher inquiries that we will deliver to our customers, and accordingly my existing customers will pay me more and new subscribers will come in. So this particular 170 million users that we have, our target will be that in a couple of years touch about say 200 million users or so.
Understood. So when it goes to 200 million, then will your mix change in terms of your mobile, web, and your visitors? How will the mix look like then?
So traffic wise, incremental traffic largely is coming on mobile platforms, which now form about 85% of our overall traffic. So it's this 85% maybe could go to another couple of percentage points higher, but growth is being driven largely by mobile platforms.
All right. And then, 200 million visitors, where will this take your revenue to by the end of FY25? Any kind of guidance, any kind of ballpark figure that you're aiming at?
So while we don't issue any formal guidance, but as a business, endeavor is to grow top line at 15% plus growth rates, which again should materialize from a mix of both volume additions as well as ticket size growth. For example, Q4, we had about 8.5% growth in campaigns on a year-on-year basis, another 7.5% in our realizations. On margins front, we exited the year at about 26%. And for next full year, we are targeting that we should comfortably be 25% plus. There is obviously scope for margin expansion as well, since there is inherent operating leverage that exists in the business for top line growth anyway beyond 8-9%.
Understood. So, scope for expansion in margins, I believe you've done, you've crossed your guidance of 25% margins. So then can I expect that the margins will go anywhere between 28 to 29%?
See, difficult to pinpoint, because once my margins are reaching, say, even those kind of levels that you mentioned, it will be a conscious call whether to reinvest some of those margins into advertising to get higher traffic, which will aid my monetization in subsequent years. So as and when we go into future quarters, we'll decide how and where to invest these incremental margins, or retain it as it is.
Understood. And so I also want to understand that, your margins, your profits are definitely improving, but at the same time, your sales strength has been declining if you see QOQ sequentially. So one, what is the reason for that? And second, what are the plans to ramp up the same?
So on employee headcount, both in our sales as well as non-sales function, endeavor this year has been to work on productivity. So the idea is that the low yield workforce, if we can optimize it, not just in sales, even in non-sales, through use of technology as much as possible, which is what is reflecting in better growth despite cost optimization. So the idea is that don't just run after higher employee count or manpower, but invest into quality resources which can deliver better outcome with lesser costs.
Understood. That absolutely makes sense. So then going forward for FY25 also, your strategy will be the same? Your headcount will decline, or how does the scene look like for FY25?
So on headcount, we are budgeting in about 4 to 5% increase in headcount. But as I mentioned, that the approach will be to hire in a calibrated manner and see where there is necessity of additional hiring, and accordingly manpower will be ramped up.
Understood. And from what I've collected is that you're also trying to pilot your third-party sales. Now, I just want to understand, what does this mean for Just Dial One Thing, and how will this contribute or improve your revenues by?
So essentially, the idea is that at this point of time, almost entire sales that comes is from our in-house sales team. Can we explore any additional channels in certain geographies? Could be reseller programs. This particular channel of monetization will result in no or very low fixed cost addition for us, but it could be variable linked monetization that could happen.
All right. So that means your sales will go up. Is there any ballpark figure where you think that because of this the sales will improve by so and so percentage?
So as I mentioned earlier, the target is to grow overall revenues by mid-teens or higher, and it will be a combination of in-house team delivering, exploring third-party channels, and so on.
All right. And so also I want to understand that, your integration of Just Dial with other, Reliance Group platforms. Now, what is the status there, one thing, and how will this overall, improve your revenues then?
So integration with group companies is an ongoing process. There are group companies with which we are actively engaging, both on possibility of traffic side engagement as well as monetization side engagement. And as I mentioned, overall target is for next fiscal year, top line growth of say 15% plus with 25% plus margins. So a combination of all these efforts should possibly help us achieve our targets.
Understood. And my last question to you, Mr. Bansal, would be that, any kind of new platforms that you're looking at, any new platforms in pipeline for FY25?
So while we have transaction-related platforms that are already ready, which we can scale up at any point of time, it's a conscious call to not possibly spend advertising money on those initiatives at this point of time and ensure that the positive free cash flow generating core local search business itself be grown at a steady run rate. So that is the priority at this point of time. As and when we think that the ecosystem is right to scale up other initiatives, we shall definitely do so.
Okay, well, Mr. Bansal, thank you so much for taking out time and speaking with us at NDTV Profit.
Thank you so much.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock
Welcome back. You're watching the Small and Mid Cap Show. Now, one stock that is in focus is steel strip wheels. It has recently won a contract for aluminium wheels. Now, to break down that how big is this contract and what it means for the company, we have with us Mr. Mohan Joshi, ED Commercials of Steel Strips Wheels, who joins us now. Welcome to the show, sir.
Very good afternoon. Thank you for having me.
Right. My first question to you is that, Mr. Joshi, that this new contract that you've won for supplying aluminium wheels to passenger car manufacturer, one thing, how big is this contract for you in terms of quantification and how will this impact your revenues?
See, I think the biggest thing is that this is the largest car manufacturer of the country and we've been waiting for entry into this customer for past 5 years. And this is the largest aluminum wheel consumer of the country. So it opens up the plethora of opportunity for us for next 5 years. What we anticipate is that we are targeting a 20% market share with this customer, and the potential revenue, in terms of the consumption of this customer is close to 1,500 crores. So potentially, if we see over next 3 to 5 years, we can target a 300 to 400 crores worth of revenue from this customer.
Understood. So then, from what I've collected is that you've given the guidance of around, 4,800 to 5,000 crore of top line for FY25. So I believe that with this particular contract coming into picture, this guidance will change. It will go beyond 5,000 crores. Then what is the ballpark figure then?
Yeah, I think that guidance will change a little bit, but the raw material prices have started falling in terms of steel. So adjusting to that, the guidance will move a little bit here and there. But I think on the volume front, we guided close to 20 million in terms of the total volume for the financial year 24-25.
Understood. But so then the revenue figure could be around, let's say, 5,300 or 5,500 crores then?
No, I think this year it is not going to be there because the development cycle is also there in this financial year. Next financial year, full year, the revenue will come from this customers.
Understood. And also, I want to understand your export versus domestic mix. What is it at present?
So for financial year 23-24, we are anticipating this exports to be around about 600 crores from a total revenue of close to 43 to 4400 crores for financial year 23-24. We believe that the eventual target for our organization over the next 3 years is to take these exports to close to 1,000 crore with the mix of aluminium and new ventures that we have entered in terms of development over the past few years, and which we feel is fairly possible. And export is the area where the development and volume growth is visible in terms of a large market share that the company can grow.
Okay. And so I want to understand one more thing. You're doing a lot of capacity expansions, brownfield expansions. I want to understand, first of all, where are your capacity utilizations at present, and what will they be by FY25?
So for financial year 23-24, with at a pan-India level, we are close to at 82-83% utilization. And the capacity expansion, which is already in offering for financial year 24-25 in our aluminum wheel plant, we anticipate the capacity utilization will be closer to 84-85% in financial year 24-25.
Understood. And so what is the capex guidance then for FY25? Because all of these expansions will require heavy capex.
Yeah, so I think 24-25 will yield around about 200 to 220 crores in terms of gross capex that we are anticipating in next year.
So now then I want to understand that your total debt, both long term and short term, around 860 crores at present, and from what I understand that your alloy wheel capacity addition was preponed in Q3 FY24, and because of which your debt has increased. So from this 860 figure, where will the debt go by the end of FY25?
So we feel firstly there is an end of the acquisition in this financial year, which was in addition to the Mehsana wheel plant expansion. We feel that next year the repayments are around about 105 crores. And I'll not try to give you an answer for 1 year, but I'll try to give you this answer over next 3 years where the debt we see. So at a blended level, we see that the debt will further come down to close to 600-650 crores over next 3 years.
Understood. And so then the capex that you're planning, will you be raising further debts? So this 600 crore figure that you've given includes, adding additional funds and then bringing down funds, is it?
So in financial year 24-25, no additional raising of debt will be done by the market. Okay. I think all internal accruals will be enough to fund this 200-225 crores worth of capex.
Understood. And I also want to understand, that the industry is now shifting towards EV. And from what I understand it, EV will require a different set of wheels. So what kind of, progress are you making there? Are you planning to, provide wheels for the EV segment as well?
So aluminum wheel is going to be in high demand for electric vehicles purely because of the density of the material. And we feel that aluminum currently being used versus the EV wheels, there is no large distinction. But the expectation is that we try to get newer technology into EV segment and try to reduce the weight by 10 to 12%. So I feel this financial year, which is 24-25, we will introduce one of our latest technology wheel with a leading customer for their born electric platforms. And we are single source in that platform. And we feel that this 10 to 12% saving within the aluminum wheel side is going to be the target for everybody, and we will be taking a lead in terms of implementing the same.
Understood. So then your mix in terms of your EV and normal, vehicles, will that change significantly? Where will the mix stand at by end of FY25?
So for 24-25, 23-24, I would like to say that because EV mix in terms of the total mix is fairly very less, and we believe that this has a high potential area. And we expect this number of market share in financial year 23-24 to double in 24-25 in terms of market share towards EV.
Understood. And so in your transcript, I had read somewhere that there's a new thing that the government is foraying into, which is new powertrain wheels. So I want to understand what are the companies plan to take advantage in this particular segment. Are you planning to scale up this as well?
No, I think we are not scaling into this segment. I think we are looking for government to implement the scrappage policy. I think it has a dual connotation in terms of pollution, in terms of improving the recyclability of the raw material and giving a large impetus to the automobile segment. We are looking for that segment for decision making from the government and are propelling our growth on that side.
Understood. Well, Mr. Joshi, thank you so much for taking out time and speaking with us at NDTV Profit. It's all we have on the show for now. Stay tuned for more news and updates on NDTV Profit at the other end.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Smriti Chaudhary. We will take you through the next half an hour of trade. And this show is geared towards getting all of your answers to stock-related questions that you might have. And you can send those questions to us on any one of our social media platforms or in fact on the WhatsApp number that is on your screen right now. Let's take a very quick check of how the markets are looking right now, and it's a pretty picture. and in the context of cuts across the board in the Asia-Pacific region and not the best handover from the US markets overnight. You have the benchmark Nifty 50 that's trading very close to the high point of the day right now, up about 0.5% or thereabouts, and moving, edging closer towards that 22,300 mark. The broader markets, in fact, looking even more sanguine, if anything, and you have the mid-cap index that's up about 0.8% or thereabouts, and you have the small cap 250 index that's up over 1% right now. So understandably, the market breadth tilted in favor of the advances. In terms of the key contributors on the Nifty 50, let's take a look at that list. You have Bharti Airtel at the top, followed by Larsen & Toubro and Tata Consultancy Services. Infosys up and about before the presentation of its Q4 results. On the other end of the spectrum, you have the biggest loser in the form of Nestle India, and some reports emerging over the course of the last couple of days that the company is in fact using added sugar in its Cerelac, which is widely consumed, and this is something that is only in developed nations, in a few developed nations, India included. In Europe and in the UK, there is no added sugar. There is some pressure on the stock on account of that. We will talk about that in just a bit. But for now, let's turn to ICICI Lombard, Smriti.
Right. Good morning, Alex.
Morning.
ICICI Lombard is the focus for today. The stock is up about 3.5%. And to break down numbers for us, we have my colleague Puneet joining in. Puneet, tell us about the performance of ICICI Lombard.
Yeah, thanks, Madhuri. So the company had issued a steady gross domestic premium income growth in this quarter compared to last year, while the combined ratio have also seen a reduction for the better. Now, for the quarter four, the GDPI income grew at 22%, coming at roughly 6,070 crores versus 4,900 crores in this time last year, while the combined ratio has improved to roughly 102% from 104% previously. The solvency ratio has also done well, coming in at just 2.6 times versus roughly 2.5 times previously, while the PAT has grown at roughly 17% compared to previous year, coming in at 520 crores. Now, when we go to the product mix, we've seen a stable for each of the products. Like motor, they are at 19% versus 20% previously. Two key data points here within the products. They said that within motors, the third-party rate hike has not been announced for 2025, which augurs well for the demand for the particular product. While in the health and travel vertical, they said that the retail health agency grew roughly 22% compared to previous year, where it competes with the likes of Star Health in this segment. We've seen roughly fire as well as the other segments maintaining market share roughly, as well as the product revenue coming in at stable 14 to 15%, which is the strip. Now, finally, what are the brokerages saying? HSBC has maintained their target price of roughly 1,990 rupees, which is a 20% upside from the current levels. They say that the firm has increased its market share gains and is focused in each of these segments going forward as well, lowering the loss ratio given forward. They say that they see that meeting FY25 operating ratio guidance should lead to even higher EPS growth from the current levels, while it says that the firm is firmly placed to deliver a faster premium growth compared with the industry. So ICICI Lombard doing very well on the results, and the stock is up roughly 3.5% today. Back to you.
Right. Thank you so much, Puneet, for that. And on that note, let me introduce you to the guests for today. We have Lancelot Dicuna, CIO, ValueX Wealth Connect, and Swati Hoskar, Senior Equity Technical Analyst Research at Nirmal Bang Securities. Welcome to both of you, and thanks for taking the time out. I'll come to you, Mr. Dicuna, first on the focus, which is ICICI Lombard. We're seeing results are pretty much in line with what was expected. You're seeing brokerages giving it a target price of an upside of 18 to 20%. Are you also seeing that sort of gains in the longer term?
Yes, I am looking at seeing that kind of improvement in the financial performance drive the pricing up as well. Because if you look at from a macro situation, as the economy continues to grow, general insurance will also grow at 15 to 18% per annum. And since ICICI Lombard has been consistently maintaining its market share in most of the important segments like fire, motor, etc., which are the profitable segments, we will continue to see growth coming into this sector, and as well as growth for ICICI Lombard. Even the management has indicated that there could be a 15 to 17% growth in the premiums. And with the loss ratios looking better, I think this stock should do much better over the longer term.
Okay, fair enough. We had initially thought of taking Nestle, but then when we discussed it, the stock was not reacting too much. And then after that, of course, let's pull up the chart and see where it's currently trading. It's down as much as 3.5 to 3.7% off the low point of the day. Lancelot, I do want to broach the topic with you because reports emerging that there is as much as 9% of added sugar in Cerelac in India and certain other markets. Now, it's hard to quantify the impact of this, but I can't see parents very comfortable with the idea of sugar in the food that they're giving their children. We were trying to look at the revenue contribution, and it's not very clear the breakup between baby food in the context of the overall milk product space. But do you think that there could be a sizable impact, and how would you react to this if you are an investor?
So if you actually analyze the business of Nestle, a large part of the business comes from the Maggi noodles and the ketchup part of their business. A significant portion of revenue also comes in from their milk product space. And Cerelac has been one of their mainstay products as far as the baby food is concerned. Now, while this news report, or the reports suggest that these are some inadequacies, we also need to understand that this stock always has been priced at a huge premium over other FMCG stocks. And we could see that with this kind of news, the premium can get shaved off a bit. As far as, unless we start to see some regulatory action coming in, saying that, okay, Nestle is now not allowed to sell this, or some action is being taken by, regulators in the space, that could have a much higher significant, let's say, a negative impact. As long as that doesn't happen, I think on a sales basis, you may not see too much of an impact because, in reality, people who are, this kind of news really doesn't impact sales directly, because a lot of people believe that, okay, the product of the company is good and, they would go by the brand, that it's a global brand, they will give us good products, etc. But any regulatory action in terms of asking them to stop production or sales in this could mean a significant downfall from these levels as well.
All right. So regulatory action is what we're going to watch out for in this specific counter, because that's the key factor that may avoid the stock here. But let's start with the queries now. The first one is from Himanta, and this one is on ICICI Prudential. They say they bought the shares at a price of 619 rupees. So I think this is a short-term question, so I'm going to come to you on this one. It's slightly higher than what the current price is. What do you have a target for the shorter term in this particular counter?
Yes, as of now, the view is definitely a positive. Stock is trading in the pattern of the high top share bottom formation. Also, the interesting fact as of now, it is well placed above the short term moving average, that is 20-day moving average, which is also a positive indication. But
Okay, we unfortunately, just while Swati was giving out her advice on that particular stock, I've lost her feed. We'll get her back shortly. In the meanwhile, let me take the next question. We'll revisit ICICI Pru, but the next question is from Mohit, and he's writing in from Ludhiana. He's asking about IDFC First Bank, which he has bought at levels of 26.94, and those are attractive levels if you actually think about it, because the stock is currently trading above the 80 rupee mark. Okay, so I'm told we have Swati back. Swati, you were talking about ICICI Pru. What's the advice here?
yes, Alex, the overall view on this particular counter is really positive, because I was explaining on the technical front that the stock is trading in the pattern of the high top side water formation. Also, the interesting fact that it is well placed about the short-term moving average, say the 20 DMA. And as we have seen a very good amount of a rally from almost 500 to 640 levels within a very short span of time, say within a span for 2 months. So profit booking cannot be denied at the higher levels. I will suggest to hold on the counter as long as it's maintains 600 support levels. Once it manages to give the breakdown of 600 levels, then only we can witness some sort of a profit booking. So those who are having any long positions, they can hold on. Upside, I'm looking for immediate target of 640, then 660 levels on the high side, but keep your long positions by maintaining a stop loss of 600.
Okay. We've got a couple of questions, and I had already taken the first one, but I will repeat it. Mohit from Ludhiana is asking about IDFC First, which he's bought at levels of 26.94, attractive levels. His horizon is about 2 years. And we've got Sri Kishore Sharma from Motihari in Bihar, who's bought at levels of 61.62, and his time frame is as much as 3 years. He's wondering, both of these individuals wondering what the prospects are. Lancelot, what do you make of it? It's currently trading above the 80 mark. What's the potential for upside from here?
So I think the potential remains strong, Alex, because this bank has been focusing on the retail liability side as well as retail asset side, and its strength has been in that space. And we've seen them, expand a lot in the retail liability side by opening more branches, collecting deposits. So they've seen a fairly good deposit growth. NPS have been fairly low. So given that, this space is continuously growing, you are going to see significant growth opportunities for the bank, and that should result in much higher valuation. So I would say that if one is willing to hold on to this stock for the next 2 years to 2 to 3 years, you would get above average returns on this counter.
All right. Next counter we're talking about is Piramal Enterprises. Now this question is coming in from Rajesh. They say they want to know the fundamental view on this particular stock. Mr. Dikuna, we saw the stock getting affected by the AIF rules that came out a couple of months ago, but we've seen recovery from that. But fundamentally, how do you see the stock in the longer term?
So I think over a longer period of time, yes, the stock should give investors good returns. But they've made a large amount of investment in in the pharma space and in spaces which will be impacted with these AIF rules. If at the moment, I believe RBI is also looking at this the rules in a little bit more sympathetic manner. But probably over a period of time, these rules will get tightened and they will have some impact. So from a long-term perspective, yes, there could be growth opportunities, but there are also various other opportunities in the space which could give you fairly good returns, and one can look at those as well, where you're seeing more clarity on the upside.
Fair point. Orient Cement is the next counter that we're focusing in on, and Namita has got this question. She's specifically looking for a 3 to 6 month view and a technical view at that. Swati, what's the view on the charts?
My view on this particular counter is a little bit cautious, Alex, because I am saying that from the month of the January itself, we are witnessing a good selling pressure from almost 290 to now the stock is trading at almost 200 levels. And more downside can be seen into this particular counter because we are witnessing a very strong resistance at 220 to 225 levels. As long as it doesn't give the breakout of the same levels, we are not likely to witness a positive momentum on the higher side. So I will suggest to book the profits or to exit the long positions whenever we get a rise towards to 220 to 225 levels. As of now, 198, 197 is acting as a crucial support level. If it breaks that previous swings low, more selling pressure is likely to be intensified and which might take a stock back towards to 180 levels. So my view is a bit cautious. Try to exit the positions on every rise.
All right, so the next question is on the counter Yes Bank. This is from Anil. They say this is a good time to invest in the stock. Now, the stock hasn't been doing too much in the last couple of days, but has given about 46% returns in the last 1 year. Do you see some kind of an upside in the shorter term on this counter?
This counter has not performed really very well on the technical front from almost from last 4 years. The stock was trading within this range of 15 to 20 levels. Now it has came out of that particular range, but we are not witnessing a very much price momentum in this particular counter. So those who have an extra capital and a longer time horizon in hand, then only one can invest in this particular stocks. Because I believe this counter is likely to witness a very slow rally on the higher side. Upside, as of now, the stock may rise towards 230 to 34 levels, whereas on downside, it has a strong support levels at around 20. So those who are interested for a slow momentum counters, one can invest. But my personal opinion to stay away from the Yes Bank rather than in this particular counter, one can go for into the SBI, Federal Bank or the Bank of Baroda. These are the good banking stocks one can invest.
All right. Yeah, I mean, incidentally, his time horizon is as many as 2 years. But in any case, I think that view holds true. We have to slip into a very quick break. We've got more questions that we will take, so do stay tuned. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number.
Welcome back. You're watching Ask Profit, and we're in the midst of taking all of your questions. The next one we're taking is on IRFC, which is a question coming from Arvind, who's writing in from Andhra Pradesh. He's bought at levels of 148. The stock is currently trading very close to that mark. He's got a long-term view on the stock, so he's wondering whether to keep holding or to sell at this juncture. Lancelot, what's the view on this particular stock?
So if you look at it from a long-term perspective, yes, the railway financing is going to see significant growth, especially given the outlay that has been envisaged, over the next 5 years. The government is looking at putting in close to 5 lakh crores of investment in this space, and that should, encourage, or see the need for railway financing, and hence the company should do better. But when you look at it, ultimately, it is also financing only a single sector. So obviously, whenever there is a little bit of a downturn or, things are not moving or interest rates move higher, you can see some portion of negative impact. So I think given that the stock is already trading at a significant premium to its long-term, price to book values, I think the upside from here will take a little longer period before you start seeing significant returns going forward. And so one should look at other alternatives rather than staying with this company for the long term.
All right. Next counter we're talking about is Engineers India. This is from Ravi from Hyderabad. They bought the stock at 160 a piece and it's currently trading at 215. So Ati, we've seen the stock zoom in the last 1 month itself. Do you see more upside to this particular counter, or should you maybe take some profits off the table?
The view is positive. The stock in the formation of the inverse head and shoulder pattern. as of now it is forming the right shoulder of the inverse head and shoulder pattern. We have seen that the stock has taken a very good support of 200 200 levels, and on higher side it has a breakout of a neckline breakout which comes to at around 235. I believe that this pattern is likely to be continued, and on the end of near future, it can give the breakout of the 235, and upside we can see the target of at least 260 to 280 levels on the high side. So for the shorter term duration, I will suggest to hold on as long as it's maintained the support of 200 levels for immediate target of 260 to 280 levels.
All right. This is a bit of a broad question, but Lancelot, this one's for you. We've got Jitendra Goyal, very young viewer tuning in, 22 years old, and he's got 50 lakhs that he wants to invest into the equity markets. And he's clarified, he said that this is for the long term, at least a few years. But he's worried that in the next few months, there could be a significant amount of volatility on account of the central elections, which is just around the corner right now. And he's wondering, in the event of a market crash, what should he do? So should he hold off till the dust settles to deploy the funds? What do you think? And how should he go about making that first few investments?
Right. Thank you, Alex. I think this is a question that most investors are being faced with. But I think one should look at it a little bit, in a perspective that how much do elections really affect markets over a longer period of time? If your outlook for investment is like, say, 3 years, 4 years, elections really haven't impacted markets dramatically to reduce the earnings growth that you're seeing. Whichever government comes, at the end of the day, everybody is pro growth and pro economy, and that's where you are seeing the positive side of it. On the other hand, the market has already factored in that there is a positive trend that this current government is going to continue, and that is factored into the market at this point in time. So if there's any sign that that is unlikely to happen, then you might see a knee-jerk reaction where there could be a considerable sell-off in that kind of scenario because of the uncertainty created out of the election results. So as an investment strategy, I think it's better to put in at least 40 to 50% of your investment upfront, or maybe even higher. Maybe you can go up to 60, 70% of your investment upfront in good stocks which have a long-term outlook, and keep the balance 30 to 40% for the any volatility that may come out post-election results, because it could be, even depending on who gets appointed as a finance minister, etc., you could see maybe some volatility in certain counters, and then you can take advantage of that volatility and deploy the balance portion at that time.
Right, very interesting point of view, Alex. From what I'm hearing, that election is now a non-event for the big investors, but definitely retail investors may get affected more than that. But the next counter that we're talking about is Sigachi Industries. This one's from Saurabh, and they bought the stock at 48 rupees. It's currently trading at 64 rupees. A bit of a profit here Lancelot. And the time horizon here is 3 to 4 years. Now, considering the fact that he's already sitting on a bit of a profit, do you suggest holding on to the stock?
Yes, Ruti, I think that if you look at the company is doing well and its profits are growing. The sector in which it is in is also growing. And if you look at the return ratios, the return on equity is good, above 17%. And so given that the long-term outlook is positive, one should remain invested, because in the short term, you might look at booking profit. There's also potential that you may miss out in the longer term rally. So I think one can stay invested in Sigachi Industries even at these levels.
View on Sigachi. It's unchanged as things stand right now. The next question is coming from Sagar, and he points out that he's currently in the UAE. He's asking about Mazgon Docks, and I'm actually curious about this as well. He's bought 100 shares at a purchase price of 205, and he's asking whether he should book profits at this juncture. The stock is currently at 2198.65. I'm not even sure about the purchase price, but Swati, this is a stock that over the last 10 days has run up quite significantly. What are you seeing on the charts, and what should the investor do?
Yes, definitely, Alex. The stock has given a very spectacular rally in the 2023. Almost the whole year was the good year for this particular counter. As of now, the counter is trading nearby its 2200 levels. The overall setup is still positive on the technical front. Downside, it has a very good support of 2100 levels. If person needs the cash, then he can book at least partial profits at the current market price, or else they can hold the long positions as long as this particular counter holds the 2020 is the very crucial support level for this counter. If it's break that level, then the short-term trend will turn into on the negative side. So I will suggest to hold on by keeping a profit stop loss of 2020, and upside, I believe if it manages to give a breakout of 2250, upside door gets opens for 2400 level. So it's a hold from my end by maintaining a keep profit stop loss.
Coming back to you, Swati, on this one, because it's time sensitive. Hemant is asking this question. He's gone short on ABB at 6340 intraday. What should his strategy be?
Oh, on an intraday basis, he has took a short positions, but this counter has shown us a reversal from its 20 days moving average. From almost, he has shorted at a day's low. I will suggest to exit the short positions because the pullback rally is likely to be continued towards at least upside 65.90, and above that levels we can witness 66.50 levels also. So I will suggest to else maintain the strict stop loss of 65.50 for short positions, and any coming this particular any dips comes towards at least 64.50. He can exit the long positions. The overall trend looks positive, and we are witnessing a pullback rally on the intraday basis. So I would suggest to exit on every dips.
All right. Unfortunately, now we're completely out of time on this edition of Ask Profit. Thank you so much, Swati and Mr. Dikuna, for joining us and for answering so many questions for us. And viewers, thanks for tuning in on Ask Profit. And if we were not able to take your questions today, we'll definitely try and take them tomorrow. But don't go anywhere. We have lots more lined up for you on NDTV Profit.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company.
Markets recover losses. Sensex trades above 7,300 while the Nifty is trading near 22,300. Vodafone trades 4% higher as India's biggest FPO opens today for the public. Global controversy sparks as Nestle adds sugar to baby cereals sold in India but not in Europe and UK. Company says it has cut added sugar over the past few years. And more earnings on our radar today. IT major Infosys, Bajaj Auto and HDFC Life are expected to come out with their April quarter numbers. The stage is all set for India's biggest event, 2024 Lok Sabha elections. Polling starts tomorrow. Hello and welcome. You are watching Hot Money. I am Agam Vakil. In this show, we take you through all the stocks which are buzzing in trade and have been the flavor of the season. Well, before I get to the stocks, a very quick look at the markets which are currently trading near life highs, and we are starting to see a little bit of short covering coming through for the Nifty as well as the Bank Nifty. At the moment, we are looking at strength. The Nifty has advanced by around 0.5%, and as you can see on your screen there, it's currently at 22,300. As far as the Bank Nifty is concerned, that's the other one. That's the other key index that's also up around 0.4%. And we've seen a little bit of recovery there as well. It's not at day's highs, but inching towards that mark. In terms of the constituents of the Nifty, again, it is largely the names such as L&T and RIL which are advancing, along with TCS also giving you some support. Bharti Airtel is the top contributor as far as the Nifty is concerned, up and contributing to nearly 30 of the 175 points on the Nifty. What's weighing on the index, however, is Nestle India, Axis Bank, ITC and HCL Technologies. Well, on the whole, even if you consider the broader markets, we are looking at a fair amount of up move there. So 0.8% advance for the mid cap index, and the small cap index advancing by nearly 1% or over that for that matter right now at the moment. Even in terms of some of your crucial movers, let's pull up Just Dial. That's the big mover in the broader markets, reacting to earnings, and it's made a new life high in fact at the moment, and we're seeing good traction on the back of good volumes too. Another one of these counters which is also advancing in today's day of trade, you do have something like Capacite Infra, which is also up as much as 4.5%. This one is also at a 52-week high. So a lot of updates from the broader markets which are coming up with good up moves coming through. Well, besides that, in the broader markets, we have something like an Indus Tower that's up around 5.3%, and Torrent Power as well, advancing up around 4.5%, among the top gainers as far as your mid-cap 100 is concerned. And of course, prestigious stays is something that we're going to be talking about through the course of the show as well. Well, that said, among the counters that we're going to talk about in the show today is Nestle India. Well, a little bit of trouble, and we've not seen too much of a reaction in this one, but we're going to talk about this one. Vodafone Idea, of course, on the back of that big FPO coming through. ICICI Lombard on the back of earnings. OMC stocks once again in focus. Brigade along with TARC, and of course ABB India. All these stocks will be in focus today, and to talk to us about these companies, of course we're going to have an expert with us as well to talk, Ashish Kapoor of Invest Shop, who's going to be joining us on the show. Ashish, good afternoon. Thank you so much for joining in. Ashish, before I come to you, let me introduce our first topic of the day. And well, we have Nestle India, which is in focus. Let's pull up the stock of Nestle India, see how it's doing. It's down around 3.5% right now. Of course, a lot of traction with respect to, well, the latest in terms of how things are panning out around the sugar quotient in the baby cereals. Well, let's get in Sesha to give us the latest update on this one. Sesha.
Right. So a report by the Swiss investigative organization Public Eye shows that the Nestle uses excess sugar in baby food products like Cerelac, particularly in developing countries, which includes India. Now, it has examined 150 products sold in Asia, Africa, and Latin America. To find that almost all Cerelac infant cereals targeted at babies from 6 months of age contain added sugar of nearly 4 grams per serving on an average, which is equal to roughly a sugar cube. In some countries like Philippines, Cerelac contains as high as 7.3 grams of sugar per serving. In Nigeria, for example, one product tested had up to 6.8 grams of sugar. Now, coming back to our focus in the Indian markets, Cerelac sold in India on average contains more than 3 grams of added sugar per serving. Now, per serving is per 25 grams. However, a Nestle India spokesperson told NDTV Profit that it has reduced the total amount of added sugar in its infant cereals portfolio by 30% over the last 5 years, and it continues to reformulate products to reduce them further. However, this particular issue raises serious questions on regulations. Why Nestle is using such a product in India?
Okay, so a little bit of trouble for Nestle at the moment. Ashish, if you can come in on this aspect, what's your view? What's the way forward?
Well, I think I'll tell you a very frank opinion. I think while what Nestle is doing may be considered unethical, may be considered whatever, the reality is that what is the competition and what is the option for infant foods in India today? They have captured the market. They have kind of managed to finish any competition, whatever there was. So today, if you do not give Cerelac, what will you give an infant? So the sad reality is that they have the market with them, and they can get away with not only this, not only Nestle. I think many of these MNCs can get away with these kind of practices thanks to their very excellent, well-oiled, rehearsed, maintained PR and licensing machinery. And that's what is happening. So the reality may be sad, but the fact is that Nestle will get away with this. It's not going to really be a very long-term dampener, and they will cover it up by whatever statements they are giving, that they're reducing the sugar content and they are gradually going to get it to national levels, etc., etc. So the reality is that Nestle will remain the leader in for foods. I don't see any company in India, at least, trying to challenge their dominance and their market control. So Nestle on declines should be a stock to buy. I think it can come down a little more, but if you are a long-term investor, these kind of shocks in companies like MNC and other strong companies like Nestle should be used to look for buying opportunities. I think it can come down another maybe 4-5% maximum. So a buy on decline, start buying in a staggered way from the current levels and use all declines to add more. It could, kind of a worst case scenario, even reach maybe 2250 or something, but that is also not too much of a significant downside from here. So I think gradually buy on declines, regardless of how bad one feels about what they are doing. The reality is that they have the market with them, and they have the wherewithal and the ability to get away with it, not only here, other places also. And they will continue. This is bad press right now. It will in a few weeks die out, and it will be business as usual. And the company will continue doing well. I think it's a significant decline already from its peak. And I think any more decline from here should be considered a buying opportunity.
Point taken, of course. So we must remember that when it comes to your broader market holding is just 15% with the public. The balance is with either the promoter or institutions, and that is about 84-85% at the moment. So there is a scarcity premium as well, which is enjoyed by Nestle, and that explains the valuations. But from there on, let's move on and talk about Vodafone Idea. Big FPO coming our way. Let's get in my colleague Smriti to tell us a bit more about this one. Smriti.
Well, good afternoon. So yes, Vodafone Idea FPO opens today, and it closed on April 22 for the public. The price band for this is 10 to 11 rupees, and the lot size for that is 1298 shares as well. Now, let's look at the anchor raise for this one, and we saw some marquee investors come in during this anchor round. Now, the company was able to raise about 5,400 crore rupees through anchors itself. Now, there's a cap of 30% in the anchor raise, and the company was able to fulfill that, and so it seems like there was good demand, and we saw marquee names like GQG come in, Fidelity Investments come in, you saw domestic names like Quant, Motilal, HDFC all come in and put in money into this anchor raise. If you talk about GQG got the highest allocation with about 25% of the total anchor raise. The amount is somewhere around 1,348 crores or thereabouts. So we saw these domestic funds as well come in. So that gives a positive reinforcement to the FPO. And remember, this is the largest FPO that has come to the market. Now let's look at some of the proceeds and how they're going to use these FPO proceeds. Now the company says they're going to put in money into rollout of 5G. Remember, this is the only private telecom player that does not have 5G. You have Bharti Airtel and Jio that have extensively rolled out 5G. So these proceeds will go towards that. They're also going to expand 4G capacity. So that's pretty much the idea that they have in mind. And they gave specific numbers also. About 12,750 crores will be used towards this capex, and about 2,175 crores will be used for spectrum payments. Now the question arises, should you subscribe to this FPO? Now if you look at the FPO price, it's at a 15% discount to last closing price, and you see anchors bidding at the highest end of the price range at 11 rupees. You saw promoters put in money at even a higher range of about 14.87 rupees. Now, so that is something that you should look at, that the price difference is, there's a decent price difference there in terms of the current market price and the FPO price. Now, another positive is that the government is supporting this FPO. The government holds 33% stake in the company. Post this FPO, post this equity fundraise, that is going to come down to 24%. But Finance Secretary came up and talked about the decision that they support this decision to, do this FPO. However, there are certain downside risks as well to this FPO. One being the debt, of course, about 2 lakh crores of gross debt. Then they have deferred payment obligations that will be start becoming due from FY26, and that FY26 number is a big number, 30,000 crore in a single year. So we're looking at an FPO which has certain risks in terms of debt, but also some positives in terms of price and the government support to it.
Well, that's a well-rounded view on this FPO. Plenty of upside pointers, but plenty of factors to keep an eye on and perhaps be wary of as well as far as Vodafone Idea is concerned. But before we go across and take Ashish's view on Vodafone Idea, I'm going to cut across to my colleague Sesha Sen, who is in fact in conversation regarding this particular aspect. Let's listen in. I think we have a technical problem as far as that particular aspect is concerned. Perhaps if I can once again take a look at Nestle, and as I was suggesting, we're looking at a decline around 3.2% at the moment. And I was also talking about the valuations for Nestle, which have always historically traded at considerably higher levels. Even at the moment, I'm looking at about 80 times valuations. And it's something that this particular company has commanded. But I believe I do have my colleague Sesha with us once again. Sesha, over to you.
Is Nestle putting children's health at risk?
Yeah, certainly Nestle is putting in infant health at risk because these products are not only by the way of sugar, but they are unhealthy, as Nestle admitted itself few years back. Secondly, they are inherently also not sterile because containing powdered milk in them. That's why WHO also recommends that there should be no added sugar and salt in the food below 2 years of age. Indian Academy of Pediatrics in India also says so. Similarly, National Institute of Nutrition in India also recommends that sugar should be avoided. So the reason that this report is coming forward to tell us that there is a sugar which is around 10% in the product, and that's quite unhealthy, I would say.
All right. So how alarming is this? I mean, in terms of provisions and guidelines, do we have anything as such? How much sugar should be actually used in baby products?
The first question about alarming. Yes, it is alarming. The more you increase the intake of sugar in very young babies, it actually pushes them to consume more. So they consume more of such products, and it pushes them towards obesity and later on towards other non-communicable diseases such as diabetes. So this is very important, a point of prevention. That's why WHO recommends that. Now coming to the how much sugar it should be there in this product. The Foods for Infant Nutrition Regulation by the Food Safety Authority guides about the amount of carbohydrates. The carbohydrates is recommended somewhere around 55%, but in this product you will see that the carbohydrates are 68% and 23% is the total sugar. And added sugar is 9.1%, which is quite high in any standard of health, so that people don't know about it, number one. Number two, the more they consume, parents feel happy about it and they tend to consume more. That adds to the sales volumes of the company.
Okay. And thirdly, the most important question is there a law that checks promotions of such products in the country?
Yes, certainly there is a law existing since 1992 and 2003. The law bans any promotion of any baby foods for children under the age of 2 years. Now, this law also bans the promotion of products like Cerelac and related infant milk substitutes in India. However, it requires a lot of stringent and effective implementation as well as enforcement. It's a criminal law that if somebody violates it. But we have seen in the past few years, we continue to report that Nestle continues to violate this law on the digital platform, on YouTube, by hiring people to promote their products.
Okay.
Yeah.
Okay. So in terms of guidelines, what do you think the government should actually do in order to, check that such products are not being sold in the country, or in order to, kind of curb the obesity among children?
The best thing, Nestle should actually reduce the sugar to zero first to bring some degree of decency among the races in terms of why Indian children are subjected to this. I fail to understand, other than this, that they want to make money out of a big market. Mm-hmm. So government can best do is to check the promotion, monitor these activities on a regular basis, and also take them to task if they violate the law.
All right, well, that's the view on the latest subject with respect to Nestle India. Well, plenty of factors to keep an eye on, or watch out of there. But on that note, it's time to slip into a short break. And on the other side, we get you more of those stocks on our list. We'll be back in just a bit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. Times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away.
Welcome back to Hot Money. Well, we are going to take stock of ABB India now because what's really happened with ABB is that it continues to advance. It's trading at relatively high levels. And at the moment, we have another broken note on ABB India, which doesn't really cast aspersions on the business, but it does talk about valuation. So we do have Nomura, which has in fact downgraded ABB to a neutral from a buy. And they put in a price target of around 6,660 odd, which is not too far away from these current market levels. They say that the recent stock rally of 54% in the past 6 months warrants a rating downgrade. And it's essentially valuations where they have raised the calendar year 25 earnings by 5% and margins touching 15%. But structural changes over the last 3 years have led to this margins trajectory. That said, premium valuation are expected to sustain, driven by improved margins visibility, but that does not mean that they are hiking their price targets. In fact, they're keeping the price target at around 6,660, and that's something that we need to keep an eye on as well. Ashish, would you agree with this view? ABB India, strong fundamentals, but very, very overpriced at the moment?
Yeah, certainly agree. I think it is extremely overpriced on whichever way you look at it. I think the run-up has been immense. In fact, very difficult to put, but I think one should be selling this stock if one has one in one's portfolio. I think one will easily, once the things normalize or after a couple of months, I think one can easily get this back again at a much lower rate. So if you have been holding ABB, I think time to book profits.
Okay, all right. Time to book profits in ABB, and then we move on to the real estate sector. This is the other one which continues to move from strength to strength, and we have latest updates from Brigade and Dark. Let's get in my colleague Anushi to tell us more about this one. Anushi.
Hey Agam, so I'll start off with Brigade over here. Now both of the stocks, if you look at, they are buzzing at the back of the strong Q4 and FY24 business updates. Again, starting off with Brigade over here, the stock did see an intraday high of about 5.8%. Now, if you look at the Q4 pre-sales, that went about 51%, while the sales volume stood at about 2.72 million square feet of land. Now, coming to FY24, again, the pre-sales, a healthy 46% of a growth over here, and average realizations went up considerably considerably, seeing the 20% price increase that has happened over the course of this 1 year. Collections also saw about a 9% growth. Now, what remains in traction going forward for the business, that they have a land bank of about 10 to 20 million square feet of land coming into next 12 months. So that remains in focus. Again, now coming to TARC, TARC did hit a upper circuit of 5% in today's trade. This is after it achieved its highest ever pre-sales, which was about 200% at rupees 1,600 crore. Now, if you had to look at Q4, quite a abnormal number if you see the 600% of a growth rate that they have been able to achieve because of the recently announced TARC Kailasa in Delhi, which was launched in the last quarter. But for the business outlook going forward, another a heavy 5,000 crore of mark over here that they're estimating in pre-sales, which is quite a jump from the 1,600 they have recorded in FY24. So definitely a watch out on the outlook of the business going forward for TARC Limited as well.
All right, Anushi, thank you for those updates. Ashish, another sector which will be a tough call to take now because it's already moved up so much. Still, if you have any views on Brigade Enterprises or TARC for that matter in the real estate sector?
Well, I think Brigade Enterprises, a very good company, has done well. I think I have no issue on that. Stock again has moved up a lot, but I don't think one should be buying at these rates. But if you have already bought at lower rates, continue to hold on. We have a target here of about 1150. That's another I think around 10% more. So you can certainly hold on, and the target would be 1150, and otherwise on a longer term basis, the stock can continue to deliver good returns. But perhaps buying should be avoided at these rates. Wait for a decline or wait for some more time to pass. If it consolidates or declines, then try and buy. Otherwise, company is doing very well, and I think the sector itself is on a very good buoyant wicket. Only issue is the stock movement, which has run up a lot. So that is the only reason why I'm not putting a buy right now, but it is certainly a good stock to hold on to.
All right. Well, on that note, we've run out of time on the show, so I'm going to take a moment to thank Ashish for joining us and taking us through his views on the stocks and sectors that we will addressed. And with that, it's also a wrap on this edition of Hot Money, but lots more lined up on the other side. Stay tuned to NDTV Profit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages, and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Different people people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others,
Hello and welcome to Profit Insights. My guest today is Akshay Mundra, who is the CEO of Vodafone Idea. Vodafone is coming out with one of the largest follow-up public offer of 18,000 crores. We have Akshay today joining us. Akshay, 18,000 crores, one of the largest FPOs that you're coming to the market. Give me a sense of what you're going to do with this 18,000 crores.
Sajid, thank you for inviting me to this chat. Your question, I think before I get there, let me just also say that, as you said, 18,000 crores, largest FPO. We have completed our anchor allocation, and that has been announced to the stock exchange, and would just like to mention that in that we have names of many leading investors like GQG, Fidelity, Management Research. We have UBS, we have RWC amongst the foreign investors. From the Indian mutual funds, we have HDFC Mutual Fund, Motilal Oswal, Bond Mutual Fund, and we also have insurance companies like SBI General and ICICI Pru Life. So a fairly well-covered, diversified book with leading investors. And one of the strong points is that the hedge fund allocation is less than 5%, which represents also the strength of the book. To your question, what is the use of these 18,000 crores? This has been explained in RHP, and I'll briefly cover that. The total amount of 12,750 crores will be used for CAPEX. About 2,175 crores is for the spectrum payments, and the balance is for general corporate purposes. And out of 12,750 of CAPEX, about 5,700 goes towards 5G, and about 7,000 goes towards 4G, which is both a mix of 4G coverage expansion and 4G capacity growth. Just to make it clear that this is not the entire funding or the entire CAPEX that we are talking about. This is part of our overall funding plan, which also includes 2,075 crores, which is coming from the promoters, and additionally debt funding, for which we have been in discussions with the banks. And the idea is to have a fully funded plan for our CAPEX needs for the foreseeable future.
I know you are raising nearly 20,000 crores in equity, and 25,000 crores is expected to be raised in debt. In total, over the next 3 years, as the debt plans also fructify, as you yourself said that you are in discussion with the banks and financial institutions, what would be the total capex that you look to put in the next 3 to 4 years?
So while I'm not in a position to give you that guidance, what I can say is that the total equity plus debt is only being or is going to be used for growth capex. Our other requirements like payment of the existing debt, payment to vendors, and also payment of government dues post the moratorium will be met out of our internal cash generation. So the new funding, whether equity or debt, is primarily meant for growth capex.
Okay, I get that part of it, because you're in a FPO process, so you won't be able to give more than what is there in the RHP, and your full year numbers are also expected in the next couple or in a month or so. So I understand that part of it. But you mentioned that you got a good anchor book. GQG is there. There UBS, Fidelity, there's domestic institution. Many of them are long-term investors, and that means that they have to be assured what is the growth plan going forward. So what is the kind of assurance that you have given them? Because if they have to stay in for long, and there's long-term equity partners or strategic financial investor partners for you, what is the kind of assurances that you have given them?
I think we have explained to them our story, and like I am trying to explain to you. So let's say if I were to put it in a few points, one is that everybody is aware of the India story and what does it mean for various industries. So I think that I'll not talk about, but let's come to the Indian telecom. What are the positive things? First is that India has a growing population, a large population which is still growing, which is not the case with many other countries. And also the fact that every citizen of the country is either a customer or a prospective customer. So that is a strong point. Secondly, the penetration levels in India for 4G are still at 66%. And if you compare that with China at 116%, there's a long runway left for growth of penetration. The third is that the ARPUs in India today are amongst the lowest in any large economy or comparable economy. If you look at China today, we are less than 1/3 ARPU of China. So definitely there is room for ARPU improvement. ARPU improvement can happen in three ways. First is tariff correction, which is very obvious. Second is upgrade of subscribers from 2G to 4G or from lower usage plans to higher usage plans. And that opportunity is the largest for us because we have 42% of our subscribers who are 2G subscribers today. The third lever of ARPU improvement would also be that you are aware that today telecom industry is becoming the best means to digitally distribute any content. And delivery of content on telco platforms by major content providers, including all the OTT players, is a trend which is growing day by day. And that is another thing which augurs well for the growth of the ARPU of the customers. So this is from an industry perspective. The last point on the industry is that we are now having an industry structure with 3 private players and a government operator, which is right structure for the industry to get returns while participating in the growth, which was not the case when we had 10 operators. So I think the industry structure is also good. As far as Vodafone Idea is concerned, I would say we have delivered a fairly good performance post the reforms package announcement in September 21. This has been done even when we have had very limited investments because of the liquidity constraints, and also where we have continued to lose subscribers. But despite these two constraints, we have increased our 4G subscribers for 10 successive quarters, every quarter on quarter. For ARPU also increased 10 successive quarters sequentially every quarter. And you will say that the revenue and EBITDA trends are also moving in the right direction, of course, gradually. What prevents us from participating in the industry growth and still lose subscribers is the lack of 4G coverage vis-a-vis competition. And once we start using the funding for CAPEX, a large part of that and the highest priority of that is expanding our 4G coverage, which should enable us, or which we believe will enable us to arrest the loss of subscribers. Today, our subscriber acquisition of new subscriber share is already higher than our customer market share. And so the only reason why we lose subscribers is because of lack of 4G coverage. And as that gets issued through our funding and investment, then we are very hopeful that we will be able to participate. And I believe this is what kind of brings the investors to us. One of the other last important points is that the government is now a major stakeholder in the company, both as a shareholder and the largest credit provider. And given our situation and the balance sheet challenges we've had, which will get addressed over a period of time, it is government support will also play an important role. I was very happy to see the statements both by the Honorable Minister and the Finance Secretary yesterday, who have come out in support of saying that they need a healthy, competitive industry and have expressed support for the FPO of the company.
Actually, 17 circles, that's your focus. I was just looking at your circles. 15 of them, you are the third largest player in them. Is the focus going to be to push yourself from third to second in those circles?
I would say changing the rankings is not our primary focus.
I'm talking about revenue market share will also increase, right, in that sense?
So let's say that may be an outcome. What I'm saying is the way we look at our strategy is that we have to make investments so that we can grow our revenues. So our investments are focused on execution of our strategy. Whether that will result in change in market share, I'm not commenting on that. Of course, if you will see in the past, whenever any player kind of expands their coverage in a significant manner, it does result in improvements because then you start participating in a larger geography, larger market. However, our focus will remain on executing our strategy, investing as we plan to, and getting the benefits from them. And the market share changes would be consequential. And we have always focused on good use of capital, and that would also be one of the driving forces for the decision making on where to make investments and how to make investments.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
So once this fundraising is done, when do we see qualitative and quantitative improvement in your revenue mix, in your ARPUs, in your subscriber additions?
So, as I said, our revenues have been improving, 4G subscribers have been improving. The investment should make that improvement more meaningful rather than the gradual trajectory which we have seen without investments. In terms of where the investment will help us significantly is to help us arrest the loss of subscribers because of lack of 4G coverage. And of course, also to roll out 5G, which is important. I will not be able to give you a timeline, but I would say that investing in 4G coverage is our topmost priority. And we expect that once that investment is completed in an expeditious manner, that would be the biggest factor which will enable us, or which should enable us to arrest the loss of subscribers.
Because, do you think that you have bottomed out as far as the loss of subscriber is concerned on a gross level? Because 4G you've been increasing, but on a gross level you've been losing subscribers. So have you bottomed out as far as that is concerned? From now on, you're going to see a gross subscriber addition going forward?
So I would say that we have to make the investments first and improve the coverage and experience. But we are very hopeful that once that investment is made, we should be able to arrest the loss of subscribers. I mean, I would say that if today we get a higher customer acquisition compared to our market share, why would we not be able to retain subscribers once we are able to provide a better coverage? And that would be our focus here.
I've been speaking with some of the investors, and they've been saying that they expect you to add at least, 15 million net subscribers on an annual basis from here on. That's the expectation they are putting it on you. Is that an achievable target for you going forward? Every year, 15 million net additions from now on?
As I said, we will be able to participate in the growth of the industry and get our reasonable share. As I said, as we start participating, and we are doing more than our CMS in terms of new customer acquisitions already. So we hope that we should be able to match up to customers, the investors' expectations.
Good. On the tariff front, that's everyone knows that tariffs are low, but no one is willing to push the button first because who's going to take the plunge? But you will have to do that, right? That's the kind of assurance that you've given to the investors, saying that your ARPUs are going to go up, your revenues are going to go up. So give me a broad sense of how much the tariff can go up. Of course, you will take it on a phased manner, but what is the kind of potential tariff that can go up from here on?
So let me describe it that firstly, what should be the extent of tariff increase? And I would say that tariffs at least need to get to a level where the industry can start returning its cost of capital, which is not the case today for any operator. And we've had a prolonged period of operating below cost of capital, which is not good for any industry, because otherwise, where will the industry generate the cash to be able to make future investments? And we all know that telecom is an industry where investment will continuously be required. So definitely, the cash generation needs to get to a level where cost of capital is covered. Now, the second point is that what should be the quantum of increase, or where is the ARPU? So while I cannot give you a figure, there is a fair amount of commentary from our peers. And I would say that including the 5G investment, roughly the figures which the industry players are talking about in terms of recovery cost of capital should be right. So definitely fair amount of correction is required from where we are today to reach to a level where cost of capital can be covered. I would say the urgency is there because the cost of capital was not covered even when we were only in a 4G scenario for quite some time. And 5G has been added to that, which has further kind of accentuated the situation. So I think there's a strong need for tariffs to get to levels where ARPUs are sustainable and provide ability to the industry to make further investments. I would expect it to be faster than a very slow pace. In terms of a quantum of increase at one time, we have seen tariff increases the last 2 times. And that quantum of tariff increase at a single time has been well absorbed in the market. So sometimes one may have a concern, is something too much at a time? And we've had 2 precedents, I think, over the last 4 years or so, where price increases have been well absorbed in the market, realizing the fact that the absolute ARPU levels in the country are amongst the lowest in the
Can I put in a figure here? Because what I've been given to understand that you may need at between 20 to 25% of increase in tariffs post-elections up to FY26. Is that a right figure to go by to get the return on capital?
No, I think return on capital, you have to see that what is the current level of ARPUs, what is the ARPU required to get to a cost of capital. I believe that gap is much more than 20% today. So a 20% tariff correction will not take you there. How much would be the tariff correction? I cannot comment. But as I mentioned that in the past, tariff corrections of about 20% have been well absorbed in the market.
My final 2 questions that I want to ask you is, if by September 25, the moratorium ends for many of the telecom operators. And so every operator would be looking to increase the tariff so that they can generate internal cash flows to pay up the government spectrum fees which they owe. How do you see yourself? Will you be able to generate enough cash flows to take care of paying off government debt?
So, you see, the moratorium expires in September 25, as I mentioned in the beginning, that we are tying up the funding primarily for new capex, and the existing obligations will be met out of our internal accruals, which we expect will improve as the investments come along. In terms of immediately after the moratorium, whether we are able to pay the entire obligation from our improved cash generation or not, we'll have to see at that time. But what is important to note is that the government's reforms package announced in September 21 has provided that post the moratorium, this installment series, which is coming out of the 4-year installments which have been deferred, can be converted to equity by the government. And my understanding is that this was provided for in the reforms package because there was a realization that while the cash generation from the business will improve, whether it will be sufficient to take care of the government obligation immediately after the moratorium is over was not certain. And so government has provided this in the reforms package, a possibility of conversion of this deferred installment series, which would start from October 25 onwards. So that is one support which is available in case it cannot be made out of the full cash generation.
But that would be a backstop for every telecom operator, right?
I mean, yeah, that's available for any operator if they wanted to do, provided you have opted for deferment. So everybody has not opted for deferment. It is available for anyone who has opted for deferment.
Okay. I've been talking to many of the analysts, many of the investors that you've been talking to as well, and who've invested to you in your FPO. Now they see that if Vodafone is able to execute the plan that it has envisaged, moving to 4G, from 4G to 5G migration, and your subscriber additions that you're looking at on an every annual basis. They're looking at, they're hoping that the revenues would be from 40,000 crores now to 75,000 odd crores by FY26. Is that an achievable target for you?
Sujit, I cannot comment on specific targets. You know that very well. And I think in the interest of time, we'll have to bring this to a conclusion now. Because
that was my last question. I wanted to check with you whether that's an aggressive target the street has put in for you.
We'll look at that. Thank you very much for the conversation.
Thank you very much for joining us today, Akshay.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve.
Markets near day's high. Sensex trades above 73,300 while Nifty is near 22,300 levels. Barring healthcare and FMCG, all sectors trade in green. Vodafone trades 4% higher as India's biggest FPO opens today for the public. Global controversy sparks as Nestle adds sugar to baby cereal sold in India but not in Europe and UK. Company says it has cut added sugar over the past few years. And more earnings on our radar today. IT major Infosys, Bajaj Auto and HDFC Life are expected to come out with their April quarter numbers. Stage is all set for India's biggest event, 2024 Lok Sabha elections. Polling starts tomorrow. Hello and welcome. You're tuned into Market IQ. I'm Smriti Chaudhary, and for the next 30 minutes, we'll talk about stock-specific action, national and international news. But let me start off with the market check first. You look at the Nifty index that's trading close to the high point of the day. It's up about 0.6%. However, on the broader end of the spectrum, you have the mid-cap index that's doing better than the benchmarks. It's up about almost 1%, and Nifty small cap up over 1%. But let's look at the benchmark contributors and see what's pulling the index up. You have the contributors like Bharti that's up about 36 points. There's RIL, there's L&T and Infosys that now this is before the results. We're expected to see Infosys results today. On the other end, you have Axis Bank, Nestle that's pulling the index down. We spoke about Nestle, about how they're adding more sugar into their baby products, baby food products. Now this is a Swiss report that says that they've been adding more sugar in developing countries like India versus in the UK and Europe, and we're seeing that stock impact today. There's also Titan and HCL Tech that's also pulling the index slightly down, 150 points up about right now. But let's look at some of the sectors as well and see what's gaining. You have IT that's recovered. It's up about 0.7%. You have PSU banks doing very well today, about 1.3% higher. Auto doing well, about 1% up. Metals about 1.8% up. However, Nifty Healthcare Index is the only one in the lot that's it's actually pretty much flat right now, but it keeps on oscillating between the positive and the negative. But let's talk about some stock specific action as well. You have ABB India that's down about 1.8%. This is on the back of a Nomura note. They have downgraded the counter on rich valuations. Then there's Brigade Enterprises that's doing well in trade today, up about 3%. This is also on the back of numbers that it came out with. You have Vodafone Idea doing very well. It's up about 3.8%. The FPO opens today, and we'll talk about that in just a bit. Then there's Just Dial that's doing it's on tear today. It's up about it's almost 13%. Then there's Mastek that's just zoomed after a particular news flow around it. It's up about 11%. And the news around Mastek is that they have gotten an in the UK defense, they have gotten this entry. They have been awarded a place in UK's Ministry of Defence, Digital and IT Professional Services. This framework on an overall basis has a budget of £1.2 billion for 4 years. However, what will be the contribution that Mastek makes to it is we're yet to see that contribution. And Mastek will also come out with its numbers today in the evening. But the focus, we're focusing on this specific company today, which is RK Forgings. The company has won approval to supply powertrain components in the United States. Lalit Khetan, whole-time director and CFO of RK Forging, joins in here with us. Thank you, Mr. Lalit, for joining in and taking the time out and talking to us.
Thank you.
Let's talk about the order that you've just received for supply of powertrain components in the United States. And could you tell us the significance of this order, and if you can also peg a number to it?
So, this order is certainly very significant in terms of EV forays for the RKFL. And you can understand that it's one of the largest US PV manufacturer. I cannot take the name for the confidentiality sake. And certainly right now I can't give you a number also, but it's going to be a landmark order in the RKFL's EV initiative. And you can see upcoming quite a good progress on the EV front due to this win, this approvals basically.
All right. Any sort of guidance that you have, or any sort of, I mean, I'm trying to understand the contribution that this order is going to make to your books. Is that something that you can tell us? Any sort of top line contribution?
So I cannot give you a definitive number, but it will be very impactful in the upcoming years. This year, maybe initially, how the orders come, initially you need to get the sample approved and then it's bulk supplied. So this year will be like that. From the next year, you can see a very big volume on this front.
Okay, so volume is something that we're expecting this on. But let's talk about your capacity. We've seen that sort of grow. Now, the capacity numbers, are we going to see that sort of impact coming in FY25 as well in terms of your operational efficiency?
Yes, see, we are in the process of adding capacity, and continuously we have added some capacity last month also. And you can see that we have already a plan to go up to 308,000 tons of forging capability, and including that's cold forging and warm forging. So everything should be in place by March 25. So, and then you can see the utilization also improving and ramp up. So all will have its impact, and that's why there will be a consistent growth on the revenue numbers and the capacity utilization.
Okay, so we're going to see that impact coming in from FY26 effectively.
Will be impact in FY25 also, because a lot of capacity is already installed and in progress. Some will be coming in the June this year, some will be in the September this year. So there will be impact in this year also and next year also, both the years.
Anything specific that you can give us on that front in terms of numbers for FY25, of course?
So already we have given guidance for 15 to 20% growth on the standalone basis, year-on-year CAGR basis. So we stick to that guidance, and we will very much going to achieve that.
All right. Okay, so you also approved a 90 crore investment in February to set up forging manufacturing facility in Mexico. If you can talk to us a little bit about that and how that will impact your top line.
So that order is again backed by a take or pay clause, and this facility is going to start sometime this year. And initially, the first work will be on the basically conversion. We will be doing the machining work, and the machines and component will be supplied by my customer only, and we will only convert, and we are going to make handsome margin out of that. Once we are successful in Mexico in that, then we will put up the press facility also, and that will commence production next year. So that's the plan, and once that is successful, and then we can ramp up further. But yeah, for our benefit, both the orders are, both the initiative are backed by the take or pay order from my customers.
All right. So talk to us also about the synergies that are expected out of a merger of your two subsidiaries, Multitech Auto and JMT Auto Limited, into Ramkrishna Forgings. What benefits do you see post this sort of merger happening?
So we are right now merging Multitech Auto and JMT Auto. So both are having a lot of interrelated meaning. Like Multitech is basically a casting unit, and JMT also have a casting facility. So my casting capacity will be merged. So, and we are also in process of adding some casting capacity, and we have a lot of machining capacity at JMT Auto. So that will supplement my casting further production needs. So both the units are complementary. So it will be optimization of resources, optimization of, I will say economic scale can be achieved at a higher level. And you can see improvement in margin due to the merger of both.
All right. So also let's talk about the industry-wise breakup. Now, obviously, automobile holds a lion's share in your portfolio, but we've seen a little bit of decline there. Now, in FY25, what are we expecting in terms of that? Are we expecting this to grow, or there might be a slighter pull here on the automobiles, but a higher on some other segment?
So see, we are consciously focusing on some other segment to de-risk our sale from the automobile. That's why if you look at right now, we are 70% automobile and 22% comprising of railways, oil and gas, farm equipment, and general engineering. And our initiative is that we should first reach a 30% level on this, on the non-auto side, and ultimately 40%. So we'll de-risk ourselves from the cyclical nature of the industry. And with that process, we are working on this. And you can see there is huge opportunity in all these sectors. Even if you look at the railways, India is going through a transition and huge opportunity there. So we are there to encash those opportunities also, and that will help us to improve our top line also and margins simultaneously both.
All right. Thank you so much for that, and thank you so much for being so comprehensive with us, Mr. Lalit. Thanks for taking the time out, and we'll see you some other time again.
Thank you. Thanks a lot.
Thanks. So that was the management of RK Forgings. But let's talk about another stock that's buzzing today, which is Vodafone Idea. Now, the follow-on public offer, which is also the biggest follow-on public offer, opens today for the public and it closes on 22nd of April. Now, the price band for this specific FPO is 10 to 11 rupees. We saw a very strong anchor book on this one. We saw the likes of GQG come in, Fidelity Investments coming, and among domestic mutual funds, we saw Quant, we saw Motilal Oswal, HDFC. So strong names there, and they were able to pull up about 5,400 crore rupees, which is also the upper end of the anchor raise that can happen. So they were able to meet that sort of demand. So that's a positive, and we're seeing that play out in the stock today as well. While there is a lot of positive around why you should subscribe to this FPO, like there is government support to it. The government holds 33% stake, while that is going to come down to about 24%. After equity dilution because of this FPO, the government has time and again, including finance secretary, has come out and said how they support this FPO and they do not want the industry to have a duopoly. So the government is definitely supporting this FPO, and but however there are negatives as well. You look at something like a debt of the company. Its gross debt is about 2 lakh crore rupees. They have payments due post FY26. So in the second half of FY26, they'll have payments coming off about 30,000 crore, out of which 28,000 crore will be towards government. Now, they say that the proceeds of the FPO will be used towards capex. So essentially expansion of 4G services, setting up of 5G services. And there is, and only a little portion will be used, about 2,000 crores or so, that will be used to pay for spectrum dues, past spectrum dues. So the debt that they have, or at least large amount of that debt, they plan to they plan to pay that through their cash flows that they hope to generate after building this sort of capacity in 5G and 4G. But we'll see how this FPO closes, what kind of public demand do they get, and we'll bring you that update. But let's talk about some earnings. Now, a host of nifty companies are reporting their Q4 numbers later today. My colleague Puneet joins in for a quick preview of that.
Yeah, thanks for that, Smriti. So we're starting with Bajaj Auto right now. The company is expected to report exceptional numbers for this quarter. On a revenue basis, the company is expecting to grow at roughly 29% compared to this time last year, while on EBITDA as well as profitability, the company is expecting to report between 28 to 30% growth in its EBITDA and PAT margins. Now, going forward, commentary on the company's domestic as well as export division will be key. Do note that the exports are down 10% for the financial year 2024, and going forward, momentum in the export market is going to be a key monitorable. They're also expected to launch the world's first CNG motorcycle in the month of June, priced at roughly 80,000 rupees. And more details on the same in the company's con call will be a key monitorable. Moving on, HDFC Life is the second one that we're tracking. The company's earnings are expected to be a little subdued. On the annualized premium equivalent, the company is expected to report roughly 4,700 crores of APE versus 5,100 previously reported, which will be roughly 9 to 10% of degrowth. While on the VNB premium as well is expected to have a 14% fall, and the margins as well down roughly 6% compared to previous year, coming in at roughly 27%. One of the key monitorables for the stock will be the 10% year-on-year growth as well as margins on going forward. So apart from the upfront business, the business hasn't done too well in this quarter, and commentary on that will be another key monitorable. And finally, we are looking at Infosys as well. Now, the revenue might drop for the company in this quarter, but profitability is going to rise, albeit on a lower base. So on a consolidated quarter-on-quarter basis, the revenue may drop roughly 0.7%, coming in at roughly 38,588 crores, while on the EBIT margin, expansion is seen, coming in at roughly 20.7% compared to previous year, and net profit may rise roughly 1% on a year-on-year basis. Guidance on FY25 is going to be one of the key monitorables for Infosys, as well as constant currency revenue growth, how the company has grown, as well as any kind of forward guidance on that. Any kind of wage hikes, salary impact will come in the next one or the second quarter. So any kind of commentary on that will also be key monitorable. Back to you.
So thanks, Puneet, for that. We'll be watching out for those results that come today. But it's time for a short break now. But on the other side, we bring you a special election report focusing on Udhampur and Alwar. Stay tuned.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Welcome back. You're watching Market IQ on NDTV Profit. Let's talk about the upcoming election. Now, India gets ready for the first phase of 18th Lok Sabha elections that start tomorrow. The phase 1 polling will cover 102 constituencies spread across 21 states and union territories. Polls kickstart from the district of Udhampur, called the Gateway of Jammu and Kashmir. Here's a special report from NDTV.
Kathua, gateway of Jammu and Kashmir, is witnessing a fierce election battle. Kathua is part of the Udhampur parliament seat, where the BJP is facing a strong opponent for the first time in 10 years. The Congress's Chaudhry Lal Singh, a former minister and two-time MP, is pitted against BJP senior leader and union minister Dr. Jitendra Singh. Singh blames the Congress for helping Pakistan by not completing the crucial Shahpur Kandi barrage that would have ensured no water from the Ravi River flows to Pakistan.
ताकि तुष्टीकरण
और क्षेत्रीय भेदभाव की राजनीति के चलते वो नहीं चाहते थे कि इस इलाके का भला हो। मोदी जी के आगे जब ये बात रखी और उन्होंने इस प्रोजेक्ट को रिवाइव किया, अब ये तकरीबन तैयार हो गया।
The 2019 election was a cakewalk for Dr. Jitendra Singh in the absence of a formidable candidate from the opposition. But this time, the election was being seen as a one-sided affair, till the last-minute entry of heavyweight Lal Singh into the Congress. Lal Singh accuses the BJP of snatching land and job rights of people in J&K that were protected under Article 370.
मकान तोड़े जा रहे हैं, उसके खिलाफ खड़ा हुआ हूं मैं और मेरी पार्टी।
The Udhampur Parliament seat is spread over 20,000 square kilometers, with mostly mountainous terrain across 5 districts in Jammu and Kashmir. With 11 lakh voters, a traditionally high voter turnout is literally keeping parties on their toes.
Next few weeks are going to be very intense campaigning across Udhampur Parliament seat, where polling will take place in the first phase of elections on 19th of this month. It's a high-stake battle. Earlier, it was seen as a one-sided contest, but as campaigning picks up, it appears that it may well be a very tough competition between Congress's Lal Singh and Union Minister Dr. Jitendra Singh.
Well, the focus is also on Alwar in Rajasthan, and it's a Yadav versus Yadav battle there, where Congress MLA Lalit Yadav is taking on Union Minister Bhupinder Yadav.
पानी नहीं होगा तो जीवन नहीं होगा।
Known for its onions, mustard, forts and tigers, Alwar in Rajasthan will see an intense battle on the 19th of April between Senior Minister Bhupinder Yadav and Congress MLA Lalit Yadav. While the former, a key strategist and crisis manager for the BJP, is focusing on national issues and Prime Minister Narendra Modi's credibility, the latter has mounted himself as a local and more deserving of a victory. Bhupinder Yadav, who handles important portfolios such as labour and environment at the centre, has a punishing schedule. Nearly 47 sabhas visiting each village in the constituency, promising water and also a crackdown on the exam mafia.
मेरा अलवर के साथ जुड़ाव 40 साल का है। मेरी सिस्टर, मेरी बुआ, मेरे नाना, वो सब अलवर के हैं। ये सामाजिक रिश्ता आप यहाँ पर देख चुके हैं।
The seat was won by BJP in 2014 and also 2019. In fact, Rajasthan itself was swept by the Modi wave both times, which makes the outcome in Alwar in some ways predictable. Bhupinder Yadav says this election is about Narendra Modi and the country, not so much about the opposition.
ओपोनेंट का कोई ऐसा विषय नहीं है। ये चुनाव सीधा राष्ट्रीय मुद्दों पे चुनाव है। ये चुनाव मोदी जी पे चुनाव है और मतलब मेरे को नहीं लगता है कि कोई ऐसा कोई यादव होने के कारण कुछ है।
The Congress candidate Lalit Yadav, meanwhile, is hopeful after the Congress victory in 5 of the 8 seats in Alwar in the recently held assembly polls in Rajasthan. The centre should have done more to address the water crisis in the constituency, he says.
जो भारतीय जनता पार्टी के प्रत्याशी ने गांव-गांव में जाके ये कहा कि हम आपको नहरी पानी पिलाएंगे। मैंने गांव में सबसे कल मैं गया तो मैं वायदा करके आया हूँ कि मैंने कहा केंद्र मंत्री बताते हैं और इनकी सरकार केंद्र में है, तो नहर लाने की बात कह रहे हैं। ये नहर ला देंगे अलवर में तो मैं इस्तीफा दे दूंगा।
Voices on the ground talk about national as well as local issues.
वाजपेयी जी के टाइम से क्वाड्रिलेटरल्स रोड्स जोड़े, उनकी एक स्कीम ये भी थी कि वो सभी नदियों को आपस में जोड़ेंगे, तो वो एक पानी का मुद्दा वहाँ से सोल्व होना शुरू हुआ था मेरे हिसाब से।
देखो जी, यहाँ तो मोदी जी का क्रेज है। मोदी जी के
उसमें वोट पड़ेंगे।
बाहरी और लोकल का मुद्दा ज़्यादा है। भूपेंद्र यादव बाहरी हैं, ललित यादव यहाँ लोकल है।
Women here raise grassroots issues and share their experience.
जो खेतों में औरतें शौचालय के लिए जाती थी तो गांव वालों को भी दिक्कत होती थी कि ऐसे ऐसे खेतों में औरतें बैठी हैं शौचालय के लिए। अब साफ सुथरा माहौल है शौचालय बनने से। मोदी जी ने अच्छा काम किया है शौचालय।
These are the structures which show that this place has some connection with the past, but right now it is looking at a secured future, it's looking at a promising present, and water is at the center of it, which is why the war cry before the Lok Sabha elections of April 19th, Alwar votes in the first phase, is Nehar no mamlo hai, Desh no mamlo hai, basically combining national and local issues in one sentence. BJP's Bhupender Yadav, a veteran minister, is fighting against Congress's MLA, Lalit Yadav. This battle is going to be interesting. It's seen as a battle of Yadavs in a constituency that is dominated by Mayo Muslims, OBC voters, Meena voters, SC voters, and also Yadav voters. It remains to be seen as to whose narrative works, with the BJP focusing on national issues and promising to address local issues at the earliest, and the Congress promising to rehaul the entire system and putting the BJP in the dock.
Well, that's all that we have on this edition of Market IQ, but don't go anywhere. We have lots more lined up for you on NDTV Profit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some
Hello and welcome. This is the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. This is where we break down concepts and give you actionable insight so that you can make your investment decisions with confidence. On some occasions, we also like to speak to the people managing your money, the fund managers. It gives you an opportunity to understand their thought process and methodology and how they're reading the trends right now. My guest today has managed to beat quite a few of his peers in the two major funds that he manages. One is a mid-cap and the other is a flexi-cap fund. Joining me in studio is Niket Shah, the fund manager at Motilal Oswal AMC. Thank you so much, Niket, for taking the time.
Thanks, Alex, for having me here.
So before we get into each of these funds, and I would like to, of course, break these down and talk about your approach, and I guess there will be similarities, but let's talk about the overarching framework of the fund house and how your own approach to portfolio building fits into that.
So, Alex, as a house, we have always focused on the QGLP philosophy, which is, identifying the right stocks with very high growth without compromising on quality and provided they're available at reasonable valuations. Once you get these three combinations right, we've generally seen that it's a recipe for a multi-bagger, right? Okay. Or significant returns over the index. So that has been our overarching philosophy. The second important thing that we have now added over a period of last 3-4 years, because the markets have got much more broader. If you look at from 2010 to 20, market was extremely polarized with few sectors doing very well. Who thought that sectors like railways and defense will do so very well post-COVID? So the markets have become more broader, and hence what we have now started to do is that we are looking at different themes. We want to ensure that most of the themes that we want to play for the next 3 to 5 year period, we are invested ahead of the curve. And that has really helped us in the last 4-5 years to really perform well as compared to some of our peers.
Okay, so and what is the approach that you take as a manager of a fund within this overarching framework?
So I think for us, what is important is that you identify themes ahead of the cycle. And some of these themes might not be near-term themes. We generally look at investing in businesses with a 3 to 5 year view. Obviously, markets have become extremely faster nowadays. Something that you think that is going to come in next 2 to 3 years from a return standpoint comes in 6 months or 1 year, and you have to act by tweaking it down. But for us, primarily thesis has always been that we will focus on themes with a 3 to 5 year view. Themes where today the market is not appreciating it, and over a period of time, market will realize that there is significant value in some of them. Just to give you some example, if you look at some of the food delivery businesses that we bought much earlier in the cycle, or recently we've added telecom in a material fashion. These are themes that we believe that will play over the period of next 2 to 3 years in a significant fashion. And we want to be ahead of the curve by positioning ourselves and all our funds.
So that's what you're doing currently, but talk to me. So you said that this is something that you changed about 3 years back. Talk to me about things that you've done over that period, because I would think that in order to have a consistent outperformance, you need to get the strike rate more or less right. And not all of those themes will take off when you want them to take off. So talk about both ones that have worked and ones that have not.
So for us, multiple themes have actually worked in the last few years. So post-COVID, we went overweight on IT because it was extremely visible that tech will become the next big thing, given the fact that everyone was working from home. Subsequently, when tech really went through a valuation of 40 times, 45 times 1 year forward earnings, we thought that these are not sustainable. We actually went underweight on tech at a time where tech was a darling of the street. And we looked at capital goods, environmental clearances over a decade were at a lifetime high. We thought this is the time to go overweight on capital goods. If you look at the gross capital formation, was about 36% of GDP in the past, which has come down to 27% and now started to go back to about 30-31%. A lot of the stuff like PLI, Make in India were clearly visible and the benefits were about to come. So we went overweight capital goods, again, much ahead of the cycle, before the cycle really started. The third thing that we also did is, a lot of our themes like EV, right? We looked at companies where in the next 5 to 7 years, if EV penetration in the country has to materially move up, which are the companies which will benefit?
Not just the OEMs?
Not just the OEM, but from an ancillary standpoint as well.
Okay.
So which are the companies which will benefit? Now within EV, whether it is two-wheeler, four-wheeler, three-wheeler, where you really want to put your money on, because where is the profit pool? The profit pool lies in three-wheeler, and two-wheeler and four-wheeler will be a fierce, full-fought battle.
Yeah.
So again, having that granularity breakup of where you really want to go and put your money on. Fourth that we also did is, if you look at over the last 3-4 years, we have moved out of the large cap IT, we moved into mid cap IT, right? We believe AI is going to be a next big thing, and I think it will surprise all of us at the speed of which it is going to come to us. And I think the amount of benefit that the Indian tech companies will get over the period of next 2-3 years will be absolutely staggering. This is, I think, the next big innovation post-internet.
So you're going overweight now on IT again?
So we actually went overweight last year on IT when some of the large cap companies downgraded their guidances and tech went down. That was the time we went materially overweight on IT as such. And last but not the least is telecom, which I mentioned earlier. We believe this year is going to be a year of telecom. I think if you look at global ARPUs versus Indian ARPU, I think we are at far lower levels. The time is right to materially move up those ARPUs.
For all the entities?
For all the entities, hopefully. And over and above that, I think the penetration in the country for telecom is extremely, it's very well penetrated. So I think the next round of ARPU hike increase should happen sometime post-election, and that should lead to a further round of re-rating for most of the players.
Let's talk about both of the schemes individually, and I want to start with the mid-cap scheme. Assets under management of close to 9,000 crore, and we can pull up some of those numbers on the screen. The fund's one-year performance is about 61.4%, benchmark is 64.95%, which is interesting, but the category average is much lower at 50.9%. It's something of opposite ends, right? Or rather, flipping the story, where you're talking about large cap, which has failed to beat the benchmark for a long period, but then that role reversal took place over the last year, where you said mid-cap and small-cap fund managers have found it much harder.
Yeah.
Why is that?
So I think one reason is that the market has become extremely broader.
Right.
I mean, fund managers who have managed money for a long period of time have been used to buying certain set of stocks, right? Sectors like defense, sectors like rail, PSUs, no one thought they would have got to such an extent. So it took everyone by surprise. Now, for us, thankfully, we actually had, while we didn't have allocation to a lot of the PSU names, we had allocation to some of the other names which did very well for us, equivalent to what PSU would have done.
But Niket, I'm looking at your portfolio, and in both the mid cap and the small and the flexi cap, and I'm asking you this because it is relevant for both. The number of stocks that you're holding in the mid cap is 22. If I'm not mistaken, there are 27 in the flexi cap fund. And the top 10 holdings, it's what, 67% for the mid cap fund, 65+% for the flexi cap fund. This is a very small number. Doesn't that make your job harder?
Yeah, so Alex, we don't start at such higher weights. We generally start at 6 to 7%.
Sure.
It's just that those stocks have become 4x, 7x, 8x over a period of time. I think it's a good problem to have if you buy something at 6, 7%. I think the team has a very high conviction on a lot of stocks that we actually allocate. So wherever we have a large theme, the team has high conviction on it, we will go and allocate reasonable amount of capital on it. And over a period of time, when they multiply materially, say 3 times, 4 times, the weights tend to move up. And we do manage risk by cutting down weights if it moves about 12% or 13%.
So you're talking about weights of individual stocks. There are a couple of those in your portfolio right now.
That's correct.
So what you're saying is that, but 10%, isn't it mandated to have 10%?
No, so the regulation says that you can't buy more than 10% active on day one.
Okay.
Right, you can buy 9.99.
Right.
And then if the stock price appreciates,
right,
and then it goes to 12, 13%, that's allowed. But then that's an internal philosophy that we have that about 12, we won't allow it to go. So we will cut it off.
So and on an ongoing basis, you're saying that this is par for the course. If you see a concentration of 65%
right,
in the top 10 is nothing to be, nothing unusual from your perspective.
No, I think it is slightly unusual because what has actually happened is the stock bets that we took last year, thankfully all of them did very well. And all of them are either up 3 times or 4 times. And that's the reason why we have that kind of performance. Now, over a period of time, as the size really moves up, we will have to move to more number of stocks.
Yeah.
Having said that, when we buy some of these names, right, where we have 7-8% allocation to start with, I think the fundamental philosophy that we follow is that the downside risk has to be much lower.
Yes.
Right. So the risk-reward ratio has to be much more in your favor. Otherwise, you can end up, having a material bad year if there is a significant drawdown in markets.
So, but wouldn't your downside be protected if you have less of a concentration in a few stocks? So I'm trying to understand what the philosophy is.
So the philosophy is that if you have high conviction ideas, you bet big on them. And if you have done enough amount of work and enough amount of research on them, why not play it, with reasonable amount of weights?
Right.
Now, reasonable can be 5, 4, 3, 6, anyone's guess. For us, if there is extremely high conviction that we have, we believe that this is a company where the market is mispricing it materially, and it should effectively over a next 3 to 5 year period give us disproportionate return on our investment. We will actually start with 5 or 6%. Now, if that stock multiplies, it's a good problem to have.
Okay. So the other aspect that I'd like to talk about is, of course, the sector allocation. And there are similarities in both the funds, obviously, because you're right. Looking at the same set of stocks, right? There is and I'm looking at the mid-cap fund right now, there is the largest allocation towards technology. And there is also a significant allocation in both flexi-cap as well as mid-cap towards consumer cyclicals. Talk about some of these bets.
So I think tech, as I said, we believe that the mid-cap tech will do extremely better than the large-cap ones. I think some of the mid-cap names don't have a headwind of AI, right? Some of the large-cap ones do have some headwind of AI. If AI becomes larger, some of their business segments might start to decline as such. Having said that, the base of the large caps are much higher as compared to mid-cap companies. So obviously the percentage growth will look much more better for the mid-cap names as such. So we want to play that entire AI theme over the next 2 to 3 year period. And within that AI theme, which are the companies which are rightly positioned, is something that we want to really bet on. Within tech also, if you look at a couple of names that we have, is something on EV side, right? They do large amount of tech work or ER&D work for auto business as such. Now, if you look at the whole EV value chain, right? It starts with tech first.
Right.
You get the tech right, you get the, the entire ecosystem right, and then the car comes and then it goes to the market, right?
Right.
So we want to play the first cycle first, and then we will play the other cycle. We have bets in the other cycle as well. But we started with tech first because that's the first starting point for any EV manufacturer, any EV OEM to start with.
Okay, so we've got a fair sense of how you manage the building of your portfolio. I'm curious about what you think about valuations as they stand right now, broadly, in these funds that you operate, because you're looking at the broad spectrum and you're looking at mid-cap very closely. So where does it stand right now? Are you comfortable based on the kind of earnings growth that you've seen? IT, of course, we're bang in the middle of the earnings season. We're waiting for Infosys today. Let's see how that pans out. But and anyway, you're talking about mid-cap IT more than large cap. So how do you see the earnings picture right now, and how do you see the valuation?
So I think, Alex, if you look at from 1997 to 2020, earnings growth for mid-cap index was about 12%. If you look at earnings growth from 21 to 24, it's north of the 40%. So I think one really has to look at valuation in that context.
Okay.
While valuation of mid-cap, if you take a 10-year average, is about 23.5 times. And it's right now at about close to 25 times. So obviously we are higher than a 10-year average. But if you compare that with growth, we are materially higher than 20-year average.
So it's justified.
Right. So it's completely justified. So whenever there is higher growth, you will see valuation moving up. For example, if this growth had to slow down, the valuation will also come off.
Yeah.
Right, to that extent. So I think we have to look in that context. Having said that, while the valuation, the headline number looks higher, there are pockets where the valuation are extremely cheaper.
Okay.
Right, where we believe there is value. So I think there are a lot of pockets within the mid-cap space where there is value, and there is still, we believe there is materially lower valuation as compared to the longer term averages or global averages. Right, and we would love to have a large part of that as well.
Now the other aspect, and why I'm curious to speak to fund managers like yourself, is also there is a little bit of noise that was created about a large amount of inflows into the mid-cap and the small-cap space. And there is this new exercise that is being conducted.
Yes.
I would think that to a certain extent you were already, as an industry and as fund houses, doing this and looking at risks emanating from your portfolio. Do you think it serves the purpose to share this information with individual investors as well? And how would you explain the importance of the risk or the stress test that we're currently reading?
So I think, first of all, I think anything that the regulator does, we have to have a much more longer term view towards it.
Sure.
And I think whatever steps regulator has taken in the past on the industry side, most of them, in my opinion, have been in, beneficiary to the industry as such, right? And beneficiary to the retail investor specifically. If you look at the stress test in particular, larger the size of the fund, the number of days will be more, right? By design, right? Because there's X amount of finite volume a stock will actually do on a daily basis, right? And lower the size of the fund, that dynamics also plays out. So one really needs to keep that in mind. The second thing is, from a stress test point of view, I think what is important is that in case of a Six Sigma event, how much time would it take for the funds to give you back the money back is what I think a number it is. So I think it's not very, very relevant, for the retail investors to really look at it, whether it's a very well liquid fund or whether it's a fund where there is a lot of illiquid stocks around it. I think as a fund house, we also do a lot of focus prior to this exercise that we don't need to, buy a lot of, illiquid stocks, and hence, if you look at most of our top holdings are the ones which are very, very liquid.
Sure.
Right. So I think it would not, one should not get too much perturbed about the numbers as such, but I think it's a much more qualitative feel that the regulator wants to ensure that in a drawdown kind of an environment, the mutual funds are able to honor it.
So the final aspect, which is the opportunity that you have to speak directly to your investors, in this context, and we've spoken about valuations, and you've pointed out that there are pockets where there is actually attractive valuations, as opposed to people saying that it's across the board expensive. What message would you give to your investor right now?
So I think my message to investors has always been that think for the longer term. And one thing that we always keep telling all our investors is never give up on India, right? I think that every time when you think that the valuation is expensive, or every time you think that there is going to be a correction because market went up too fast, don't try to time the market, right? We have done that in the past and we have failed miserably ourselves. So the lesson that we have learned from our mistakes has been never try to time the market, always be for the longer term. There is an opportunity in market every day, right? Every day when the market opens, there's an opportunity for you to buy a stock and make material returns over a period of 3 to 5 year period. So I think about the longer term, don't give up on India. And yeah, that's a word.
So, and then the other aspect, and this is the final aspect, of course, is that I would think that, so I'm trying to understand. So you've described your portfolio building strategy. Is it all fundamentals, or there some aspects of quant indicators that you look at when you're building?
100% fundamentals. I wish I would know anything about technicals and quantitative quant strategies. Unfortunately, I don't know any of them. So we would like 100% fundamentals. Right. Our energy is 100% dedicated to that.
All right. So Niket, thanks so much for joining in. And in fact, I look forward to more interaction like this over the course of the year to figure out how things are panning out. And always a pleasure having you on the show.
Thank you so much for having me, Alex.
All right, viewers, there you have it. So Niket Shah of Motilal Oswal talking about his strategy and his approach to building the portfolio for you, the investor. But we've got more to talk about on the other side of this very short break, so do stay tuned. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable show.
If you want to be in the money.
Welcome back. You're watching The Mutual Fund Show, and my next guest is Amit Kukreja, who's the founder of AmitKukreja.com. Thanks so much, Amit, for taking the time. We were just speaking with a fund manager at Motilal Oswal, Niket Shah, and we were talking about his approach to building his portfolio. And incidentally, what stood out to me when I looked at the performance of his mid-cap fund and the category average and the benchmark is that not many fund managers in the space have actually managed to beat the benchmark over the last 1 year. What, according to you, is the reason why that has taken place?
See, Alex, we have to understand that markets are not very easy to comprehend. There are multiple factors that can determine the performance of a mutual fund. There was a PSU rally, there was a representation in the index and the representation of a mid-cap stocks in the fund. Right. There's also a factor that the allocation of the mid-cap fund has been more towards large cap also, more than 20% in certain cases, just to be protective about the investors' money. So there are many reasons which has triggered the underperformance of the mid-cap funds with respect to the index, but that doesn't mean it ends it all here. There are many other opportunities which have come our way. And there is also a horizon that needs to be kept in mind. If we were to conclude that this is time to exit actively managed mid-cap funds, and that is not the case. 1 year is too short a frame to judge it. But there are several factors that we need to look at, and that potentially caused it, that potentially caused the underperformance of the mutual funds in mid-cap category.
All right. Now, there are several queries that have come our way, Amit, and I'm sharing some with you. And I do want to point out to our viewers at this point that Amit does not give recommendations of individual schemes, but I'm still going to ask him to perhaps give us an idea of what schemes broadly he likes in categories. The first question, Amit, is Shankar. He's aged 49 and he's looking for guidance. He says that he's new to mutual funds. He has made 10 to 12 lakh last year through his stock portfolio, and he's now looking to invest those gains into mutual funds for the next 4 to 5 years. What kind of schemes or what kind of categories can he look at?
So two things I want to just call out. Shankar should have gone with mutual funds first, then with stocks. Investments is a layered strategy, right? So you should do diversified mutual funds first, then stocks. But anyways, he has already done the investments and he is talking about only investing the gains. I would rather say go full on with investments in mutual funds. Pick up flexi cap and multi-cap categories. We just spoke about the mid-cap and the small-cap underperformance with respect to the index. We need to make sure that the more flexi cap and multi-cap categories we have in our portfolio, the easier it becomes for us to have a decent double-digit return in the mutual funds portfolio. So pick, for example, UTI Nifty 200 Momentum 30 Index Fund. Fantastic performance. You can pick up Parag Parikh Flexi Cap. You can pick up Quant Mid Cap Fund. So these are some of the funds that he can add to his portfolio. Their performances have been very decent.
Okay. Incidentally, the next investor we have, Rajat Mishra, does have a SIP ongoing in Parag Parikh. He's got 50,000 rupees that is going towards that. And he's got another 25,000 that he's putting in the Nippon Small Cap Fund. Additionally, he wants to invest a very large amount of money. He's 56 years old, Amit, and he wants to invest as much as 2.5 crore and retire in the next couple of years. And he wants that corpus of money to give him a regular income. Should he look at an SIP approach or should he look at lump sum, and how should he, which fund should he look at?
So two or three words of caution for Rajat. I hope he has done a detailed financial planning exercise with somebody who has given him a right asset allocation strategy given his age. Second, he's thinking in terms of lump sum or monthly. I think monthly or putting a lump sum in a liquid fund and then doing a systematic transfer plan for over a period of, let's say, 2 years would be a better approach than doing lump sum in equity. And number 3, he needs to make sure he has a decent fixed income allocation before he moves into equity. So obviously asset allocation, a good fixed income portfolio, and then a stretched out systematic investing calendar from liquid to equity through the lump sum investments in liquid would be the right approach.
Okay, but to this end, and there will be a lot of viewers themselves or viewers who have their parents that are very close to that age, 56 or thereabouts, and a lot of them are approaching the mutual fund space for the first time. On an average, in your opinion, in a model portfolio, what kind of equity allocation should be there and how much fixed income should be there? Because I think people get this particular aspect either very wrong or not right enough.
Yes. So on an average, assuming the fixed income cost or the lifestyle, so I would say the lifestyle cost that you have given your age of 54 plus should be coming from a fixed income allocation. The rest can be put in equity, but in terms of asset allocation, at least 20% in equity or more, but you have to ensure that the fixed income, you have to think about the crashed market situation. If the market goes down, let's say market corrects by 20% or 30%, at that time, are you comfortable enough to pull out your money with losses? Or do you have a decent fixed income allocation which is going to cover for your lifestyle expenses and the crash does not bother you? And you have to also look at the liquidity of the investments also. So it's a very subjective situation that needs to be properly analyzed with an expert to see what's giving you regular income, what's giving you capital gains in terms of tax efficiency, what's the one which is contributing the most towards wealth accumulation and wealth preservation. 3 aspects need to be put together, and then a conclusion needs to be made how much equity and in what all equity funds and stocks.
Absolutely. Thanks so much, Amit, for laying that out. And hopefully, Sahil, this has, or rather, in fact, Rajat, this has answered your question. Thanks so much for taking the time, Amit. Always a pleasure speaking with you.
Thank you for having me on the show, Alex.
All right, viewers, there you have it. If you've got more questions, by the way, you can send them to us on the number on your screen. In the meanwhile, there's lots more coming up over the course of today. And this is NDTV Profit. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
Hello and welcome back to NDTV Profit. You're watching Large Trades, a show where we talk about all kinds of bulk and block deals, large trades and stocks that have been buzzing on higher volumes. I'm your host Mihika Barve and with me is Agam Vakil. But before we go to the host of stocks we'll be talking about today, Agam, how are the markets faring like right now?
Well, it's a mixed market, Mika. Actually, the last half an hour or so has taken the markets by surprise by seeing a sharp drop. And since then, we've had a little bit of recovery. And at the moment, of course, the Nifty is trading flat. We haven't seen too much traction, though we are looking at the Nifty trying to make an attempt to make a little bit of recovery. Do remember that at one point in time, the Nifty had gone below the mark of 22,100. And since then, it is trying to recover. It has recovered to just a tad bit, but you remember a lot of positions have been taken out of place, at least given the fact that it's been in options, weekly options expiry today. A lot of these factors will play out, and considering the increased volatility as well, it does seem like, well, at the moment, markets are becoming extremely challenging, especially for those who are in fact trying to write options at the moment. Now, if you consider how things are panning out as far as the Bank Nifty is concerned, you know, let's pull that up as well and take a look at what's really happening there. So a 0.3% decline there as well. In the broader markets, you know, let's take a look at how things are potentially turning out to be when it comes to your mid-cap index. That's up around 0.5%, and the small-cap index as well is up around 0.8%. So there's been a little bit of an outperformance as far as these crucial indices go. But really the question is that where do we go from here? Let's pull up your Nifty key gainers right at the top of the list. Let's see where you are seeing that pull and push. So we have Bharti Airtel, which is providing the bulk of your gains there, along with Infosys and TCS. And what's weighing down on the indices is banks essentially. Axis Bank, HDFC Bank and ICICI Bank, along of course with Nestle. Nestle has been weak since morning, but it's largely the banks which are actually pulling the indices down at the moment, and something that we're going to keep an eye on as well. To take a look at some of the key movers as far as the broader markets go, at least in terms of some of your larger mid caps, and that's something that I want to take into consideration for now. In terms of losers, we have weakness in IGL, which is down 4.5% right now. Max Health is the other one. Max Health is also down around 4%, along with Nykaa, that's down 2.6%. And we have the Nobir or Realty, which is also under a tad bit of pressure. On the other hand, if you consider something like a Mankind Pharma, that's up 5%. Indus Tower remains strong through the course of the day. That's down around, that's up around 4.9%, and Torrent Power is also up around 4.6%. So on the whole, we are looking at mixed cues, and we continue to keep an eye on a lot of these counters. That's notwithstanding all the counters that we have in mind and that we're going to address in our show today. Mihika.
Yes, thank you so much, Agam. Just to highlight, Nestle down 4%, and government sources are telling NDTV Profit that the Union Ministry will be taking the report that was published by the FSSAI very seriously, and they will be looking into it. But moving on to the stocks that we do have in focus today, we have something like a Just Dial, a Ramkrishna Forgings, PTC Industries, as well as Techno Electric and Engineering, as well as Angel One and Pricol and Mastech. But up first, we have Just Dial. Now, it gained just at opening up 9%, and now it's gained further up almost 14%. And we have my colleague Mahima joining us with more details on the same. Mahima?
Right, Mika. So Just Dial is buzzing, or rather I'd say ringing in trade today, where it did touch an intraday high of almost 14%. Volumes around 32 times its 30-day average, which is not usual for a stock like Just Dial. The resistance levels are around 1010, which is its 52-week high, and support levels at around 774, which is a 1-month low. Now, in terms of why the stock is buzzing, well, it came out with its Q4 numbers, where the revenues are up around 2%. So revenue growth has remained flat. However, the EBITDA has seen a significant growth of 17%, profits grew by around 26%, and margins have improved from 22.8% to 26%. Now, in terms of the overall update that the company has given, where in terms of traffic share, mobiles is the maximum, where the traffic is coming from around 85%, and the website gives around 12%, and remaining the voice call centers give around 3% of revenues. Now, in terms of revenues, the revenues have grown from 845 crores to around 1043 crores, and margins have also significantly improved. Now, in terms, we spoke to the management today, and the management has given some kind of guidance. They've said that the margins have improved on the back of cost efficiencies. The B2B business at present contributes around 26 to 27%, but going forward, they expect the B2B business to contribute almost 1/3 of the total revenue, and they were expecting that the top line will grow around 15% by FY25. Lastly, in terms of the street view, well, the street looks bullish on the stock. 7 say buy, 2 say hold, and 1 say sell. And overall, if we talk about the stock performance as well, 1 month the stock has been up 30%. Now, this is majorly on the move that the stock has witnessed today. YTD, the stock is up around 25%, and 1 year the stock has been up 52%. Back to you.
All right. Well, good updates coming there and there as far as Just Dial is concerned, especially based on its quarterly earnings. Mahima, thank you for joining us and taking us through those factors in there. And of course, looking at sharp up move in there. Of course, also at a 52-week high coming through. But let's talk about RK Forging then. And we now have Puneet joining us and telling us about what's happening here. Puneet.
Yeah, thanks for that, Agam. So, RK Forging is running on a business update basically today, where it's secured an approval to supply powertrain components to US's largest electric passenger manufacturer. And the manufacturer has granted approval for powertrain components. Based on this, the stock has hit the stock is up on volumes of roughly 5.5 times its 30-day average, while hitting an intraday high of roughly 5.5%. The quantification of management was on NDTV Profit today, and they haven't quantified the value of this particular order, but they have said that they're positive on this particular space. And going forward also, the company has been very active with its business updates this particular quarter, merging its subsidiaries and expecting synergy benefits out of it as well. On the Q3 earnings, the revenue was up roughly 36% for the company for the Q3 FY24 earnings, while EBITDA as well as margins have shown decent growth of roughly between 29 and 42% compared to the same time last year. It's currently automobiles constitute roughly 77% of the revenue of the company, which is down somewhere from 79.3% compared to last year. Other businesses such as railways have picked up, and they said that they are expecting to diversify also from and lowering the share of automotives by just a bit, which will still quantify to be the largest share. Finally, on capacity addition, the company was roughly at 96% capacity utilization as of Q2. So in the last quarter, they have said that they are in the process to add roughly 32,000 tons capacity addition, as well as has planned a cold as well as hot press capacity additions to the tune of 65,000. Taking all of these additions into consideration, the total final capacity is expected to go up from roughly 210,000 tons to almost 310,000 tons. And going forward in Q4, apart from commentary on the quarter itself, capacity utilization is one of the key things to look out for. Back to you.
Thank you so much, Puneet, for those updates. Up next, we have a metal components manufacturer, and that is PTC Industries. It's up in trade on the back of higher volumes, spared some of its gains, but up 7.5% nonetheless. But we have Kanaka joining us to give us more details about the company. Kanaka?
Thanks, Mika. So PTC Industries is a manufacturer of precision metal components and it's buzzing in trade today with volumes at 7.9 times its 30-day average with an intraday high of almost 13.4%. Now coming to its 9-month earnings, its revenue has risen 18% year on year and its EBITDA and net profit have also risen with 27% and 65% respectively. Now there are some past updates on the company. Firstly, its 100% subsidiary, which is Aeroloy Technologies, signed a long-term purchase agreement with Dassault Aviation. Now this multi-year agreement was for the supply of titanium casting parts made in India. Secondly, PTC Industries and Hindustan Aeronautics Accessories Division had signed an MOU, and this was for the cooperation for indigenization for various aviation grade raw materials, which was being built by HAL. Now, talking about its share performance, the share of PTC Industries has risen by almost 169% in the last 1 year and by almost 8% in the last 5 days.
Okay, Mika, thank you so much for joining us. Pardon me, Kanika, thank you so much for joining us and taking us through what's happening with PTC India. And again, crucial updates coming in with respect to this particular company, given the fact that we actually have some attachments with respect to the defense sector. And remember, the defense sector has been doing well. But very quickly, let me also address what's happening with HDFC Life. We've had earnings coming in, and your total income has come in. As well as your net profit, which does look like a growth. Remember that we were expecting a little bit of a decline when it comes to its annual premium equivalent, and those are the numbers we are in fact keeping an eye on, and we should have that for you up on the screen as well. As far as your total income is concerned, we're looking at a growth there as well. So all eyes will remain on the annual premium equivalent as well as the value of new business added. And then of course you will have that VNB margins as well, or whether or not that has changed substantially. We're expecting a decline, but at the moment it does seem like the stock's holding on, and we don't have too much in terms of your profitability. Of course has moved up around 15%, which could possibly have been largely in line with street expectations. It's a wait and watch on the granular details, but for now it seems like the stock is holding on, and largely, at least as far as your top line, the bottom line is concerned, largely in line with street expectations. There you have it. Just about tad bit higher than what the Bloomberg estimates were when it comes to net profit. Again, that's something that we will continue to keep an eye on and track. But on that note, let's get in Anushi, who's going to join us to take us through Techno Electric and Engineering, another one on the radar when it comes to volumes. Anushi.
Right, as you mentioned that the stock is in focus on its higher volumes now. So Techno Electric's volumes are buzzing at about 4 times its 30-day average, while the stock did see an intraday high of about 9%. Now, no fundamental drivers as of driving the sort of performance that we are seeing, but we'll still go back to the order book and the kind of performance it has displayed over the quarters to get a sense of how the company has been doing. So if you had to look at the order book position, that stands at about 5,400 crore, with the top orders coming from players like Power Grid Corporation and Rajasthan Rajya Vidyut Nigam. So over here, based on this order book, we are seeing some strong top line growth going forward. Now 400 crore of growth what has the company had clocked in this quarter, but now they're expecting an addition of about 550 to 600 crore for Q4, and while going ahead into FY25, they expect the per quarter growth to be in the range of 800 crores, which will take their targeted top line to about 1,750 to 1,800 range in FY24, and double of that, 2,500 crore in FY25. Just to get a sense of the numbers also, like the base numbers, do note that the base numbers were weak because of the kind of activity that the company had been seeing in Q3 of FY23. So we are seeing some large growth numbers over here. Revenue seeing about a 76% growth, while the EBITDA was up about 141%, and the margin shifting to 17.5% compared to 12.6%. Now what the analysts are saying about this stock is, if you had to look at the overall ratings, 4 buy ratings, 1 hold rating and 0 sell ratings. So again, this stock has been in focus for quite some time, and we'll continue to watch out for any fundamental drivers going forward.
Thank you so much, Anushi, for that update. Up next, we have a broking firm, and that is Angel One, who posted its Q4 results yesterday. Now, the stock has pared all of its gains throughout the day. It's now in the red, down about 0.5%, but it did reach an intraday high of 8.7%, and volumes over 3.6 times the 30-day average. Now, this was on the buzz, and the stock uptick was on the back of their Q4 numbers, where total revenues grew 63%, and the stable revenues came from even more than 5-year-old clients. Their EBITDA margins were at 39% versus 54%. The decline in the margins is largely impacted due to upfronting of acquisition costs, is what the company states. Net profit was up 31% at 340 crore rupees, and their total client base was up 61.5%. And it's to note that Angel One is one of the top ranking broking firms with about more than 50 lakh active NSE clients, and the expanding client base that the company is seeing is leading to the higher net broking income for the company. When you look at the gross revenue mix, around 68% of their revenue came from gross broking income, which was down 2% when you compare a year ago, and 85% of this gross broking income came from the F&O segment, which is the highest share, and 11% from the cash segment. Whereas in terms of interest and depository, interest had an 18% revenue mix, while depository was at 4%, both up 2% when you compare to a year ago. And one more key driver that has been driving the company's performance is the fintech model. Now, the target addressable market has increased in terms of there's a lot of potential, because the fintech modeling is enabling penetration for the addressable market. Currently, only 10.7% of the total population have demat accounts, while 2.9% of the total population are active NSE clients, which gives a bigger picture of how much the addressable market could grow for this company itself. But it's time to slip into a short break, but do stay tuned. We have lots more lined up on the other side.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Welcome back to Large Trades. We are putting the spotlight now on Mastek. That's the one on our radar as well. Of course, it's going to announce its earnings a little later on in the day, but let's get in Rucha to tell us more about what's happening here. Rucha.
As correctly mentioned, Mastek will report its results today. Mastek is an enterprise digital and cloud transformation partner which serves across various industries. Volume and stock performance for today goes like volumes. It has volumes of over 8x of its 30-day average. It has hit its upper circuit at 20% because of because it has been awarded a place in the UK's Ministry of Defence Digital and IT Professional Services Framework, which is also called as DIPS. This framework has a budget of 1.2 billion euros over a period of 4 years. Secondly, it will also be a subcontractor for Quintech Limited to offer services like DevOps, app support and cyber security amongst other services. There are 5 brokerage views on the stock. 5 of them has a buy recommendation with an average upside of 8%.
Thank you so much, Rucha, for that update. Up next, we have Precall, which is buzzing in trade, up almost 8% and on the back of higher volumes. And we have Varsha joining us with telling us more details about the stock. Varsha?
Hi Mihika. So yes, if you see, Precall is buzzing today. Now volumes are over 5x of its 30-day average, while stock has seen an intraday high of 7%. Now this is on the back of Anand Rathi giving a buy call with target price of around 495. But let's look at what does this company do and what are the growth prospects of this company. So basically, this is an auto ancillary company which manufactures driver information system and sensors, then pumps and allied products for many of two-wheelers and four-wheelers. So their major customers include Bajaj, Hero MotoCorp, Royal Enfield, Ashok Leyland, Tata Motors, Mahindra and many more. Now what's working for this company is, first is electrification of vehicles. So they are manufacturing a lot of products like disc brake and battery management system, which is something under development. In the next 12 to 18 months, they would be launching those products for a number of EV customers. Also, they are launching the new products such as battery management system and coolant pumps and oil pumps are under launch, wherein ED coolant pumps have already been launched during Q3 with both Tata Motors and Ashok Leyland. Also, they made a state-of-the-art driver information system for Dalma truck. If you see the growth prospects for this company, they've given guidance for FY26 where they see revenues of around 3,400 to 3,600 in terms of organic guidance and with margin of almost 13 to 14% by FY26. So this is all we have on Precall.
Okay, Varsha, thank you so much for joining us and taking us through what's buzzing behind Precall. But let's move on and talk about the infra sector. In fact, infra passes damning order against Reliance Capital's auditors. But what about the perpetrators of around 7,000 crore rupees of fraudulent lending that the infra has pointed to? Former ICAI chairman Amarjit Chopra weighs in. Listen in.
You see, so far as this NFRA order is concerned, it actually damns the auditors very badly. There are a large number of observations, but few of them, if I can summarize. Number one is that Reliance Capital made loans of about 12,500 crore rupees to its associates, subsidiaries, or other related parties for that matter. Firstly, what has been stated is that the auditor actually didn't look at the creditworthiness of these various entities. These loans were not being repaid. Those companies were in losses. They were not creditworthy. They would not have been able to repay these particular loans. Second most important observation is that probably these companies didn't utilize the money for the purpose that they had actually been given loan for. Now, it may be said that it may be too difficult for an auditor of Reliance Capital to verify the end use of those funds at those entities. But somewhere or the other, probably it also brings out one particular fact that auditors need to be careful in future, particularly in the case of the NBFCs, that the loans which are being given, particularly to the related parties, these are being put to the use for which these have been taken by those companies. Another very important observation that the NFRA has made in this regard is that when PwC resigned, PwC had made a lot of allegations and had gone even under 143(12) of the Companies Act to report the matter to MCA. What the audit committee and the board did, and I think they played very smart, they kept on alleging that all PwC observations were absolutely baseless and it had no meaning. What they did, that they told this particular firm, Pathak D and Associates, that you look at whether whatever allegations have been made by PwC are correct or not. Now, firstly, I personally feel this was a special assignment. This should not have been taken by Pathak D and Associates under any circumstances. They had no reason to comment upon the performance of PwC. Rather, they would have been forewarned on account of these allegations by PwC and must have a deep dive into all those matters which PwC had alleged against Reliance Capital. Instead of doing that, they went in and submitted a report which said that probably these allegations are baseless. Now, firstly, I personally feel this jeopardizes the independence of the audit. There was no way that they should have gone ahead with this particular assignment. I'm not privy to the information whether they charged any amount for this particular assignment or not. And had they charged it, I think it would have been more damning for that matter. And the other thing that one may like to say is that you just cannot rely upon a legal opinion absolutely blindly if the legal opinion is blatantly wrong. What has been alleged by NFRA is that whatever opinion they had taken, that was blatantly wrong. So, and the company had taken. And the auditors relied upon that particular opinion and then went on to give a report which should not have been given. And the other point that is that if these parties were not repaying and there was evergreening of these loans going on, probably they should have applied the expected credit loss model, or they should have gone for some kind of provisioning against these loans. After all, if the aging of these loans is to be seen, and which NFRA really talks about, if it is overdue by 6 months or 1 year, it's a different matter. But if it is overdue for years, some kind of provisioning is definitely required. You don't ask for it, and you go and issue a clean report. You don't get the provisions created against 12,500 crore of rupees. According to NFRA, probably a provision of more than 6,000 crore would have been created if they had followed certain provisioning norms. So that is where probably the auditors have been caught on a wrong foot, and all those consequences that they are facing today.
And with that, we're completely out of time on this edition of Large Trades, but do stay tuned that we have lots more lined up on the other side. India Market Close up next.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Bro, what are you doing?
I'm just
If one statement can put paid to the hopes of the market, I think we saw an exhibition of that today, because if you look at the markets before the last 1 hour of trade, they're down flat, but I use the term down simply because they were up for a better part of the trade. The intraday of the Nifty shows you that a sudden come off right here, a sudden come off on the markets around the time that those statements on the geopolitical front came in a little bit. I would ascribe that to be the reason. Maybe Tamanna has different thoughts to this as well, but this probably is the reason why the indices have done what they've done today. The mid cap and the small cap indices will come up on your screen very quickly before we talk about what's happening on the individual movers in the session today. So while the Nifty 50 is flatlining, remember the small caps started off very, very well. Even the mid caps did, and while they also had a bit of a skirmish, they're still in the green. The mid cap index about 0.5%, and the small cap index even more so, about 0.7%. So good going for the broader end of the spectrum for sure, which explains the market breadth, albeit a bit constricted than before, but still in the green. Let's get the heat map up on the screen for the Nifty and show you what's moved on the Nifty and what's not. A bit more red than what there was at the start of the trading day. As you can see, almost even Stevens, with heavyweights like HDFC Bank also in the red. But the key culprits, Nestle, and not surprising that it's met with this fate, 3.5% lower in the session today. From a consumer perspective, arguably the biggest news story of the day. Some bit of pain points for Axis Bank, Titan, ONGC. It's across the board really. There's no specific pocket which has been chosen specifically for punishment. Bharti Airtel, on the other hand, 5% higher for this one. Really strong showing. Actually, telecom per se has had a really good run today. You have Bharti, and I'm sure Tamanna will speak about Vodafone, Indus, etc. All of those have done well. There is Power Grid, which is up about 2%. Bajaj Auto, out of the numbers, 2%. And some strength for the beleaguered tech companies, the likes of TCS, LTIM, and Infi, amongst others, which have done well for themselves. But Tamanna, the broader end of the spectrum, much more active today and much stronger than what the headline large caps are currently.
And frankly, it's all about the numbers. Very, very clear reaction to corporate numbers. I reckon from what we've seen so far, it's not looking too bad at all. Q4 so far is looking very good. Of course, we'll hold our horses till all the big numbers come. Remember, just in about an hour or so, you will see what Infosys numbers are looking like. You'll see what Bajaj Auto is looking like. So do stay tuned for all that and more. Now, some of the stocks that we are highlighting, and yes, absolutely, the jury is out whether a comment from the Israeli defense minister has spooked the markets, or is there more to it? Qatar looks like it wants to stay out of this whole situation, but frankly it's difficult to say because Israel's position has been known for a while now. Having said that, let's just move to the big stories this afternoon and the big movers this afternoon. Just Dial definitely on that list. Yes, Vodafone and Indus Tower is eye-popping, but Just Dial is truly eye-popping. I want to move that down so we can actually see what the stock impact has been. Yeah, 12% up on Vodafone, on Just Dial. Spectacular numbers in this quarter, which has seen Just Dial doing absolutely well. We spoke to the management today and we'll play out an excerpt of that conversation. You should stick around, stay tuned for that. Vodafone's the other story, and with that I would add an Indus Towers just because of impact. It's the stock of the day, off its highs of the day, but Indus Towers in the anticipation of some debt repayment once Vodafone gets some money, essentially over 4% up. So movement there. Nestle, it's something Neeraj just perhaps addressed, but I just want to come back to it and how sometimes just a lack of corporate governance is also punished by the markets. At least that's what we're seeing today, 3.5%. And just one astonishing fact, Mahima, my colleague, pulled out that in India, in the baby food segment, Nestle has a 98% market share. That means people today who are seeing the news that they put too much sugar and don't want to go for it, don't really have an option. All right, Biocon is the other one that we should address. They've signed a pact for generic Ozempic. This is in Brazil, but having said that, that's really the big drug everyone's talking about. So Biocon up. I don't know if you can pull up Spark. They're now getting beaten down because of a clinical trial which didn't work, and we'll try and get up Spark. But meanwhile, Angel One also, because you're seeing movement there because of results, and Angel One was up all day, now coming off because basically its margins aren't great. The numbers are looking fine, but the margins aren't great for Angel One. That stock down. We just had Spark a second ago, so we'll pull that back up and I'll tell you what's happening with Spark. They were doing a clinical trial for a very important drug which has failed. It's not really showing that kind of a relief for Parkinson's actually, so they've suspended that trial, and Spark has been hit consistently in the last several sessions, down another 5% today. So these were some of the key movers, but all focused now on the companies where numbers are going to come in a bit.
It's certainly an important afternoon, and we'll get to some of those as well. And let's start getting in some views around some of these specific names. And of the market wide. Aditya Arora, founder of Adiltic.in, to talk about the technicals and the derivative position. And after a really long time, presumably for the first time on India Market Close, Gurmeet Chadda, managing partner and CIO of Complete Circle Consultants. Gentlemen, both of you, thanks so much for joining in. It's been a while, Gurmeet, that we've spoken, so great having you. Aditya, good to see you on the show as well. Aditya, can I quickly start with you first though? Just a word on the charts. I mean, they've just come off a little bit. Is the market looking skittish, or are you constructive? And what are the stocks that you're recommending for this afternoon?
Very good noon to everyone. I think market structure isn't very positive if you look at the immediate short term, because the derivative data buildup which we saw yesterday was again negative, and it has been negative since last few days. So I'm not aggressively bullish on the market, but these levels offer an opportunity to accumulate stocks like commodity sector is doing pretty well. So I'm constructive over there, constructive on metals specifically, constructive on sugar counters. So these things are doing pretty well internationally, and those positive sentiments should trickle down over here as well. On index level, I would like to wait and watch, once again, when the momentum comes back in the market, and once we breach 22,500, then I would be pretty positive on the market on Nifty. And on Bank Nifty, I think these levels are pretty good. 47,200 at these levels, I would be bullish on Bank Nifty, keeping a stop loss at 46,800. And I would be looking at upside of 47,500 to 47,900. And the stocks which I'm looking is, I think markets are pretty volatile these days. So I would like to go with little defensive counters which are not very sensitive, but today they are doing pretty well. First pick would be Bharti Airtel. Stock is doing pretty well today, up 5% or so. So this could be bought at 1281, 1210 would be the stop loss.
Okay, Aditya, I think we've got a slightly patchy line. We'll try and get that. But if we have the stock ideas, maybe we can just pull them up as well. But clearly, Airtel looks to be one stunner out there. And frankly, it seems that telecom might be a stunner. We'll talk about telecom in just moments from now. But Gurmeet, just an initial thought. Have you been buying recently, or are you biding your time a bit?
Neeraj, on Bharti or markets in general?
No, markets in general. We'll come to telecom in a moment. But markets in general first.
No, so I think one thing template has been clear for some time. I think it's been a buy on dips market. We have to take a view. I think our view is we are in a bull market, and bull market moves are sharp. We saw that sharp moves when stress test happened in small and mid cap space. We saw 1 day fall in small cap index by 7-8%. I think it was in November when the US 10-year crossed 5%. I think that's in the short run. That's something which could be some bit of an indicator in terms of whether you want to go a little overboard or want to keep some dry powder. Whenever the 10-year has crossed 450, I think there has been some flight of capital, mostly from risk assets, especially emerging markets, and that has led to some bit of that. So I think we are firmly in that camp. Core inflation minus food and energy is 3.8 for India. FX reserves are shaping up well. You look at PMI, all macro indicators are solid leaders. I think we are the only market which got an EPS upgrade last year. So I think this geopolitical uncertainty, I think sometimes it's just better to wait it out. So for now, I think we are saying not doing anything is the best thing to do. And if the market will give some indication in form of some downward pressure in the yields on the 10-year, on the gold prices, etc., that's when you get a more formal view in terms of whether to add more in this decline or not.
Yeah. Good afternoon, Gurmeet. Tamanna here. I was just curious what your theory is for what caused the mid-market dip today. Was it a geopolitical statement? And how heavy are these kind of statements or saber rattling going to hang on this market?
See, I think it's a combination of today being Thursday and some statement coming from the Israel finance minister. I think my personal view is there could be some horizontal escalation, knowing kind of response Israel has had so far on this, and this could lead to some bit of spike in oil prices and some turbulence here and there, and that's why the market is a little bit nervous. But I don't think so. It has the potential of that theory of stretching into World War III. I think this looks a little overdone to me. But as I said, sometimes it's just better to wait it out. And anything where India falls for non-India reasons in the past has been a great opportunity. Whether it's been Russia-Ukraine war, Israel-Hamas conflict, you can go on for last 10 years. Whenever it's been for non-India reason, I think the key thing here is that you be in a portfolio which has earnings growth. I think that's your biggest hedge in the market. Get into stocks which have good momentum, good growth. I think that should help you well once these things settle.
That's a good point and a great quote as well. Whenever there is a fall in the Indian markets for a non-India reason, it becomes a great opportunity. Another opportunity which could present itself for investors is the Vodafone FPO. Is it truly an opportunity or not? Smriti has broken it all down, all the pros and cons. Smriti, what conclusion are you coming to?
Well, I'm going to give you the positives and negatives on that one, but let me start off with the key numbers here. Now, this is an 18,000 crore FPO, which is the biggest FPO till date. Now, out of this 18,000 crores, the anchor raise was about 5,400 crore, which hits the upper limit of 30%. That's what anchors, that's the limit that anchors can put in the money. Now, the price range for the FPO is 10 to 11 rupees, and the anchor bids were at the higher end at 11 rupees. Promoters have also infused some capital of about 2,075 crore. This was even higher. So it was at 14.83 rupees. Now, if you look at some of the positives that come out of it, within the anchor raise, we saw some marquee names like GQG putting in the money, and GQG was one of the biggest investor into the anchor among the anchor investors as well. It invested about 1,348 crores and was given about 25% of the total anchor raise. Then we saw some other names like Fidelity Funds come in with 774 crores. They've put in that. Red Wheel Funds about 281 crores. So big names there. So that seems to kind of show the confidence in the company. And we also saw some domestic funds like HDFC, Motilal, BNP Paribas, 361 funds come in and put in money, and the domestic was about 16% of the total anchor raise. But let's talk about how they're going to use these FPO proceeds. Now, they plan to put money into 5G, to roll out 5G, and the company has a target of covering 40% of their total subscribers in the next 2 years itself. They also plan to expand 4G services. So that's pretty much the plan for using these proceeds. Now, another positive for this is government support to this FPO. Government has come out, including the finance secretary, who's come out and said that they support this fundraising. So that's another positive, that the government is not going to let this telecom major die. So that's another positive into that. And you also look at some street expectations. They're giving revenue expectations to their investors that they're going to raise from 40,000 crores to 75,000 crores in the next 2 years itself. They plan to migrate 2G customers to 4G. Now remember, they have 43% of their subscriber base is 2G. So big opportunity there, the conversion to 4G. They also expect tariff hikes in the next 2 years itself. And we're looking at 20 to 25% of tariff hikes. However, there are some downside risks as well. The gross loan for the company stands at about over 2 lakh crore rather, and 90% of that is owed to the government. Now, these payments will become due post FY26. So in the second half of FY26, they'll be liable to pay about 30,000 crore, out of which 28,000 crore will be towards the government. However, the company has time and again said that they may utilize a relief package, which is essentially converting government dues into equity. So that's the option that they have been talking about pretty much a lot. Now, so that may play a major role in dilution of equity. We're anyway going to see about 26% dilution post this 20,000 crore fundraise. So that's another downside to this as well. And the last but not being the least, they have lost 5.6 crore subscribers since Jan of 2021. So to bring that sort of subscribers back into the company, especially when you're also hiking tariffs, now I understand that will be across the industry, but that's something that we'll watch out for.
Okay. Smriti, thanks a lot for that. So that's the pros and cons of Vodafone. By the way, keep an eye out for the market as well, and we'll get to that. But since we're on the topic of telecom and Vodafone, Gurmeet, would you be tempted to put in money into Vodafone? And what's happening with Bharti as well? It's been on a roll today. There is also some very strong traction seen in Indus Towers.
I think Bharti has been on a roll for almost 2 years now. I remember it getting stuck in a range for a while. And I made this discussion when we used to interact that you can't have Jio at more than 100 billion valuation. Now, obviously, Jio platform is around close to $150 billion valuation, and Bharti being 50 billion. Today, I think crossed ICICI Bank's market cap, if I'm not wrong. And great additions on 4G and 5G. I think on a quarter-on-quarter basis, they've been adding 6 to 7 million on 4G, 5G. Industry-leading ARPU. The digital portfolio seems to be doing well. The home broadband business doing well, and some stability even in the Africa business. I always believed that Bharti was slow on payment banks and digital. It would have done much better with the it was the first to get that license. I think I see more value unlocking there. Bit of a rub-off from the Bharti Hexacom, its subsidiary IPO as well, which got a very good response. My sense is this, it will eventually become a 2.5 pair. It's already a 2.5 pair. Vodafone Idea, probably in my view, I'm a little concerned on equity dilution. If government converts the dues to equity, it will almost be 80% kind of holding for government, and 18,000 crore isn't much. It will be used to first enhance 4G sites and then get to 5G sites. So there's already a gap. And post-merger, Neeraj, if I'm not wrong, they've lost 19-20% market share. They had almost more than 42, 43 crore subscribers, if I'm not wrong. It's down to about 22. So I don't know. I'm not too sure. In fact, last 2-3 years, a lot of people have wasted their time on analyzing too much on Voda, Yes Bank, Z, etc., and probably have missed the entire bull market.
Okay, fair point. Okay, we'll take the views from Aditya on the other side of the break because we really need to slip into one. Aditya, just stay on because we'd love to come and talk about the markets with you a bit because the markets have taken a turn for the worse, by the way. Before we take that break, just look at what the indices are doing. Bank Nifty in particular, but the mid-cap index too has slipped into the red, and there is a bit of a pullback in the Nifty 50 from those levels at the lowest point of the day currently. Quick break, be back with more in just moments from now.
We are joining NDTV's Pledge to Vote initiative. I pledge to vote and also encourage all of my colleagues to exercise their voting rights. Election is the largest celebration of democracy and we fully support it.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to...
Welcome back. Now, markets have taken a turn for the worse. Where and when exactly has this statement come needs to be seen. Is that what is spooking the markets? A statement doing the rounds of the Israeli finance minister saying that we will retaliate in a way that Tehran rocks. Now, remember, the expectation of the market is that whatever had to happen is done because of the 300 missiles that Iran rained down on Israel. One got through, 99% just did not, and there were no fatalities. So the expectation was that there won't really be too much of a tit for tat going on and escalation. The fear is that that's not necessarily going to be the case. That's why you look at the intraday chart of the Nifty and the drop over there. Meanwhile, among the top losers, of course, is Nestle, but for other reasons, their sugar shock is what is spooking the market today. Aditya Arora with us, so is Gurmeet Chadda. Aditya, I'm going to come to you, on your top picks first, because I think you started talking about Bharti Airtel and then you froze. So I want you to complete your top picks and then give me your take on a Nestle and a Just Dial.
Sure. So my first bullish bet would be Bharti Airtel. I see a fresh rally starting over there. Second would be 361. That stock looks pretty good and it's showing good relative strength, wherein other pairs are just falling apart and market is seeing good correction. So this stock really stands out. So one could buy this stock at 796, 746 would be the stop loss, and 900 to 1100 would be the target. And the third one is Geo Finance. After this news that they are entering broking business, stock is showing good strength. So this could be again bought at 380, 350 would be the stop loss, and 420 to 439 would be the target.
So Geo Financials is the other one on Aditya's list. What about a Just Dial? What would you do with a Just Dial today, Aditya?
I think there are times when Just Dial simply rallies away and it shows high beta moves. And we have seen this many times in the past. When a fresh rally starts in Just Dial, it just doesn't fizzle out in one day and it continues for some days. So my view is in tandem with that. I think Just Dial could be bought at current market price of 1,016. Stop loss must be 920 and target would be 1100 to 1150.
50 is the upside that you see on Just Dial. You know, they've reported, of course, a healthy set of numbers. The stock has surged over 12, now 14%. We spoke earlier in the day to their CFO Abhishek Bansal on their traffic breakup and growth targets for the upcoming quarters. Listen in.
So traffic-wise, incremental traffic largely is coming on mobile platforms, which now form about 85% of our overall traffic. So it's this 85% maybe could go to another couple of percentage points higher, but growth is being driven largely by mobile platforms. So while we don't issue any formal guidance, but as a business endeavor is to grow top line at 15% plus growth rates, which again should materialize from a mix of both volume additions as well as ticket size growth. For example, Q4, we had about 8.5% growth in campaigns on a year-on-year basis, another 7.5% in our realizations. On margins front, we exited the year at about 26%. And for next full year, we are targeting that we should comfortably be 25% plus. There is obviously scope for margin expansion as well, since there is inherent operating leverage that exists in the business for top line growth anyway beyond 8-9%.
Gurmeet, did you get a chance to look at the results and hear the commentary of Just Dial? I mean, the cash on the books is there, the growth numbers 10-15%, whatever they do, at a 7,500-8,000 crore or whatever it is the market cap is it attractive a proposition?
Neeraj, you know, this business, which is B2B essentially, and a platform business has multiple variables. And Just Dial obviously has had a change of promoter. It's been good numbers, must admit. We also track India Mart, not exactly strictly comparable, but we do that. So, you know, this, you know, we believe that can you hear me? There's some.
Sorry. Okay, I think we've just. It's an unusual day when we are seeing these glitches keep on coming.
While we talk about how well telecom stocks are doing.
Think about it. It's just quite funny. But yeah, well, Just Dial certainly done well, and Aditya has already given his view, but pretty interesting as to what's happening to that stock. The other one really the team of stocks which stand out today are these real estate names, right? Just the kind of moves that some of them have done after their monthly sales or the quarterly sales numbers are out, and TARC or a Brigade Enterprises, the two of them in particular, maybe even a Suntech Realty, I think they've just done so well today. It's quite exceptional. Now, Aditya, did you get a chance to look at the charts of a Brigade or a TARC or a Suntech Realty?
Yeah, absolutely. I'm checking the charts of these counters. Among these, I think Suntech looks pretty good. So I have a bullish view on this counter. I think this could be bought at 437.95. One must maintain stop loss of 410 and target would be 470 to 490. And second one you talked about was Oberoi Realty?
No, I asked about Brigade Enterprises.
Right. I think Brigade looks, you know, it's trading in little bit of overbought zone, and over here the stock is facing little hurdle at 1050 level. Until and unless 1050 levels are not taken out, 1050 to 1055, these kinds of level are not taken out, stock would probably face some tough time to, you know, make new high. Once 1055 is taken out, then we could maintain the bullish bias. Otherwise, I would stay neutral at 1036.
Okay. Stay neutral otherwise. TARC is also done well, so watch out for those. In fact, speaking of Brigade, well, it soared 6% though, and we had a chance earlier in the day to speak to Joint MD Nirupa Shankar on rising realizations and where the consumer appetite lies. Listen in.
I think the market as a whole has been very good in terms of the consumer buoyancy and the consumer appetite for completed assets and new launches. So we've been able to increase our prices by almost 20% in the last year or so, just because the appetite is there and the demand is there. It is primarily end user driven. And there is demand for all sorts of real estate asset classes, whether it's plotted, whether it's mid-income, whether it's high-end apartments. I feel that any launch by a reputed developer with a good location, a good plan is able to sell well, and we've been able to make good of that market situation as well. Even high-end villas that I would say prior to COVID were pretty hard to sell. There were a very small percentage of people that would actually buy these high-end villas. But right now, even the high-end segment is doing extremely well. The average ticket size in Bangalore, I would say prior to COVID, used to be around 60 to 80 lakhs, maybe pushing up to even 1 CR. But I think now we're seeing the sweet spot for the Bangalore real estate market actually going much higher to at least 1.5 to 1.7.
And well, just before we take that break, though, there are some news flashes on your screen. Nestle has come out. We spoke about this in the morning, that the market will make people realize about what's happened here. There are a lot of angry parents out there, angry consumers out there, and as they should be, but Nestle is saying their infant cereal products are manufactured to ensure appropriate nutritional quality. If I'm not wrong, I read that. We never compromise and will never compromise on the nutritional quality of our products. Well, compliance is an essential characteristic, sure. So all of this notwithstanding, Tamanna, it's an issue that is larger, and it's not just about just basic nutritional quality in a product, absent or not, but also what is present versus what is present across the world.
So that is the issue, and you're right, it's bigger than just Nestle in India. It is Nestle in other parts of the country. The question is also for our own agencies and FSSAI, the ministries, what are they allowing? Essentially, a Swiss agency found a survey that the content of sugar in Nestle baby products in India, in Africa and Latin America is much higher than in European and American geographies. In fact, in India, it's about 3 grams for a 30-gram serving. So that's nearly 10%. And this is really, really bad for kids. And these are small babies. Sugar can cause diabetes, obesity, a whole host of issues. And this is why you've seen that stock also respond quite badly today. Nestle India now putting out a statement saying that this is appropriate, etc. It's by the rules, and reduction of added sugar is a priority for Nestle India. But what was happening so far? How long has this been going on? Additionally, like I was mentioning, they have 98% share. So there's nowhere else to go. And for very small infants who cannot have mother's milk, there is nothing else to have except formula. So it's not as if you have a lot of option either. It makes it even a bigger concern.
Yeah. Well, the market's verdict out there, quite frankly. Sure, what we'll do is we'll take a break on this note and digest this piece of news. In fact, get in a fundamental guest to come in and talk about this as well as talk about this with Aditya. Gurmeet, take a moment to thank you, of course, for joining in today. Stay tuned, viewers. Also, some derivative updates, maybe on Nestle as well, and some top BTST ideas. Stay tuned.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to...
All right, markets are wobbling a bit over the last few minutes. Let's quickly just pull up the intraday and the Nifty contributors to give you a sense of where that pain is coming in. Markets almost at their day's low, just 10 points off their day's low right now. And really, you've seen an HDFC Bank weighing heavy there, being balanced to some extent by a Bharti, which is having a great day. Otherwise, it would have been worse. So your banking pack not doing too well. Your HDFC, Axis, ICICI Bank, all of them in a bit of pain. Agam is there with us today. Nifty expiry day, Agam, and a bit of an afternoon shocker and volatile swings. Did you see those trends play out?
Tamanna, I believe that a lot of traders out there who had sold puts or perhaps were long futures are stuck in their positions at the moment, especially those who are trending in options. At one point in time, when the Nifty dropped, well, you know, your options worth 5 points and 10 points went all the way to 150 to 200 points. So you can imagine the kind of carnage that has caused when it comes to those option sellers on the put side of things. Now, a lot of them are trapped at the moment, unfortunately, and at least as far as the expiry is concerned at the moment, we are seeing them unable to come out, and which is why we saw that selling pressure will further exacerbate over the last 15-20 odd minutes as we move towards closer to expiry. That said, we have seen about another 5% increase in open interest as far as the Nifty futures are concerned. And the Bank Nifty, again, we're looking at a knock of another 1%. Well, it will come and sit at a base of 47,000 as we move into trade tomorrow. That's where your next level of support is as far as the Bank Nifty is concerned. In terms of options, and you know, this is what I was talking about. Earlier on the session, we saw the Nifty move higher to around 21,100, 21,200. That is where we had seen a lot of writing around 22,100 and 22,200 puts. But that has changed substantially over the last 2 hours of trade. I just want to take a look at, so this is your overall open interest distribution. That has changed substantially. Let's move on and talk about your overall open interest distribution. At the moment now, we may be seeing a lot more traction around 22,000, and we have lost out on that mark. And there are still a lot of put sellers just sitting and perhaps hoping that there could be a recovery over 22,000. It's going to be very, very unlikely that we're going to see the Nifty close about 22,000 in today's day of trade. And I reckon this must have also forced out a lot of hands for those who, as I mentioned, who may have written certain puts at a premium of anywhere between 10 points to 50 points, and they were forced out at, well, maybe 2 times, 3 times the option premiums they were hoping to make in today's day of trade. Which is why expiry trading is always a very, very dangerous game, and you have to know what you're doing. Let's talk about stocks then. And in terms of stocks, of course, we're looking at shorts, which would include something like an Exide, where we're actually seeing a little bit of a reversal there. IG are Dr. Reddy's, Apollo Hospitals, and among stocks which are seeing unwinding. Again, about a short covering for Vodafone and RBL Bank, but other than that, we're seeing some weakness in Tata Communications and Escorts as well. While today's focus was meant to be on the stocks, it does seem like the Nifty's taken over, and the volatility has certainly claimed victims today.
Absolutely. The Nifty now under the 22,000 mark. And dipping lower as we speak. So definitely a lot of pain points there. Sudeep Bandyopadhyay now joins the conversation. He is Group Chairman, IndiTrade Capital. Sudeep, good afternoon to you, and thank you for speaking with us today. What do you reckon is spooking the markets right now, and would you wait for things to settle, or do you see opportunities to buy into these drops?
Well, I think what is spooking the market is, of course, the weekly expiry. A lot of positions are, there on multiple sides, and I think that's leading to all this volatility in the last hour. As far as taking positions is concerned, if somebody is wanting to accumulate good quality stocks for long term, of course, this is an opportunity. Also, but I will always advise that don't buy whatever you want to buy at one shot. Buy something today and maybe wait. And let's see what happens, in market opens tomorrow.
Let's just pull up very quickly what is working on the markets today. And it's a day of telecom. We've been speaking about Bharti Airtel doing very well. What's not working, on the other hand, is a Nestle. Nestle and healthcare. I would say the healthcare pack also seeing a lot of pain. I'm just going to come to the story on Nestle for a second and then get in views of our analysts of what to do with that stock. So there are two parts of it. One is how the stock has dropped off about nearly 4% as we speak. One analyst on our channel today thought it's a buying opportunity, but what really is happening and why is Nestle taking a beating? Sesha Sen has all the details.
If you are a parent and have a kid at home, you will be shocked to know what I'm going to tell you now. A new study by Swiss investigative organization Public Eye has revealed that Nestle, which is the world's largest food company, uses excess sugar in its baby food products in India and other developing nations. Nestle uses 3 grams of sugar in every serving of Cerelac sold in the country. I'll ask my camera person to show you the label of Cerelac. So if you look at the label, Nestle says that it uses 9.1 grams of added sugar per 100 grams of Cerelac. This essentially means that the company uses 10% of its sugar in about 25 to 30 grams of Cerelac. Now, what is even more shocking is that in developed markets like Europe, there is no such added sugar that is used in their products. This raises 2 serious questions. One, is Nestle putting children's health at risk in a country where several studies have indicated an alarming rise in obesity among children? And the second, are there any guidelines or a law that checks promotion of such products in the country?
So that is the essential story of why Nestle is under pain. Nestle has put out a statement a short while ago, and we put that out on our screen. But just to reiterate, they've said that the cereals are fine, they're working towards reducing sugar, etc. Now the question is, should you buy Nestle stock on dips at this point? Listen in to what Rahul Arora of Nirmal Bang has to say. It's quite a contra view.
you'd remember when the Maggie crisis happened, the way Nestle was able to go back to the drawing board and not only reinvent itself, but come back with greater market shares and the kind of numbers it has delivered since then, it had not delivered pre the Maggie crisis. In the West, if you look at Coca-Cola, for example, they actually have adverts on their television telling people not to consume Coca-Cola, for example, because of the amount of sugar that they have, but they leave it in the hands of the consumer. But should Nestle be required to take corrective actions? And by no means am I justifying, the findings of this report. Of course, coupled with the fact that royalty increases were also announced recently. But I think if any remedial actions are to be taken, I think Nestle is more than capable of taking it. I think it's a household name. And I think any dips into this stock should be bought into. I mean, it's 100% plus return on equity, capital employed, return on invested capital business. It's growing its earnings by 15%. Any such opportunities, I think, while unfortunate, could potentially present themselves as buying opportunities.
Yeah, is this a buying opportunity? Sudeep, I'm keen to know your view.
Unfortunately, yes. I mean, there's a moral hazard and the entire, discussion around this unfair treatment for, the product as far as India and other poorer nations are concerned. So obviously it's unfair and probably not warranted. But as far as the market is concerned, I think what Rahul mentioned is absolutely correct. And I was going to say the same thing, that we have seen this happening during the Maggie controversy, how, robustly Nestle came back and delivered post that controversy. I'm reasonably confident that Nestle will do the same this time as well. So, if you're an investor who have, let's say, 1 year plus time horizon, this is a great time to buy Nestle because, this is where the price is getting corrected. Maybe there'll be a little more correction. And this is the opportunity to buy Nestle.
So while we're telling you about, what the story is, the response, central government is going to be looking into it. That's another part of the story, and that, of course, will continue. But in terms of an investment opportunity, Nestle looks good, says Sudeep Bandyopadhyay as well. Aditya, what's your view?
So looking at the charts, I believe that Nestle, look, I would prefer the stock to give a breakout first, because in such scenarios, any negative news could give another gap down on the stock. So in such kind of scenarios, I would prefer a breakout. I would prefer to buy higher, but I want a confirmed entry wherein, post entry, it can give a short-term good move on the upside. In that kind of scenario, I would prefer a entry above 2650. Post that, I feel that Nestle could again take out its previous swing high that are placed at 2760, 2780. I think once the stock crosses 2650, we can go towards these levels of 2750, 2800.
All right. Now, while that's the story with Nestle, the fact is that market is looking wobbly and a bit spooked, frankly. Bank Nifty is the one showing the greatest amount of pain among the sectoral indices. In fact, let's pull up the sectoral indices and look at the sharp drop in the Bank Nifty just in the last few minutes or so. And there you have it. Yeah, PSE is doing badly. Coal India today is particularly hurting. FMCG probably being dragged down by Nestle, etc. But you've also seen the Bank Nifty and heavyweights there in a bit of pain. Axis, like I mentioned, Axis, ICICI, IndusInd, among them seeing the biggest knock. Sudeep, in terms of numbers coming up, and that's the big trigger, apart from what's happening geopolitically, globally, numbers are the big trigger. Let's talk a bit about Infosys and Bajaj Auto. Numbers expected after market close in both cases, or maybe in the next 15 minutes. I don't know if you'll see the first hit of Infosys numbers, but at least Bajaj Auto after market close. How would you position yourself on some of these counters, and is there a Q4 numbers kind of play that you have in mind? What would you be looking out for?
Well, as far as IT is concerned, our view has been that it will be a mixed bag, and that's been proven right. If you look at the TCS numbers which they came up with, it was a good set of numbers that did beat the market expectations. Exit margin of 26% was very good. And management also very clearly communicated that FY25 is going to be better than FY24. So I think all this, they're ticking the right boxes. The only problem were in two counts. One, North America. Second, BFSI. Now, these are important areas. North America hasn't done well and BFSI hasn't done well. So these were the niggling worries in TCS results. And I think these are going to show up again in Infosys numbers which come out later today. And now one has to see how Infosys has managed to cover those dips, North America and BFSI, through other geographies and other verticals. Now, TCS did that very well and increased margins. Will Infosys be able to do that? I think the answer, as far as market is concerned, is no. Infosys will not be able to do that, and that's why we have seen sharp correction in Infosys over the last many days now. And our feeling also is Infosys numbers will not be anything great to write home about. But let's see, wait and watch. As far as Bajaj Auto is concerned, we expect a good set of numbers. Domestic, they have been doing reasonably well for quite some time now. And the niche which they have picked up is the mid-market, not the top end, absolute top end, not the absolute bottom end, the mid-market. And that's where they're growing and they're gaining market share on a continuous basis. As far as exports are concerned, they were suffering for quite some time, but I think things have changed and things have picked up. I think, monthly, the numbers which the company comes up with very clearly shows that. The buyback and everything else has also created an excitement around this stock. It had gone up and now corrected, but again, it has started moving up. And we believe Bajaj Auto numbers will be good and they will support the price where it is.
Yeah, Bajaj Auto also a lot of buzz about their CNG bike launch in June. And, at least that's one stock which has done particularly well, 114% up in the last 12 months, holding up even on a otherwise pretty tough day. Now, we were talking about Infosys and they're set to release their numbers in just a bit from now. Rucha is joining in with a quick preview of what you can expect.
Yeah, so Infosys is set to report its result post-market today. Revenue is expected to have a negative growth, while EBIT and PAT are largely expected to remain flat. The guidance is expected at 3 to 5% for the revenue in constant currency terms, while EBIT margin guidance is expected at 20 to 22%. While EBIT will be impacted by 1 month of wage hike, there were no large deal wins announced by the company in the fourth quarter. There are 3 key things to watch. Number 1, the guidance for revenue as well as EBIT margin. Number 2, what is the deal wins pipeline, and as said for TCS, are they getting converted into revenue or not? Number 3, commentary on the demand environment, and are the clients incorporating more of discretionary spends, or are they still skeptical about the same?
All right, so that's what you need to watch out for as far as Infosys is concerned, and obviously you'll see the quickest updates and analysis right here. Aditya, I just wanted to know your take on an Infosys and Bajaj Auto on the charts.
Sure. I think Bajaj Auto looks very fantastic on the chart, and it already had a stellar run since levels of almost 4,000-5,000, and it has touched levels of 9,000. I think this stock has more to go. I would say that more outperformance is likely over here. So I would say that bullish bias is still maintained on this counter, and probably it can again reach new highs which are placed at 9,300, 9,350. So I would maintain my bullish view over here. And when it comes to Infosys, I would again maintain bullish view over here, because the difference between Nasdaq and Nifty IT is so big that any reversal over here could trigger a very good rally in a lot of IT counters. And we know that Infosys and TCS are heavyweights in Nifty IT pack. So I would maintain my bullish bias on Infosys at levels of 1420. And I think one could accumulate the stock in these levels, because when the results would be announced, we can see some volatility. And my upside target would be 1530 to 1600. And I would place my one-day closing basis stop loss at 1370.
Okay. 1370 is a stop loss that Aditya would give for an Infosys, and he's bullish actually on both, awaiting those numbers shortly. Meanwhile, another space that has not been doing too badly is your upstream oil companies, and Mihika is joining us now for an overview on this set amidst crude windfall tax. which has been raised. Yes, Mehika.
Yes, so Brent prices are up 19.5% year to date due to tight global supply and geopolitical tensions, and the Indian crude basket price has also surged 17% year to date at $90.46 per barrel in April. Now, higher oil prices is potentially very positive for the upstream companies like ONGC and Oil India, but however, the windfall taxes levied by the government limit the kind of potential that they do have. Now, the windfall tax was raised to 9,600 per ton 2 days ago, which is 4 times the January rate, but there seems to be a somewhat cushioning mechanism. So when you look at the realizations per barrel, which is derived from subtracting the windfall tax from the Indian crude basket price, the realizations right now stand at $77.29 per barrel, which is higher than any of the previous 3 months of 2024, where the average crude basket price was actually lower than what it is right now. And when you compare it to the historical time periods as well, the monthly crude price baskets in the $90 range. For instance, in October 2023, the crude basket was at 90.08 per barrels with windfall taxes of 14.57 per barrel, but realizations was 75.51 per barrel, which is lower than what we are right now, despite having an average crude price standing higher. Now, this suggests that the tax policy could have a possible cushioning mechanisms for the upstream companies, where despite the higher crude prices and the higher windfall taxes, the realizations allowed, which is technically the profit margin that the company could have for itself, stands higher than the historical prices.
All right. You were saying a lot of those stocks come off their day's highs, like many of components of the market. I just want to see what BPCL, HPCL is doing. HPCL was having a particularly good day at the start of trade, and yeah, most of them have come off their highs. HPCL still pretty decent, up in the red, up in the green, up 2% really. Aditya, anything you're tracking in this space and you like?
Yeah, I think I would talk about Hind Petro itself because that's an outperformer. The stock is, trading in a range, but once the market stabilize, probably there is more upside. We saw good upside in ONGC in last few days. I think HPCL could follow, but we would have a level-based approach in this counter. We'll be bullish in this counter once 495 is taken out. That would be the buy level. Stop loss would be 470 and target would be 515 to 525 would be the target.
Okay. Sudeep, your take on Hindustan Petroleum?
Of course, it's a good stock, good management. The only challenge is, elections are happening all around us. And, in this season, it's very unpredictable. That's what I would say, because the government will not facilitate or encourage a price rise in the bunk. And if the oil price starts shooting up, I think, the challenge becomes acute. And the HPCL, BPCL marketing companies will have to definitely bear a share of the loss, which they will then start accumulating in their books. And things will start going south. Under the circumstances, my recommendation has been that, let this election period be over, only then, get into these marketing companies.
Absolutely. Now, talking about elections, and of course, the first set of votes will be cast tomorrow. Phase 1 begins tomorrow. In fact, a little later on at 3:30, we will be bringing you a special show on why Phase 1 is important. But meanwhile, we have been consistently telling you how rich your candidate is, and the spotlight today is on Tejasvi Surya, who's contesting from Bangalore South seat. Alex has all the details.
Absolutely. Well, it's interesting. This young candidate has a bet on equity in a big way, and you'll see why. Let's first look at the total gross total value of his assets. It currently stands at about 4.1 crore rupees, and it's roughly gone up as much as 4 times over the last 5 years, and quite a bit of that has to do with his equity investments. He's got fixed deposits of about 5.45 lakh rupees. That's actually reduced from 8.76 lakh rupees in 2019. He's got movable assets of over 4 crore. his taxable income in FY23 stood at as much as 44.13 lakh, and that's also a very substantial jump from 5 years before that, when it stood at about 5.13 lakh rupees. He had no mutual fund investments back in 2019, but then as of now, he's got as many as 26 mutual fund schemes, and that's perhaps a little too many. Having said that, he's got close to 2 crore invested currently in these schemes, and the biggest holdings are in small cap funds. So you'll see the likes of Kotak small cap, as well as ICICI Prudential small cap, and the Tata small cap fund in the list of mutual fund schemes that he has. He's got cash of 80,000. That's more or less stayed constant over the last 5 years. Doesn't believe perhaps in holding too much cash. And he's got investments in listed stocks, which again, he did not have in 2019. And some of them include the likes of Dredging Corp, as well as BSE, which has done incredibly well, Everready, Indus Towers, Jagsanpal Pharma, as well as Network 18, Strides Pharma, and Tejas Network.
All right, so quite a portfolio there, and Tejasvi has bet on equity. It's worked out well, at least for him. So thank you for that, Alex. And remember, this is a series that we're putting out regularly on NDTV Profit. We're giving you every aspect of the selection, but a little hatke. Not just what you'll probably see on every other channel. Now, having said that, just a couple of minutes for close. And Aditya, any sort of BTST ideas?
Sure. My BTST idea would be on Bank Nifty. I would also say a disclaimer that we have advised this recommendation to our clients. So we are bullish on Bank Nifty. Currently, Bank Nifty is trading at 47,100. Stop loss must be placed at 46,700, and target would be 47,500 to 48,000. So we are playing a mean reversal, trend reversal trade in Bank Nifty.
Right, so Bank Nifty is the BTST trade that Aditya has. He sees a reversal coming in there. Thank you so much, Sudeep and Aditya, for speaking with us today. Just a couple of minutes to go for what is looking like a bit of a painful close for the markets today. It started off fairly okay, frankly, contrary to what expectations were. It seems there was a statement around 1:30, 1:45 India time from a government official, the finance minister, who's being quoted in Israel, saying that the retaliation to the Iranian missiles is going to be very harsh. That seems to have spooked the market. The Bank Nifty down 3/4 of a percentage point towards the end of it. I'm just going to pull up the sectoral indices before we go to the Nifty components and heat map, etc., because I want to give you a sense of what really has hurt today. And FMCG right on top of that list, probably more than just a Nestle, though Nestle was the big one. Finance, Nifty Finance, Fin Nifty, Bank Nifty, all of them really seeing some pain. The only thing working perhaps to some extent were media stocks, but very little weightage. Let's pull up Nifty constituents as well, the heat map first to go with, and look at what's happening there. Markets have shut there. Apollo Hospitals and Nestle there at the bottom. The entire consumer space, actually, look at a Titan also down 3%. So between these three, you're seeing a lot of pain, but what has really dragged down the markets today is an Axis Bank, a Coal India, counters like those which have seen a fair bit of pain today. Banks overall not doing well at all. And ICICI and HDFC Bank down 1% as well. On the upside though, Bharti has had a fabulous day, and it's the entire telecom pack. Is it something about a Vodafone possible revival, which is a bigger threat to a Jio than a Bharti? I don't know. That could be one of the theories, but that stock up 4%. Bajaj Auto ahead of its results. Its Q4 numbers expected in a bit from now, doing exceedingly well. So is Infosys. Bajaj Auto has anyway been on a good run. Power Grid for a variety of reasons, but they're also raising funds, up about 2.5% at the end of it. I just want to pull up what the broader markets look like before we wrap up our summary for the day. And while you saw quite a bit of pain on the Nifty and Sensex, it was not too bad on the end of the broader markets. The Nifty mid cap, of course, in the red, but mildly. The small cap, in fact, mildly up in the green. Just pull up the BSE top gainers, BSE 500 top gainers if you can, to give a sense of what was working. And you had a Just Dial there right on top. Q4 numbers is the reason for that. Mastech is another interesting one. They have a deal with the UK Defence Ministry, and that saw a huge upsurge in that stock in the second half of the day. So they were doing well. News flow coming in a jubilant Farmova as well. So these were some of the counters there. Spark, again, a tough day for that counter. So all in all, a wobbly end to an okay start. We'll have to wait and see how things develop overnight. In the morning, we will also have cues from an Infosys, Bajaj Auto and a lot more. So stay tuned for all of that tomorrow on India Market Open. But for now, from me and the team that has put this show together, thank you so much for watching. We'll take a very short break, but we'll be right back. Stay with NDTV Profit.
Hi, I'm Rohit Kapoor. I'm the CEO of Food Marketplace at Swiggy. At Swiggy, we are in the business of offering our consumers a wide choice, convenience, and a multitude of options to choose from. Voting is something similar. It's about exercising your choice, exercising it responsibly, thoughtfully, after going through all the options that you have. So I will encourage all the employees at Swiggy, all our delivery partners, everyone at large, their families, and all of us, all consumers to come out, and those who are eligible, vote and exercise your choice and make India always a better place than it was yesterday, because we all owe it to the nation and to ourselves. Thank you.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downward,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason.
All right, polling begins for the 2024 general elections on the 19th of April, that is Friday. Today we're talking about why Phase 1 matters, and it's the beginning of our special coverage of elections on NDTV Profit. Now, why Phase 1 is important is, of course, it's 8 union ministers, 2 former chief ministers, 1 former governor, and a whole host of heavyweights that are going to be in the fray from all the political parties. In fact, you're going to see about 19% of all seats will see votes cast in Phase 1. So it's a sizable number of seats as well, which are up for the test. It's important for the DMK and the India Alliance. All of Tamil Nadu's 39 seats go to vote tomorrow. On the 19th of April. So it's important for DMK and what the India Alliance can do. It's important for the BJP that has been hoping to make significant inroads into Tamil Nadu, and you can see that from the number of times that the Prime Minister has been there as well. Remember, there are key seats in Western UP that will also go to the polls, and that's one to watch out for. And of course, the BJP is aiming to win all 5 seats in Uttarakhand for a third time once again. So for a variety of reasons, this is an important phase for the elections. Now, what should you watch out for? We have some of the best numbers guys, I would say, the pollsters who really track the numbers. They're not just talking about mood in the air. They have the data to back what they say, and which is why I'm glad to welcome on the show today Yashwant Deshmukh. He's director and founding editor of C Voter. Sanjay Kumar, professor of CSDS, is with us on the show, as is Amitabh Tiwari, political strategist. Welcome to all of you, and thank you so much for speaking to us on this special show today. Yashwant, let me begin with your take on Phase 1. We're kicking off a mega election. Now, for the longest time, at least, you know, when I speak to people in the markets and covering what the mood is, everyone seems to have discounted this election. There's no real buzz. Will we see that buzz beginning from tomorrow, and why is Phase 1 important?
Well, I think because everybody's thinking about the bigger picture, the possible overall result, and that's why we feel like there's not enough buzz. But there are very, very keen contests that are going on, and for different reasons, they are very important to observe. For example, Tamil Nadu itself is so critical at this point of time to observe and understand, because if you are looking at Tamil Nadu from a perspective that, okay, is India Alliance under the leadership of DMK in Tamil Nadu is winning or not, and if NDA can even open an account, I think obviously you will not feel like any buzz, because there is hardly anything worth buzzing from that perspective. But if I tell you that the contest is not between DMK and the NDA. Contest is not between the India Alliance and the NDA. Contest is between BJP and the AIA DMK. That's where the real contest is, because BJP wishes to dislodge AIA DMK as the principal opposition over there, as the party, the option, the default option to DMK as a party, as the challenger. And then all of a sudden, the perspective changes on how to exactly look into Tamil Nadu elections. So a lot will depend on how under Annamalai, Mr. Annamalai, the BJP works, BJP processes, if they cross 20% votes or not, and if they cross, can they get more seats or more votes than AIA DMK? And if that happens, what is going to be the politics of Tamil Nadu in the years to come? So similarly, each and every region, each and every state has its own context, own issues, own priorities to watch out for. But yes, I understand your point that when you look into the overarching scenario and you feel like that, okay, is it like getting too predictive of sorts, whatever we are looking at? Maybe there is a lot of polling and you are listening to a lot of trends, a lot of insights already in the market. I mean, we are running a daily tracker, or Sanjay Bhai doing a quarterly one, or, in that way. So sometimes when you hear a lot about a certain things, you also feel like that we have already heard too much. And that is why there is no buzz. But no, it's not like that. For all of us, I'm sure Amitabh and Sanjay Bhai would agree that even the most mundane contests, which you feel like it's already pre-decided, there are so much to watch out for the politics of future, that we are extremely, extremely interested in each and every seat right now.
No, absolutely. I mean, and also to be fair, a lot of people I'm speaking to are looking at it from the stock market perspective. And what they're saying is, okay, if there is policy continuity, then that's all priced in. We don't have to worry about it too much. So, all right, that sort of context coming in. But here we're talking about hardcore politics and those numbers today, which is quite exciting. Now, Sanjay Kumar, we had the opportunity to speak a couple of days ago on the numbers. And, as we had discussed, one point from your latest survey, which really caught my eye and interesting to talk about in the context of phase one, is that your survey says the BJP will possibly increase its vote share in the southern part of the country. How crucial does the battle for Tamil Nadu then become?
Crucial, yes. Every battle in every state is crucial. Tamil Nadu is also going to be crucial. The change in the nature of contest in Tamil Nadu in 2024, as I see based on the pre-poll survey finding, is that it is heading for a three-way contest now. We have known Tamil Nadu to be a bipolar contest. On one side, DMK-led alliance, and on the other side, AIDMK-led alliance. I think this is an election we are witnessing a three-way contest, because besides the two alliances, there is another alliance which has emerged strong, a BJP-led alliance along with the two regional parties. I'm not sure whether it is so strong to pull surprises in Tamil Nadu, but yes, the nature of contest seems to be changed in Tamil Nadu from a bipolarity to a multipolar or a three-way contest in Tamil Nadu.
I want to come to you on what the big issues seem to be as we embark on this very long, hot, and I'm sure, exciting poll season. What is the big issue that India is worried about right now? We've seen manifestos of the BJP and the Congress. We know the issues that are dominating social media, etc. But for the voter, in your view, what is it that matters and why are they going to cast their vote?
Question is to
Amitabh.
Yeah. Of course, the issues are pretty much same as they are in any election. The bread and butter issues are there, which is largely unemployment, price rise, poverty. Then you have the corruption also becoming an issue this time because of the electoral bonds data coming out in the open. It also depends upon which side of the fence you're sitting. So like the NDA is raising issues of their track record of governance, the 10 years, what they have delivered and what they have achieved. They're talking about also in various states, let's say for Tamil Nadu, specifically the BJP is raising the issue of dynasty and corruption because it is trying to create a space for itself. Whereas the opposition is largely targeting BJP for unemployment, price rise, etc., as well as freedom of expression, democracy in danger, etc., are the buzzwords which we see. However, we have seen that there is a lot of focus on issues in elections and a lot of debates focus on issues, but issues is unfortunately not the only motivating factor for a voter when he or she goes to the polling booth. So if you see the 2019 Axis My India survey, for 37% of people, the prime ministerial face was the main voting consideration. For 25%, the local candidate. For 22%, the party symbol. Only 3% manifesto promises, and 13% others, which means the issues get clubbed somewhere in others.
You know, just talking about the prime ministerial face, and this is, I'm just going to start with Sanjay because this is something that you said. You said that this is no longer presidential style elections we're having. Your quote, if I recall, was this is a referendum on Prime Minister Modi, this election. Sanjay, you want to elaborate on that? Is that what this election is about? It's all about whether you want to vote for continuity with, Modi as Prime Minister or not.
From my point of view and from the data point of view, the data which we have collected through the pre-poll survey, I get a sense because there are two narratives. Some people believe that it is a presidential form of election where there is a contest between Modi and Rahul Gandhi. But I differ from this narrative, and my own sense is that it is not a presidential form of election. 2024 election is heading to be a kind of a referendum on Prime Minister Narendra Modi's work. If you are in favor of, if you want Narendra Modi to continue as the Prime Minister, irrespective of whether you have anxieties about price rise, unemployment or not, all those voters are going to sideline those anxieties and they will just go en bloc and vote for Prime Minister Narendra Modi, which is to say they will vote for the BJP candidate. And all those voters who are opposed to Modi, they will not even look at one good work done by Prime Minister Modi's government. They will all vote against against Narendra Modi. So Narendra Modi is at the center of this election. Look at all the campaign material of BJP. Everything is in the name of Narendra Modi. Modi ki sarkar dobara chun ke aane. Everything is in the name of Narendra Modi. And look at the tone and tenor of campaign of the opposition party. I think the tone and tenor is directed more towards Modi ko hatana hai. It's not BJP ko hatana hai, Modi ko harana hai. Modi ek dictator hai. They are also attacking Prime Minister Modi. So the Prime Minister Modi is in the center, and that is why I think it is a referendum, kind of a referendum on Prime Minister Narendra Modi.
Yashwant, you agree with that theory? That this time around, especially when you're looking at a possible third term, the BJP's own claim is that they will get unprecedented numbers. It becomes more about the entity than anything else?
Well, what Sanjay Bhai is saying is pretty much evident from the number, even the trackers that we are running. And it's like not just the BJP wanted to make this the way it is coming up, but it is also the opposition who has played into that game. If you look into the largely for the 4.5 years campaign of the opposition in this country, you'll realize that they have made it all around the Prime Minister's own image, or Prime Minister's own thing. Even though they knew it very well, even in 2019, it kind of backfired, but somehow they continued. It is only in the last few weeks, if I may say so, that some of the contests, they've started making it more localized in a way. But going beyond that, it has been all about Modi. And there is an overarching narrative for or against the personal popularity of Mr. Modi. And that is what is defining, that has been defining the politics of this country at the central level, about the leadership, about the working of the leadership. So much so, Tamanna, that it's no more just about the Lok Sabha elections. If you look into the assembly election, majority of the states have been, like, assembly elections in West Bengal have been about Mamata Banerjee. In Delhi, it has been about Arvind Kejriwal. In Tamil Nadu, it has been about Mr. Stalin, so on and so forth. So yeah, I mean, that equationing is happening, and that is not just at the central level, but also at the state level. But right now, it's the vacuum of Modi versus whom, where it is helping Mr. Modi and BJP a lot. So far, we don't see any alternative leadership getting numbers at the national level that can be said that okay, these are the serious numbers which should be considered as a challenge to the BJP or Mr. Modi. You know, all along in the last 5 years, my number or Mr. Sanjay Bhai's number, you will realize that barring the brief few months period, couple of months after the second wave of COVID, every time we have checked, and we do a daily track, Pramanna, that Mr. Modi's popularity ratings have been north of 50. Many a times north of 60s. Only once they went around in the 40s, that was post second wave of COVID. And then even at the lowest bottom ebb of that for Mr. Modi, unfortunately for the Congress, Mr. Rahul Gandhi's personal rating was still hopping in the 20s. So his worst was also having a ratio of 1:2 when compared to Mr. Rahul Gandhi's ratings. Right now, the rating, that number is 1:3. And that has been not just a recent phenomena, that has been all along for last 5 years. And there has been no dip in the personal rating of the Prime Minister. And I think that is why it remains the driving theme of this entire election season.
So it is about personality, it is about Prime Minister, it is about, for voters, more than individual issues, etc., and more than their own candidate or MP, it becomes about whether you want to vote for continuity of Modi or not. Amitabh, considering how expectations are, polls are showing that you will have maybe a continuity, what are the possible challenges? We know what's going for the NDA and the BJP. That's all very well known. The question is that could there be any surprises at all? Do you see anything on the horizon like that?
I think the possible challenges for the BJP, of course, is over-dependence on Narendra Modi. Because if you remove the Modi factor from the entire equation, then the contest becomes fairly tight. I mean, in 2019, almost 80% of NDA's lead over UPA was on account of the Modi factor, and this is perhaps likely to increase in 2024. So over-dependence on Modi is a factor. I mean, every strength is a weakness, I believe. So if Modi is the strength, he is also the weakness. If the cadre becomes lazy, if they do not come out on the voting day and get out the vote of the people who are loyal voters of the party, or even if the voters become a bit complacent that anyways, the Prime Minister Narendra Modi is going to come back, then it is going to pose challenges. That's number one. Number two is that whatever said and done, the opinion polls last date has already crossed. But now there will be no polls from now to June 4th or rather June 1st. So what happens is that the sentiment of the public moves along with news items during these 40-45 days, which opinion polls may not be able to capture and which will be captured largely in the exit polls. So what could also happen is that because of this electoral bond issue and the washing machine issue and Kejriwal's arrest, etc., and that is evident also in Sanjay Sir's survey, is that the lack of people's trust in ECI has reduced, and the number of people who believe that the central agencies are being misused is also fairly high. So what it has done is that it has somewhat created some sort of, you can say, discontent or the talking point among the neutral voters of the BJP, and BJP cannot win any election on the basis of its hardcore Hindutva vote. So this neutral voter, which is roughly 1/3 of the BJP's vote share, has, or rather a section of this neutral voter has started asking these questions, and we have to see how this pans out, whether they remain enthused to vote for BJP, they sit back, do not come out, or they cross over to some other party. That will also could be a key factor going forward.
This is interesting. I was reading a report today that said that about 30% of voters make up their mind on who to vote for in the last couple of days. I don't know if that's the right data. Yashwat, I'd like to know your view, because unlike, say, an American election where a majority of the voters have already decided what side, and you have a very small portion of swing votes, that's not the case in India, right? That's why no election can be pre-decided in advance where you can just sit back and expect the same result.
No, it's not like that. A significant number, Tamanna, actually decides pretty close to the election in the last few weeks, and sometimes a significant number even on the they say that we decide on the day of the voting. But that doesn't mean that that the turnout factor get decided by that. But turnout factor decided by the factor that, how enthusiastic people are for the process of voting. Sometimes, as Amitabh mentioned, that complacency factor creeps in, and that is where 2004 kind of black swan happens in that way, because nobody expected that. But in the urban areas of India, the 2004 election were also unique in a way that the urban turnout dropped by 18%. That's a huge drop. And for the first time, BJP in 2004, even though they won the majority of the rural seats, they lost huge majority of the urban seats, which were otherwise considered to be BJP's pocket borrow. So I guess that the turnout factor is extremely, extremely significant. And it's not just because of the political reasons, Tamanna, it's also because of the heat wave. If you look into it, the way the elections have been stretched out right up to the first week of June.
Right.
And the other day, the Hindustan Times did a remarkable piece on figuring out what would be the temperature on each and every Lok Sabha seat on the polling day.
Wow.
And the overwhelming majority were looking at a 40-degree plus temperature during the polling day.
Yeah.
And, that caught my eye, and all of a sudden I recalled 2004 elections when the heat wave did play a significant role of the urban turnout, including a very, very weird kind of phenomena of holiday looming large. That if there many places where the polling day is either Friday or Monday, a long weekend seeps in, and people start going out for a long weekend vacation instead of voting.
Yeah.
And these are the things which are clear and present danger for the BJP, I would say, because of the 2004, not because of the anger or India shining, failed, or anything
just complacency.
else.
But having said that, people should vote. People should vote no matter who you want to vote for. I'm not extending this to who this is bad or good for. Not at all. You have to go out and vote. If it's a long weekend, still go out and vote. And if it's a heat wave, maybe go after it gets a little cooler, early morning or later in the evening.
And it can work the other way around as well, Barka. Tamanna, you are right that it can work against if the turnout drops in, it can work against the opposition as well. Because we have also so many examples of elections, Sanjay Bhai can count you, that a low turnout actually helps parties which are cadre-based. That in a worse turnout.
And the incumbent in several states.
Exactly.
Absolutely.
So for everybody, the turnout is high.
So one resounding message, and we have a campaign on NDTV, the Pledge to Vote campaign. Please go to our website, join it, come in, vote. We have corporate citizens leading it, and specifically corporate citizens, because urban voter apathy is the worst to deal with. This long weekend chutti business has to stop. Go out and vote. If your day is there, remember your employer has to give you a leave as per the law. On that note, thank you so much to all of you for joining us today on this special show as we try and set the stage for phase 1 tomorrow. That's all the time we have. We'll take a very short break, but stay tuned. So much more on the other side on NDTV Profit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Market extends its losing streak after erasing intraday gains as volatility in global markets and geopolitical tensions weighed on the indices. Infosys ends in green ahead of its fourth quarter earnings this evening. Analysts expect revenue to drop while net profit may rise by 1%. Deal wins pipeline among key factors to be watched out for. Nestle responds to Swiss investigators' claims, says that added sugar has already been reduced by 30% over the last 5 years. Stock ends around 3% lower. Vodafone Idea's FPO subscribed 18% as of 3:50 p.m. QIB portion subscribed 44%. Voting for Lok Sabha elections begins tomorrow. Voters in 102 constituencies across 21 states will cast their votes. Hello and welcome. You're watching The Reporter on NDTV Profit and I'm your host Pragati Oberoi. As always, the show aims to bring you the market headlines along with national and international news. But before we start the show, let's take a quick look at how the markets fared during the day. Well, as we all know that the benchmarks erased intraday gains to extend the losing streak to the fourth time in the day. The Nifty 50 chart is also up on your screen to show how it performed during the day. Apollo Hospital, Nestle and Axis Bank dragged the markets lower. In fact, Nifty ended around the 22,000 mark and Sensex closed near 72,490 points. Nestle was another stock that we had our eyes on. Indeed, it ended about 3% lower towards the closing in response to what the Swiss allegations have come. The broader markets marginally did better than the benchmarks. However, all sectors barring media ended in the red, with healthcare and FMCG as the top losers. The market breadth was largely in favor of the declines, as you can see with the chart up on the screen as well, with advanced decline ratio at 14:36. Well, staying on with the earnings since the season has already started, HDFC Life's fourth quarter profit jumped by 15% to 412 crore rupees, and this was compared to last year. Net premium rose by 5.5% to over 20,500 crore rupees, while the value of new businesses declined 5% to 801 crore rupees. That's the HDFC Life review up on your screen. Now let's also take a look at the top story of the day. Nestle ended around 3% lower, and we already showed you the chart of that previously as well, after revelations regarding the sugar content of Cerelac have sparked a surprise. Sessa Shen joins in to get this special report.
If you are a parent and have a kid at home, you will be shocked to know what I'm going to tell you now. A new study by Swiss investigative organization Public Eye has revealed that Nestle, which is the world's largest food company, uses excess sugar in its baby food products in India and other developing nations. Nestle uses 3 grams of sugar in every serving of Cerelac sold in the country. I'll ask my camera person to show you the label of Cerelac. So if you look at the label, Nestle says that it uses 9.1 grams of added sugar per 100 grams of Cerelac. This essentially means that the company uses 10% of its sugar in about 25 to 30 grams of Cerelac. Now, what is even more shocking is that in developed markets like Europe, there is no such added sugar that is used in their products. This raises 2 serious questions. One, is Nestle putting children's health at risk in a country where several studies have indicated an alarming rise in obesity among children? And the second, are there any guidelines or a law that checks promotion of such products in the country?
That was Sesha bringing the special report on Nestle's Cerelac. In fact, she also had a chance to speak to Arun Gupta, who's a senior pediatrician and convener of the nutrition advocacy in public interest. On that, she spoke about what the ideal content of sugar should be in Cerelac.
Nestle is putting in infant health at risk because these products are not only by the way of sugar, but they are unhealthy, as Nestle admitted itself a few years back. Secondly, they are inherently also not sterile because containing powdered milk in them. That's why WHO also recommends that there should be no added sugar and salt in the food below 2 years of age. Indian Academy of Pediatrics in India also says so. Similarly, National Institute of Nutrition in India also recommends that sugar should be avoided. So the reason that this report is coming forward to tell us that there is a sugar which is around 10% in the product, and that's quite unhealthy, I would say.
All right, so how alarming is this? I mean, in terms of provisions and guidelines, do we have anything as such? How much sugar should be actually used in baby products?
The first question about alarming. Yes, it is alarming. The more you increase the intake of sugar in very young babies, it actually pushes them to consume more. So they consume more of such products, and it pushes them towards obesity and later on towards other non-communicable diseases such as diabetes. So this is very important, a point of prevention. That's why WHO recommends that. Now coming to the how much sugar it should be there in this product. The Foods for Infant Nutrition Regulation by the Food Safety Authority guides about the amount of carbohydrates. The carbohydrates is recommended somewhere around 55%, but in this product you will see that the carbohydrates are 68% and 23% is the total sugar, and added sugar is 9.1%, which is quite high in any standard of health, so that people don't know about it, number one. Number two, the more they consume, parents feel happy about it and they tend to consume more. That adds to the sales volumes of the company.
Well, that was an expert take on the burning issue, and Nestle will be in our focus throughout the day as well. Moving on, Vodafone Idea's 18,000 crore rupee FPO that was launched this morning was subscribed at 18% as of 3:50 p.m. The QIB portion was subscribed at 44%, and that's exactly what we mentioned in the headlines also for you. In fact, our team spoke to CEO Akshay Mundra and asked him about the timeline and the quantum of tariff hikes that the company plans to implement soon.
I think there's a strong need for tariffs to get to levels where ARPUs are sustainable and provide ability to the industry to make further investments. I would expect it to be faster than a very slow pace.
Can I put in a figure here? Because what I've been given to understand that you may need at between 20 to 25% of increase in tariffs post-elections up to FY26. Is that a right figure to go by to get the return on capital?
No, I think return on capital, you have to see that what is the current level of ARPUs, what is the ARPU required to get to a cost of capital. I believe that gap is much more than 20% today, so a 20% tariff correction will not take you there. How much would be the tariff correction, I cannot comment, but as I mentioned that in the past, tariff corrections of about 20% have been well absorbed in the market.
Well, that was Vodafone Idea's management, and with the stock in focus, Bharti Airtel also saw some strong moves. In fact, we spoke to Gurmeet Chadda of Complete Circle earlier in the day, where he had some very interesting things to talk about the stock, as it saw a jump of over 5% in the trade.
I think Bharti has been on a roll for the last almost 2 years now. I think I remember getting stuck in a range for a while. And I made this discussion when we used to interact that you can't have Jio at more than 100 billion valuation. Now, obviously, Jio platform is around close to $150 billion valuation, and Bharti being 50 billion. Today, I think crossed ICICI Bank's market cap, if I'm not wrong. And great additions on 4G and 5G. I think on a quarter-on-quarter basis, they've been adding 6 to 7 billion on 4G, 5G. Industry-leading ARPU. The digital portfolio seems to be doing well. The home broadband business doing well, and some stability even in the Africa business. I always believed that Bharti was slow on payment banks and digital. It could have done much better with the guy. It was the first to get that license. I think I see more value unlocking there. Bit of a rub-off from the Bharti Hexacom, its subsidiary IPO as well, which got a very good response. My sense is this, it will eventually become a 2.5 pair. It's already a 2.5 pair. Would Idea probably, in my view, I'm a little concerned on equity dilution. If government converts the dues to equity, it will almost be 80% kind of holding for government, and 18,000 crore isn't much. It will be used to first enhance 4G sites and then get to 5G sites. So there's already a gap. And post-merger, Neeraj, if I'm not wrong, they've lost 19-20% market share. They had almost more than 42, 43 crore subscribers, if I'm not wrong. It's down to about 22. So I don't know. I'm not too sure. In fact, last 2-3 years, a lot of people have wasted their time on analyzing too much on Voda, Yes Bank, Z, etc., and probably have missed the entire bull market.
Well, moving on to some political news, wealth redistribution will take India back to Garibi Hatao days, and that's what has been said by former Chief Economic Advisor KV Subramanian, and he said it while speaking to NDTV's Gauri Dwivedi. In fact, he added that Karnataka's freebies model is in fact not a success story.
I emphasize far more on growth and the enlargement of the pie. I think that is very important. If we look at the way in which welfare programs have been made far more efficient, look at the benefits we've had from direct benefit transfers, those are definitely commendable, and we should actually definitely continue and redouble. But this kind of explicit, redistribution, I don't think those are economically very, very good. If you look at, and I think let's take the example of what has happened, in the south, in Karnataka, those 5 freebies that were promised, actually, a state that was in very good fiscal situation just within, less than 2 years is actually now, it seems to be in a fiscal problem. And I think that is that provides very good evidence for what, these kind of ideas will, to me, if I may actually, I think these suggest that there isn't adequate creativity, in the economic ideas that are coming from some of the quarters. Just to give you again a map, the private consumption expenditure, the consumption survey that came in using the $1.9, purchasing power parity threshold. Clearly the poverty has significantly declined from 12% in 2012 to 2% in 2022, and yet we are actually, and this is the benefit not of, this kind of wealth redistribution, but really focusing on enhancing the efficiency of the welfare programs and growth. And so the evidence is very clear that, which direction we should be going.
So you mentioned Karnataka. Would you say that Karnataka should be seen as a cautionary tale for any of such promises to be made? Would you say that?
Yes, indeed.
So, and you would say that for wealth redistribution as well, because that's another area where a lot of promises are being made.
Absolutely. I think let me point out this example, right? Because in the 1980s, we had a government which had the marginal tax rate at 97%. Obviously that was a significant effort at wealth redistribution using slogans like Garibi Hatao, etc. We know very well what that led to. Even for instance, as of 2012, poverty was 12%. So neither the redistribution nor those slogans like Garibi Hatao actually really had the impact. In contrast, good growth and focusing on enhancing efficiency of the welfare programs has had its impact. Poverty has reduced drastically from 12% to 2%. Even if we use a higher threshold of $3.2 in 2011 purchasing power parity per capita per day, poverty has reduced significantly from more than 50% to less than 30%. So I think as an economist, I see the data, and I think some of these ideas actually have been tried and have not been successful. I'm sort of surprised why the same sort of old wine actually, which is sort of has not worked very well, is being peddled again.
Well, it's time for a quick break, but please stay tuned because we have lots more lined up for you.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you
Welcome back. You're watching The Reporter on NDTV Profit. Now let's take a look at the big story, voting for Lok Sabha elections. The voting begins tomorrow and voters in 102 constituencies across 21 states will cast their votes. Elections will be held in 7 phases this time. Let's get you some expert voices ahead of the first phases of these elections.
Of course, the issues are pretty much same as they are in any election. The bread and butter issues are there, which is largely unemployment, price rise, poverty. Then you have the corruption also becoming an issue this time because of the electoral bonds data coming out in the open. It also depends upon which side of the fence you're sitting. So like the NDA is raising issues of their track record of governance, the 10 years, what they've delivered and what they've achieved. They're talking about also in various states, let's say for Tamil Nadu, specifically the BJP is raising the issue of dynasty and corruption because it is trying to create a space for itself. Whereas the opposition is largely targeting BJP for unemployment, price rise, etc.
There are very, very keen contests that are going on, and for different reasons, they are very important to observe. For example, Tamil Nadu itself is so critical at this point of time to observe and understand, because if you are looking at Tamil Nadu from a perspective that, okay, is India Alliance under the leadership of DMK in Tamil Nadu is winning or not, and if NDA can even open an account, I think obviously you will not feel like any buzz because there is hardly anything worth buzzing from that perspective. But if I tell you that the contest is not between DMK and the NDA. Contest is not between the India Alliance and the NDA. Contest is between BJP and the AIA DMK. That's where the real contest is.
Well, that was an update ahead of the voting that begins tomorrow. Moving our focus to our special series now, How Rich is Your Candidate? This time we are putting the spotlight on Tejasvi Surya, who's contesting from Bangalore's southern part. Alex Matthew joins in to break it down for us.
This young candidate has a bet on equity in a big way, and you'll see why. Let's first look at the total gross total value of his assets. It currently stands at about 4.1 crore rupees, and it's roughly gone up as much as 4 times over the last 5 years, and quite a bit of that has to do with his equity investments. He's got fixed deposits of about 5.45 lakh rupees. That's actually reduced from 8.76 lakh rupees in 2019. He's got movable assets of over 4 crore. His taxable income in FY23 stood at as much as 44.13 lakh, and that's also a very substantial jump from 5 years before that, when it stood at about 5.13 lakh rupees. He had no mutual fund investments back in 2019, but then as of now, he's got as many as 26 mutual fund schemes, and that's perhaps a little too many. Having said that, he's got close to 2 crore invested currently in these schemes, and the biggest holdings are in small cap funds. So you'll see the likes of Kotak small cap, as well as ICICI Prudential small cap, and the Tata small cap fund in the list of mutual fund schemes that he has. He's got cash of 80,000. That's more or less stayed constant over the last 5 years. Doesn't believe perhaps in holding too much cash. And he's got investments in listed stocks, which again, he did not have in 2019. And some of them include the likes of Dredging Corp, as well as BSE, which has done incredibly well, Everready, Indus Towers, Jagsanpal Pharma, as well as Network 18, Strides Pharma, and Tejas Network.
Well, that was a chunk of a special series for you, and that's all that we have for you on The Reporter for the day. But please stay tuned to NDTV Profit for all the latest news and updates.
We are joining NDTV's Pledge to Vote initiative. I pledge to vote and also encourage all of my colleagues to exercise their voting rights. Election is the largest celebration of democracy, and we fully support it.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Smriti Chaudhary. We will take you through the next half an hour of trade. And this show is geared towards getting all of your answers to stock-related questions that you might have. And you can send those questions to us on any one of our social media platforms, or in fact on the WhatsApp number that is on your screen right now. Let's take a very quick check of how the markets are looking right now, and it's a pretty picture. And in the context of cuts across the board in the Asia Pacific region and not the best handover from the US markets overnight, you have the benchmark Nifty 50 that's trading very close to the high point of the day right now, up about 0.5% or thereabouts, and moving, edging closer towards that 22,300 mark. The broader market's in fact looking even more sanguine, if anything, and you have the mid-cap index that's up about 0.8% or thereabouts, and you have the small cap 250 index that's up over 1% right now. So understandably, the market breadth tilted in favor of the advances. In terms of the key contributors on the Nifty 50, let's take a look at that list. You have Bharti Airtel at the top, followed by Larsen & Toubro and Tata Consultancy Services. Infosys up and about before the presentation of its Q4 results. On the other end of the spectrum, you have the biggest loser in the form of Nestle India, and some reports emerging over the course of the last couple of days that the company is in fact using added sugar in its Cerelac, which is widely consumed, and this is something that is only in developed nations, in a few developed nations, India included. In Europe and in the UK, there is no added sugar. There is some pressure on the stock on account of that. We will talk about that in just a bit. But for now, let's turn to ICICI Lombard, Smriti.
Right. Good morning, Alex.
Morning.
ICICI Lombard is the focus for today. The stock is up about 3.5%. And to break down numbers for us, we have my colleague Puneet joining in. Puneet, tell us about the performance of ICICI Lombard.
Yeah, thanks, Smriti. So the company had issued a steady gross domestic premium income growth in this quarter compared to last year, while the combined ratio have also seen a reduction for the better. Now, for the quarter four, the GDPI income grew at 22%, coming at roughly 6,070 crores versus 4,900 crores in this time last year, while the combined ratio has improved to roughly 102% from 104% previously. The solvency ratio has also done well, coming in at just 2.6 times versus roughly 2.5 times previously, while the PAT has grown at roughly 17% compared to previous year, coming in at 520 crores. Now, when we go to the product mix, we've seen a stable for each of the products. Like motor, they are at 19% versus 20% previously. Two key data points here within the products. They said that within motors, the third-party rate hike has not been announced for 2025, which augurs well for the demand for the particular product. While in the health and travel vertical, they said that the retail health agency grew roughly 22% compared to previous year, where it competes with the likes of Star Health in this segment. We've seen roughly fire as well as the other segments maintaining market share roughly, as well as the product revenue coming in at stable 14 to 15%, which is the still. Now, finally, what are the brokerages saying? HSBC has maintained their target price of roughly 1,990 rupees, which is a 20% upside from the current levels. They say that the firm has increased its market share gains and is focused in each of these segments going forward as well, lowering the loss ratio given forward. They say that they see that meeting FY25 operating ratio guidance should lead to even higher EPS growth from the current levels, while it says that the firm is firmly placed to deliver a faster premium growth compared with the industry. So ICICI Lombard doing very well on the results, and the stock is up roughly 3.5% today. Back to you.
Right. Thank you so much, Puneet, for that. And on that note, let me introduce you to the guests for today. We have Lancelot Dikuna, CIO, ValueX Wealth Connect, and Swati Hodkar, Senior Equity Technical Analyst Research at Nirmal Bang Securities. Welcome to both of you, and thanks for taking the time out. I'll come to you, Mr. Dikuna, first on the focus, which is ICICI Lombard. We're seeing results are pretty much in line with what was expected. You're seeing brokerages giving it a target price of an upside of 18 to 20%. Are you also seeing that sort of gains in the longer term?
Yes, I am looking at seeing that kind of improvement in the financial performance drive the pricing up as well. Because if you look at from a macro situation, as the economy continues to grow, general insurance will also grow at 15 to 18% per annum. And since ICICI Lombard has been consistently maintaining its market share in most of the important segments like fire, motor, etc., which are the profitable segments, we will continue to see growth coming into this sector, and as well as growth for ICICI Lombard. Even the management has indicated that there could be a 15 to 17% growth in the premiums, and with the loss ratios looking better, I think this stock should do much better over the longer term.
Okay, fair enough. We had initially thought of taking Nestle But then when we discussed it, the stock was not reacting too much. And then after that, of course, let's pull up the chart and see where it's currently trading. It's down as much as 3.5 to 3.7% off the low point of the day. Lancelot, I do want to broach the topic with you, because reports emerging that there is as much as 9% of added sugar in Cerelac in India and certain other markets. Now, it's hard to quantify the impact of this, but I can't see parents very comfortable with the idea of sugar in the food that they're giving their children. We were trying to look at the revenue contribution, and it's not very clear the breakup between baby food in the context of the overall milk product space. But do you think that there could be a sizable impact, and how would you react to this if you are an investor?
So if you actually analyze the business of Nestle, a large part of the business comes from the Maggi noodles and the ketchup part of the thing, part of their business. A significant portion of revenue also comes in from their milk product space, and Cerelac has been one of their mainstay products as far as the baby food is concerned. Now, while this news report, or the reports suggest that these are some inadequacies, we also need to understand that this stock always has been priced at a huge premium over other FMCG stocks. And we could see that with this kind of news, the premium can get shaved off a bit. As far as, unless we start to see some regulatory action coming in, saying that, okay, Nestle is now not allowed to sell this, or some action is being taken by, regulators in the space, that could have a much higher significant, let's say, a negative impact. As long as that doesn't happen, I think on a sales basis, you may not see too much of an impact, because, in reality, people who are, this kind of news really doesn't impact sales directly, because a lot of people believe that, okay, the product of the company is good, and, they would go by the brand, that it's a global brand, they will give us good products, etc. But any regulatory action in terms of asking them to stop production or sales in this could mean a significant downfall from these levels as well.
All right. So regulatory action is what we're going to watch out for in this specific counter, because that's the key factor that may avoid the stock here. But let's start with the queries now. The first one is from Himanta, and this one is on ICICI Prudential. They say they bought the shares at a price of 619 rupees. So I think this is a short-term question, so I'm going to come to you on this one. It's slightly higher than what the current price is. What do you have a target for the shorter term in this particular counter?
Yes, as of now, the view is definitely a positive. Stock is trading in the pattern of the high top higher bottom formation. Also, the interesting fact as of now, it is well placed above the short term moving average, that is 20-day moving average, which is also a positive indication. But
Okay, we unfortunately, just while Swati was giving out her advice on that particular stock, I've lost her feed. We'll get her back shortly. In the meanwhile, let me take the next question. We'll revisit ICICI Pru, but the next question is from Mohit, and he's writing in from Ludhiana. He's asking about IDFC First Bank, which he has bought at levels of 26.94, and those are attractive levels if you actually think about it, because the stock is currently trading above the 80 rupee mark. Okay, so I'm told we have Swati back. Swati, you were talking about ICICI Pru. What's the advice here?
yes, Alex, the overall view on this particular counter is really positive, because I was explaining on the technical front that the stock is trading in the pattern of the high top side order formation. Also, the interesting fact that it is well placed about the short-term moving average, say the 20 DMA, and as we have seen a very good amount of a rally from almost 500 to 640 levels within a very short span of time, say within a span for 2 months. So profit booking cannot be denied at the higher levels. I will suggest to hold on the counter as long as it's maintains 600 support levels. Once it manages to give the breakdown of 600 levels, then only we can witness some sort of a profit booking. So those who are having any long positions, they can hold on. Upside, I'm looking for immediate target of 640, then 660 levels on the high side. But keep your long positions by maintaining a stop loss of 600 levels.
Okay. We've got a couple of questions, and I had already taken the first one, but I will repeat it. Mohit from Ludhiana is asking about IDFC First, which he's bought at levels of 26.94, attractive levels. His horizon is about 2 years. And we've got Sri Kishore Sharma from Motihari in Bihar, who's bought at levels of 61.62, and his time frame is as much as 3 years. He's wondering, both of these individuals wondering what the prospects are. Lancelot, what do you make of it? It's currently trading above the 80 mark. What's the potential for upside from here?
So I think the potential remains strong, Alex, because this bank has been focusing on the retail liability side as well as retail asset side, and its strength has been in that space. And we've seen them, expand a lot in the retail liability side by opening more branches, collecting deposits. So they've seen a fairly good deposit growth. NPS have been fairly low. So given that, this space is continuously growing, you are going to see significant growth opportunities for the bank, and that should result in much higher valuation. So I would say that if one is willing to hold on to this stock for the next 2 years to 2 to 3 years, you would get above average returns on this counter.
All right. Next counter we're talking about is Piramal Enterprises. Now this question is coming in from Rajesh. They say they want to know the fundamental view on this particular stock. Mr. Dikuna, we saw the stock getting affected by the AIF rules that came out a couple of months ago, but we've seen recovery from that. But fundamentally, how do you see the stock in the longer term?
So I think over a longer period of time, yes, the stock should give investors good returns. But they've made a large amount of investment in in the pharma space and in spaces which will be impacted with these AIF rules. If at the moment, I believe RBI is also looking at the rules in a little bit more sympathetic manner. But probably over a period of time, these rules will get tightened and they will have some impact. So from a long-term perspective, yes, there could be growth opportunities, but there are also various other opportunities in the space which could give you fairly good returns, and one can look at those as well, where you're seeing more clarity on the upside.
Fair point. Orient Cement is the next counter that we're focusing in on, and Namita has got this question. She's specifically looking for a 3 to 6 month view and a technical view at that. Swati, what's the view on the charts?
My view on this particular counter is little bit cautious, Alex, because I am saying that from the month of the January itself, we are witnessing a good selling pressure from almost 290 to now the stock is trading at almost 200 levels. And more downside can be seen into this particular counter because we are witnessing a very strong resistance at 220 to 25 levels. As long as it doesn't give the breakout of the same levels, we are not likely to witness a positive momentum on the higher side. So I will suggest to book the profits or to exit the long positions whenever we get a rise towards to 220 to 225 levels. As of now, 198, 197 is acting as a crucial support level. If it breaks that previous swings low, more selling pressure is likely to be intensified and which might take a stock back towards to 180 levels. So my view is be cautious. Try to exit the positions on every rise.
All right, so the next question is on the counter Yes Bank. This is from Anil. They say this is a good time to invest in the stock. Now, the stock hasn't been doing too much in the last couple of days, but has given about 46% returns in the last 1 year. Do you see some kind of an upside in the shorter term on this counter?
This counter has not performed really very well on the technical front from last 4 years. The stock was trading within this range of 15 to 20 levels. Now it has came out of that particular range, but we are not witnessing a very much price momentum in this particular counter. So those who have the extra capital and longer time horizon in hand, then only one can invest in this particular stocks. Because I believe this counter is likely to witness a very slow rally on the higher side. Upside, as of now, the stock may rise towards 230 to 34 levels, whereas on downside, it has a strong support levels at around 20. So those who are interested for a slow momentum counters, one can invest. But my personal opinion to stay away from the Yes Bank rather than in this particular counter, one can go for into the SBI, Federal Bank or the Bank of Baroda. These are the good banking stocks one can invest.
All right. Yeah, I mean, incidentally, his time horizon is as many as 2 years. But in any case, I think that view holds true. We have to slip into a very quick break. We've got more questions that we will take, so do stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to Infosys Earnings Edge. The company has just come out with its earnings. There is a guidance that's coming in with respect to FY25, which is 20 to 22% EBIT margins there. I have with me Rucha, who's the research analyst tracking IT. Rucha, what are the basic numbers that you're getting as of now?
Yeah, so Infosys has just come out with the result. The guidance for FY25 implies a revenue growth of 1% to 3% in constant currency versus what was expected, somewhat higher, around 4 to 6%, while operating margin guidance is in line with the estimates at 20% to 22%. The revenue constant currency for the current quarter is from negative 2.2% in CC terms. This is far much lower than what was expected. The expectation was negative 0.6%, while the reported is minus 2.2%. Sajid sir.
So it's basically a degrowth in revenue on a quarter-to-quarter basis,
yes,
or to the tune of nearly 2%, which we are seeing there.
Yes.
And that's much worse than the street estimate, which is there. What about the margins? Are the margins and the bottom line pretty much in line with street, or is it only the top line disappointment which is coming in?
So the margin is also a disappointment for the street. The reported margin is 20.1% for the fourth quarter, while the estimated was 20.7%.
So it's basically, again, in TCS we saw the EBIT margins going up.
Yes.
But here we are seeing the top line missing the target. You have the EBIT margins missing the target, and hopefully the bottom line is also missing the target. Do we have the analyst Gaurang Shah? So what could be the reasons for this?
So maybe I think the uncertain environment, right? The clients are not sure about where the demand will go. There are cost optimization deals, there are larger deals, smaller deals are very less in number, and that is why pricing is stuck to a longer duration, I think. And now we have Mr. Gaurang Shah, the head investment strategist of Geojit Financial Services. Hello, Mr. Gaurang.
Hello, good evening to all of you.
Good evening. Hi. So let's have your take on the results. What do you think of this disappointment? I think this is huge for the IT companies, and the guidance is really huge. What are your takes on this?
So I think when you compare TCS and Infosys numbers, then definitely, and in terms of expectation also, there has been a little bit of downtick. And as far as the street expectation was concerned, the street did not expect any kind of runaway numbers. But in terms of disappointment, backdrop of environment and events under which the IT sector was working, one could go in with a lower expectation. Possibly a knee-jerk reaction on the counter could be seen tomorrow morning when we open up for the trade. As a disclosure, we do have a positive coverage on Infosys since we are discussing the stock on the results. This is purely on the fundamental side from a long-term point of view, and management's commentary in terms of the outlook will be of more of a focus. I think press conference or some kind of statement released from the company could possibly guide us to the outlook in terms of future. But we believe that constraints were there in the past, and that's primarily the reason why we are witnessing this number.
Gaurang, if I can take you through the numbers, the reported numbers on a quarter-to-quarter basis is negative 2.1%, and in constant currency terms is negative 2.2%. So both in constant currency and in reported quarter numbers, quarter-on-quarter numbers are below the street expectation, because street was expecting between flat to 0.5 to 0.7% degrowth coming in on a quarter-to-quarter basis. So what do you attribute this huge differential in terms of the degrowth which we are seeing on the top line front?
So spend, budgetary cuts, discretionary cuts, and of course not able to rope in large ticket clients would be the primary reason in terms of this kind of a number reported. But yeah, I mean, street was expecting flattish numbers, but this is a little bit below than what the street estimates were there.
Also, another thing which is there is with respect to the EBIT margins there, because there is a contraction of EBIT margins. Your EBIT margins have fallen from 20.7 to 20.1, and that's also a bit of a disappointment which is coming in.
So, in an environment which is very, not very conducive, margins do come under pressure. And there is also a concern in terms of headcount and attrition rate also, which I don't have the number in case if it has been given out by the company in terms of attrition. Like I said, the environment, the backdrop of events, we did not indicate any kind of positivity in terms of margins improving. In fact, this could possibly lead to spillover in terms of numbers first quarter this financial year. But possibly second half of financial year, you could see some kind of improvement come through, provided they are able to rope in large ticket clients and possibly improve the margins.
Gaurang, marginal decline in attrition from about 12.9% that we saw in December to 12.6%. So, there's a marginal fall which is there in terms of attrition which is coming in.
So this is a little bit better. In fact, even TCS reported a better number as far as the attrition rate is concerned. So, we were all aware that new headcounts were put on hold given the kind of constraints that were there. Possibly if the deal pipeline or large ticket clients start roping in, then we'll have some kind of improvement. But this number and marginal downtick number on the attrition front is good news.
Got that, Gaurang. So basically, I just want to ask on the revenue front. Revenue for FY24 is reported a growth of 1.4% in constant currency terms, while the guidance was at around 1.5 to 2%. So that is again below the range guided by the company. So how will the street have a take on this?
So street, of course, like I said in the beginning, you might see a knee-jerk reaction on the counter tomorrow. possibly, the downward rating could also be seen, but since the number are just coming out, very difficult to comment on that. Even my team would need some time to possibly dissect the numbers. And like I mentioned, when Europe, US go through difficult times, when discretionary spend is cut, when budgetary cuts are there, this kind of a number does send in a little bit of concern, at least in the immediate short to medium term.
I just want to get your take on the TCV $4.5 billion in Q4. And also the fact that the guidance for FY25, which they have given 1 to 3% growth in constant currency terms, operating margins 20 to 22%, which is pretty much in line. But the revenue growth targets, which is very disappointing because Street was expecting 4 to 5%, and the TCV at $4.5 billion. How do you look at that as a whole for FY25?
It has been history, very conservative in terms of giving out guidance with respect to large IT companies. And possibly in some cases, if the environment turns positive, then they tend to overshoot that kind of a guidance. So I'm not surprised with the conservative guidance that they have given, and they have been like that even in the past.
So in case of TCV, it again mentions that it is highest ever at $7.7 billion. So I think this was the case with TCS as well, wherein they were recording highest ever TCV, but the same is not getting converted into revenue. So again, that is the case with the sector. So what are your thoughts on it?
Exactly. So that's what I said. But let us understand one thing, that with the current environment that we all live in, avoiding any kind of mishaps in terms of phishing and cyber issues and all that, you will eventually end up spending on improving your IT infrastructure and platform. That's when you will have, even AI is something.
I need to butt in here because the management has started and is giving his first thoughts.
Our operating margin for the full year was 20.7%. For large deals, we had an excellent year and the fourth quarter. For the full year, it was at $17.7 billion in large deals, comprising of 90 deals. For Q4, we had $4.5 billion in large deals. This is the highest ever large deal value in a financial year for us. For Q4, our year-on-year revenue growth was flat in constant currency and declined by 2.2% quarter on quarter. Our operating margin for Q4 was at 20.1%. We are seeing excellent traction with our clients for generative AI work. We're working on projects across software engineering, process optimization, customer support, advisory services, and sales and marketing. We are working with market-leading open access and closed large language models. As an example, in software development, we've generated over 3 million lines of code using one of the generative AI large language models in the public domain. In several situations, we've trained the large language models with client-specific data within our projects. We've put generative AI in our services and developed playbooks for each of our offerings. We are committed to ethical and responsible use of artificial intelligence. We became the first IT services company globally to achieve the ISO 42001 to 2023 certification, testifying to our commitment to excellence in AI management. All of this work in AI is part of our Topaz offering and capability. We are delighted to announce the strategic acquisition of a company in the engineering services space today. We continue to focus on our margin program. We saw good impact during this financial year that we've seen in our results. As we look at the start of financial year 25, we see the discretionary spending and digital transformation work at the same level. We see the focus on cost efficiency and consolidation continuing. Our large deal wins in financial year 24 will help us in financial year 25. With that, our revenue growth guidance for the financial year 25 is growth of 1% to 3% in constant currency terms. Our operating margin guidance for the financial year 25 is 20% to 22%. With that, let's open it up for questions.
Thank you, Salil. Joining Salil is Mr. Jayesh Sangrachka, Chief Financial Officer, Infosys. With that, we have the first question from Ritu Singh from CNBC TV 18. Ritu.
Hi, Salil. Hi, Jayesh. First, just on your revenue guidance, on the lower end, you've actually lowered, the guidance compared to the previous year, now at 1 to 3%. Give us a sense of what you built into it when you say deal wins have been the highest ever in FY24, what you expect, what your conversation with clients has been, what the pipeline is looking like. And earlier you'd highlighted verticals like high-tech, BFSI, etc., showing some weakness. Are you seeing some improvement there? Also for I think now the 5th quarter in a row, the headcount has been coming down. Any outlook you could give us there as well? And, under your project Maximus, you've been working on expansion of your margins, yet we're seeing in terms of guidance a similar range as the previous year. Tell us if there's, if this is a conservative estimate, both in the revenue and guidance, please.
So I'll start with the revenue. Jayesh will comment on a couple of the other points. On the revenue, what we are seeing is the environment in terms of discretionary and digital work is similar to what we've ended in this year. We also had good traction in large deals, some of which will flow through in the next year, given the duration of those deals. Keeping that in mind, our growth guidance for next year is as a band higher than where we finished for this year. While the difference is small, it's still higher from where we finished this year. As we go into the industries, we see, for example, financial services to see a better outlook in the next year compared to the past year. We see, for example, manufacturing, which will have, while it'll still grow next year, will have a slightly slower growth than this year. So there are some puts and takes in terms of different industries, and given the outlook with the discretionary spend and digital work remaining same and more focus on cost efficiency and consolidation, we've created that revenue growth guidance.
Yeah, so on the net headcount increases, if you look at it, when we started the year, we were at 77% utilization, including trainees. The growth environment also was different at that point in time. We had guided differently. So, we had to realign some of those factors as the growth environment changed. Our utilization has now gone up to 82%, including trainees, 83.5%, excluding trainees. That's one of the tracks under Maximus as well. Our attrition has also come down significantly, right? So that's the reason why you see a net headcount reduction. As we go forward, we always plan looking at what we are exiting in terms of utilization. We are still at 82, 83% utilization, depending on whether you're looking at it, including, excluding trainees. So that still gives us some headroom because we've always said 85% is achievable utilization. So that's a headroom that we have. We look into guidance that we give so that we bake in that. Attrition still remains very, very contained at 12.6%. So, we have that headrooms. And we also have changed in last few years our hiring model significantly. So we no more hire all the freshers for campus. We hire less than half of them from campus, and the rest we hire off campuses. So we have that agile model. So we will look at hiring as the year goes through. We don't have a number to give at this point in time.
The question, sorry, on what the deal pipeline is looking like. You said some of the deal wins from last year will flow into this year, but the new deal wins, what sort of visibility do you have?
So the deal pipeline again remains good. As you've seen in this past financial year, we did 90 deals at 17.7 billion. We have a good pipeline. The deals are more on cost and efficiency and consolidation. That is the theme in our large deals pipeline.
Thank you. The next question is from Chandra Shrikant from Money Control.
Hi, Salil. I just want to understand, why is there a divergence between your TCV numbers and the revenue growth numbers, not just for this year, but also for the next fiscal? Because, if you're talking about record deal wins, why is it not translating to revenue growth? Is there a runoff in existing discretionary programs, which is why the revenues are getting impacted? If you can give us some color on that. Also, the guidance, I think it's going to disappoint analysts because a lot of brokerages were expecting between 2 to 6%. So, are you starting conservatively? Will you kind of, review this every quarter? Do you expect the second half to be better? Jayesh, just wanted to ask you on the pricing as well. At least the TCS management said that, one of the levers that they hope to use is pricing because they see some opportunities there because there hasn't been a price hike in a while. Is that something that you're hopeful of as well? And this is also the first time your headcount has declined on a full year basis in at least 20 years. So what can we expect with respect to fresher hiring in FY25? Thanks.
So let me start off on the guidance with the large deal wins. There, what we have seen is there's been a good traction with the cost and efficiency and the consolidation nature of large deals, whereas we see that digital programs or some discretionary work is still not as visible within the work we're seeing. So when we combine those two trends or those two views, we get the guidance that we've come with, which is the guidance as we start the year of 1% to 3%. So from our perspective, we want to make sure that we reflect what we are seeing in the market today. Now, typically, at this time of the year, we have a good sense of the early part of the year, and the second part of the year, we have a set of estimates that we work off of. We will see how that develops because the macro environment is still got a mixed outlook at this stage. We are very comfortable with where we see our large deals and the way we are winning those because we think we are benefiting from the consolidation. But there is the other side where digital or discretionary is still a bit slower.
On the pricing, if you look at the Project Maximus, one of the pillars that Salil had explained in the earlier quarters is the value-based selling. And that track has done well. We are seeing encouraging results. One of the things that has helped move in this direction is the on-site inflation, right? After many years, you're seeing an increase in on-site inflation, and the clients are therefore more amenable to having a pricing discussion. You had a second question on that. Sorry.
Hiring.
Yeah. So as I said earlier, our hiring model has changed significantly in last few quarters or last few years. We are now on a more agile model of campus hiring. We do half or more than half the campus hiring at times from off campuses, right? Or fresher hiring off campus.